The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hey everybody, this is Jeff Gibby. We're just testing the setup real quick. We've got 5 minutes. Actually, if you look right here, we got 4 minutes and 53 seconds. We'll be starting here in just a minute. Steve is going to kick us off today. Steve does a great job. He's going to talk about candlesticks and his patterns, and I love them. So in any case, 4 minutes, 38 seconds. We'll go ahead and kick things off. Until then, I'm going to play a little video, and we'll see you in a minute. Thanks. All right, well, it looks like the video does not work when it goes to YouTube. So we'll just let you look at this countdown timer. We're going to start at about 1 minute, 23 seconds. We have a great lineup today. I'll just talk to you a little bit about what's going on today. We're starting, let's see. Actually, there's a couple things I'm going to talk about in my 1 minute before we're getting through. If you guys can hear me, let me know. It's great to hear you. It's good to know that that you guys can hear me. So if everybody can hear me okay, whether you're in GoToWebinar or YouTube, let me know. A couple things before we get started today. We've got about a minute. And I just came up to our website. There's a couple of things that are coming on. If I come onto the events tab, I'm going to go ahead and click on our seminars right here. We are coming to select cities. So if you're interested in kind of seeing MetaStock in person, we are doing our first road shows since the pandemic. So if you're in any of the following areas, you should come visit us. We've got LA coming up, Irvine, San Jose, Phoenix, Chicago, Detroit, New York, Washington, and Montreal. So some great events. We'd love to see you there. We're interested to see how it works out. We haven't really gone and done our roadshows since the pandemic, so we're kind of curious in terms of how things are going. In terms of today, though, we know how today is going to work out. It's going to be amazing. Anyway, let's kind of go through the lineup of who's. Whoa, it's time. I think that's the countdown timer telling me it's time. So let's go ahead and get started then. our first speaker today is Steve Bigalow. So let me go ahead and close this down. Let's go ahead and kind of read the legal disclaimer and get everything kicked off. So today's demonstration is designed to instruct you in using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. Hope you enjoyed that. I hope you've been enjoying the conference. I hope you were able to come yesterday and on a Monday. We've had a great, I was telling Steve earlier, I've been really happy with the way this conference is working. The speakers have done a really, really good job. I'm gonna go ahead and mute you, Steve, for a second. It's just been going really well. So I hope you're enjoying it. I hope you've learned some things or twos. Before we kick off today, though, I'm gonna say thank you to Stocks and Commodities for sponsoring the events. They've been sponsoring the Online Trader Summits for 11 years now, and that includes all the conference and all the big online events that we do. So we really appreciate their sponsorship. If you do a subscription to MetaStock, or if you spend some money today, you're going to get 5 months or 2 years for free from Stocks and Commodities, and that does include 17,000 trading articles. So very, very cool. The other person I'm going to thank is CMT Association. CMT is a very well respected reputation or organization that does designations and accreditation programs. If you are interested in trading for a living or managing money or working for a bank, or if you do work for a bank, CMT has a lot of really good statistics they're going to share with us tomorrow about how CMT after your name can really help you with your career. So they do a really, really good job. They've been great partners. Thank you to them as well. So with that being said, of course, we are MetaStock. Thank you for Vincerio for saying you could hear us. I appreciate that. I assume everybody can hear us in GoToWebinar. Let me know. We have over 100 people. If you can hear me, let me know, and I'll just feel a little bit better. And you want me to feel better. So in any case, we are MetaStock. We did have a snow day in Utah. There's a bunch of snow in the valley. It's hard to get to work. So we are going to be working. I am going to be working from my basement today. But we are MetaStock. We've been rated #1 30 years in a row. We're offering extended trials. Hello, Felton. Good to see you. Metastock.com/comp promo if you have questions. Thank you, Mari, on the audio. If you are interested in MetaStock, you want to get an extended trial, give us a call. 800-882-3040. Thank you, Pierre. Good to see you. All right, very cool. Our first guest is Steve Bigalow. Steve is great. We do a lot of work with Steve. We've had him on with us. I don't know how, even just this year, I think we've had you talk like 4 or 5 times now. Anyway.
Okay, let's see. Do I need to hit start broadcast? Okay.
No, it started. Everybody can hear us. Let me go ahead and make you the presenter. Steve's a good friend of mine. I love all of his patterns and his major patterns and the scans that we've written for him. So we love him. He's got a lot of good things to say. I'm going to turn off these beeps for us. Steve, it should be asking you if you want to share your screen.
Share my screen, all right.
Mary, yes. So we are broadcasting this right now to YouTube. If you happen to be watching on YouTube, hit the like and subscribe. We will send a replay to everybody for the whole week. It's free of charge, it's complimentary, and you will get the replay. I'll actually paste the link in here for you in just a second. So in any case, Jacob, thank you for coming. Thank you for the compliment. Steve, I'm out of your way. It's your turn.
Okay, well, thank you for the invite. Welcome everybody. As we go through this, if you have questions, feel free to ask anytime. I'll try to answer them as quick as possible. If we get bogged up on something, we'll go on. But and my first question to everybody is, how many people have seen my presentations before? Obviously a Y for yes and N for no. That'll give me an idea of how much detail I need to explain on each chart. just and making sure my question and answer box works correctly. Okay. All right, there's our more. Okay, so good number of, all right. Okay, so my name is Steve Bigalow. I, by accident, came across candlesticks well over 30 years ago. I used to be a stockbroker, got out of the business because I realized that most brokerage firms had no more idea about what made prices go up or down. Since then, I've written 3 books on candlestick analysis. They're very easy to read because I'm the type of investor that says, just tell me how it works. Don't tell me all the fluffy stuff around around the edges. So what I discovered is out of the candlestick universe, there's 50 or 60 signals. However, there's only 12 that you need to know. And these 12 right here are the ones that are going to produce 99.9% of all your reversals. And there's one basic analysis that you get from candlesticks, that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that is the most powerful aspect of identifying what's going on in prices. So there's some very simple logic to candlestick analysis. If you see a candlestick buy signal, this is a doji, a day of indecision. In the overbought condition, I use stochastics of 12.33, slow. So the Japanese rice trader's logic is, if you see a candlestick sell signal in the overbought condition, more than likely you're going to see a reversal. If you see candlestick buy signals in the oversold condition, the probabilities are pretty strong that you're going to see candlestick a bullish reversal. Now, before I start, we've got the 50-day moving average on this chart, but here is the most important one. This is called the T line. The T line is the 8 exponential moving average. It has Fibonacci characteristics. So this is the most important screen as far as dramatically improving your ability to get into a position and then stay in a position. The logic is, if a candlestick signal is the graphic depiction of everybody buying and selling during a specific time frame, or your illustration of investor sentiment, and the T line acts like a natural support and resistance level of human nature, when you combine those two, you have a very powerful trend indicator. Now, here, if you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. Now, why is that important? Because if you were like me, what is our nature, human nature? That if we've got a profit in a trade, what's our biggest fear? Boy, I would look stupid if I let this profit turn into a loss. So we take a profit just because we have a profit. Well, the T line eliminates that, not fallacy, but that bad trading. Even though we might see some candlestick sell signals, we don't see a candlestick sell signal and a close until up here. This keeps you in good trades. That old sage advice, cut your losses short and let your profits run, where most people don't tell you how you cut your losses short and let your profits run. Candlestick analysis makes that very clear. Now, this is a good chart to show that on my charts, I've got the 200 and the 50 simple day moving average. The reason for that is every major money manager around the world uses those moving averages to make their decisions about their portfolio. Excuse me. What it does for us is it allows us to see exactly what those decisions are that everybody else is making. So anytime we see this bullish trend, we can stay long. And so if you've got a portfolio of trades on, it only takes a matter of 3 seconds each day to say, well, no sell signal, no sell signal, no sell signal. You just stay long. Now, the other moving averages is the T line, which is the most important one. And then I've also got the 34 on here. Now, the nice thing about the candlestick charts is the more simple it is, the more relevance you're going to place on the signals themselves. So very simple logic. If you see a candlestick buy signal in the oversold area and a close above the T line, you can stay long until you see a sell signal and a close back below the T line. Oh, I've goofed up my box here for questions. All right. Hopefully it will continue to work. Okay. Oh, Mike. Yeah, somebody will help you with that. All right. So there is a very strong truism, which is you can stay long until you see a sell signal and a close below the T line, or if you see a buy signal and a close above the T line, if you were short, you definitely close your short position. If you're thinking of going long, that becomes, and I use this term right here, extremely high probability that you're now in an uptrend. There we go. All right. Hold on, I'm trying to stretch out the, there I go. Question and answer box. Okay. All right, the same is true on the downside. If you see candlestick sell signals, there's your shooting star, there's your evening star signal. Now, these are all part of the 12 major signals that show a definite change of investor sentiment. You can stay short until you see that candlestick buy signal and a close back up above the T line. So the same truism. If you're in an uptrend and you see a close back below the T line, take profits. That tells you you've got an extremely high probability you're now in a downtrend. So we're seeing that in NVIDIA. NVIDIA's had a nice strong run until the last couple of days. We had sell signals and a close below the T line. That's when to take profits. So very simple logic. If you see a sell signal, morning or an evening star signal, and a close below the T line, you can stay short as long as it stays below the T line. So again, I always reiterate, this is not rocket science. This is the most proven and researched technique in the world. Candlestick analysis has been around for 400 years. The Japanese rice traders, I always tell people that Japanese rice traders did not become rich from candlestick analysis. They became legendarily rich. They were the financial powerhouses, or powerhouse in Japan for centuries. So through the years, Jeff, I can't remember how many years now, we have set up all the high probability formulas in MetaStock, which Jeff will probably go through at the end. So the first one is your best friend signal. Are you a professor? No. No, I've been teaching candlestick analysis on our website, candlestickforum.com, for ever since 2001. So there's no there's nothing that you have to learn in candlestick analysis all other than memorizing recognizing the signals and patterns. So all I do is teach people how to use those successfully. So there's your best friend signal, a doji followed by a gap up. That gives you high probability trades. Now, remember, if this is a day of indecision, the doji tells you it's open and closed right at the same level, and they gap it up the next day, especially out of the oversold area, that's giving you a lot of information. This is what starts these strong price moves, that best friend signal. And what does this kind of alleviate? Most people's fear that they see a big price move and they say, oh, I'm going to wait for it to pull back so I can get it at a better price. That's a very bad trading strategy, because if they're pulling back so you can get a better price, that means the bullish strength isn't there. What does being a professor do? Okay. The T-line is the 8 exponential moving average. It just acts like a natural support and resistance level of human nature. Now, there are patterns. First of all, there are the signals. The best friend signal is a very powerful change of investor sentiment. And then there's your J hook pattern. It looks like a J hook. Tells us that this wave right here is usually going to be the same magnitude as this wave right here. So these are all aspects of human nature that the Japanese rice traders have identified for us through the years of how price movements usually work. Oversold is when your stochastics are below 20. Overbought is usually when your stochastics are above 80. Is the best friend a great long signal? Could the same signal, now I've got to, could the same signal on the short side be called worst enemy?
It's called doji at the top.
Yeah, it's called your bearish best friend. And I've got those on here because that's what's exactly what our trades are right now to the downside. So this is the type of move that we look for. Look how they gapped it up, not only off the T line, but through the 50. And if they've come up through the 50, where do you think your next target is likely to be? Up here at the 200. That's where you start taking profits. It works on all time frames. Candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame. It works just as well on the 1 minute chart as it does the monthly chart. I used to trade the E-minis off the 1 minute, 3 minute, 10 minute combination. During the day, if I'm got a little bit of time, I'll trade soybeans, cattle, the dollar, gold off the 10 minute chart. So each time frame is based upon what your time frame of trading is. So if you're a day trader, you might use a 5 minute, 10 minute, 15 minute combination. If you're a swing trader, like most of my trades, I use the daily chart. And then if there's one caveat to the T line. The caveat is the further away you move from the T line, the higher the probability it's going to come back and test it. Is the best friend a great, yeah, short side, okay. Daily only, weekly, monthly prices, yes. If you're a long-term investor, you might use a combination of a daily, weekly, and monthly. If you're a day trader, again, you might use a 1 minute, 5 minute, 10 minute combination. Stochastics are 12.33 slow. And that's nothing more than one day, probably 30 some odd years ago, I was sitting in my office thinking, well, the logic is, if this is the bottom, where do the stochastics were? Prior to that time, they were using 14.55, but that was a little bit slow for me. So I just sat there one night and said, all right, let's try 14.32, 13.54, finally came to 12.33. It just seems to work fairly well. Do you use anything to confirm a trade? Yes. If this is my signal, and I did the scans that night and found it, what do I want to see the next day? I want to see that they're trading positive, either flat and starting to trade positive. I don't want to see it opening down here. That tells me the bulls aren't there. So everything that is applied to a candlestick chart is just simple logic. And once you hear it, you say, yeah, that makes sense. And that's what got me into candlestick analysis, is Somebody threw it on my desk years ago and said, "You were a stockbroker. What do you think of candlesticks?" And I figured anything as sophisticated sounding as candlesticks wasn't worth the time and effort. But when I picked it up, the first thing that hit me in the side of the head was, boy, this makes sense. And the more I studied it, the more sense it made, because everything built into a candlestick chart, whether it's a 1 minute, 10 minute, 30 minute, daily, weekly, or monthly, it's all just common sense. Why 8 and why? Because it works, Neil. There's one major aspect of candlestick charts. First of all, we know the signals work, or we wouldn't be looking at them 400 years later. They weren't kept secret. They aren't proprietary. This is just information the Japanese race traders discovered and used for hundreds of years. All we have to do is learn how to use them correctly. If you want to put something else on to see if it works better, go right ahead. But the most compelling aspect of candlestick charts is it tells you exactly what's happening in human nature. So 2+2 analysis is, if I see a doji in the overbought condition failing right smack dab at the 50-day moving average, a level that everybody else is watching, what can I assume if it opens lower the next day? The doji rule says if you're in the overbought area and you see a doji, the price will usually move in the direction of how they open after a doji. So when it opened lower, what did that tell us about the 50-day moving average? They weren't going through. The downtrend was still in progress. Stochastics are 12, 3, 3, slow stochastics. What are the, one is %D, one is %K, but that's not relevant. All we're trying to do is see where is a signal occurring. Now, obviously, a candlestick buy signal in the overbought condition doesn't mean anything, or a candlestick sell signal in the oversold area doesn't mean anything. What we're looking for is the candlestick buy signal in the oversold area being confirmed. Neil, that is the most beneficial aspect to candlesticks. Is it's so simple that yeah, it's just logical. Should we enter on the third candle opening? All depends on what's going on, Ganesh. Yes, well, let's see if I can find a better chart. So you can see where the buy signals were occurring down here. Now, just because you're in the overbought area doesn't necessarily mean you get ready to take profits. You now use the other parameters. Notice where it was time to start taking profits if you were long on Shopify. The Japanese rice traders use very simple logic. Where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. Anytime you start seeing a gap up in the overbought condition, you get ready to start taking profits. Who was asking that? Why? Yeah, put on anything you want. I use the 34 because it works relatively well. If you want to put the 20 on, put the 20 on. So there's your bearish best friend on XP just here in the last few days. Probably going to give you some more downside. OV, same thing. There's your bearish best friend. And when it gapped down, remember, a doji followed by a gap down says there's going to be a lot of downward pressure. In this case, you can see there was kind of a support level. Well, shot through that support level, that gave us the indication that they're not supporting here anymore. That force is still fairly strong. Is it that we look for signal on a daily and then use the lower time frame trading? You can do that also. I use that for trading hogs or cattle or soybeans. I see which direction the daily chart is taking me, and then I go to the 10-minute chart to see if it's confirming. So this is what you call observe the obvious. look where they did a bearish kicker signal. The kicker signal is one of your strongest reversal signals. Notice how they opened here, closed here. The next day they gapped down and traded in the opposite direction. That's your strongest candlestick reversal signal. And what did it tell you about this level? Obviously at this level, they started taking profits. And what's the force of this signal tell you? They're probably heading down here to the next support level. Can you scan for dojis? Yes. You can scan for any signal you want to. The formulas have already been put into MetaStock. Jeff's going to show people how you can use that. So the logic, Nicole, is if you see a direction and you're day trading and you see it open positive, at least you know you're probably day trading that whatever trading entity in that direction. So there are patterns that we can look for. The J hook is one of the candlestick patterns, and there's three of them: the J hook plus, and the bobble breakout. A J hook is where you have a strong price move, it pulls back, and then does a J hook. Now we have the benefit of confirming that J hook because of the T line. That if it pulls back to the T line area, and what we know about the J hook pattern is wave 1 and wave 3 are usually the same. Now, if you're trading options and you miss this move, but you see this move, you can pretty much calculate what this move might be. Now you decide whether you want to put on a spread or buying the calls here, and as it moves up, you're doing spreads. So it gives you a lot more flexibility as far as your trading strategy based upon knowing wave 1, wave 2, wave 3 of a J hook. So if you see something like this, notice where they started selling. Notice how you moved a little bit away from the T line, pulls back, and notice what happened right here at the T line. They couldn't really close their boat below the T line. They started seeing buy signals. A strong buy signal combination is what we call the doji sandwich: a bullish candle, a doji, and remember the doji rule. The doji rule says it's going to move in the direction of how they open after a doji. Well, if they open this positive, we can pretty much calculate that that candle right there will be the same magnitude as that candle right there with the doji sandwiched in between. And we know what the result of a doji sandwich is: more upside. So if there's more upside, we can be buying right here with the prospect that if it goes through this level, now we have wave 1, wave 2, wave 3 in progress. So again, I go back to that simple statement that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. All we're doing is graphically seeing what investor sentiment is doing. It looks like scallops chart pattern. Scallops chart pattern. Scallops. Oh, Steve, you got me there. So anytime you see this, look at wave 1 started with your best friend signal. Profit taking, pullback. Now look what started wave 3, a kicker signal. And what do we know about a kicker signal? It's a strong reversal signal. So we could be buying right in here with the expectation that if wave 1 and wave 3 are about the same, where would we start looking for profit taking? Right up here at the 200 that everybody else is watching. So these are patterns that are constantly in progress. And that's the nice thing about candlestick scanning. There's 9,500 trading entities out there. On any given day, using the simple scanning techniques, within 10 to 20 minutes, you're going to find the best trade setups for the next day, whether it's bullish or bearish. So your J hook is usually a J hook type pattern that uses the T line as a support level. Now, the thing with that is nobody has the T-line on their chart. So this is the J-hook pattern that we can identify. What is a kicker signal? I'll find another one on here. Kickers, I'll find it. So now we have a J-hook plus. A J-hook plus is even more compelling. It came up, wave one. Look where wave two pulled back to. Right smack dab to the 50, a level that everybody has on their charts. And does a left-right combo. A left-right combo is a doji followed by a bullish engulfing signal, a very high probability reversal. Then if you see a candlestick signal followed by a gap up, not only has told you there was a reversal, they came back in with great enthusiasm. So now what can we be doing right here? We can be buying because we know wave one and wave three are going to be the same. This is what we call observe the obvious. Look where your wave one came up, and what happens when they come up through a resistance level? They'll come back and test it to see if it's going to act as support. Well, there's our morning star signal. Smack dab off the 50, right off the T-line. We can start buying here because what can we calculate? Wave one, wave three is probably going to take you right up here to this level. Now the bobble breakout is where they come up to a resistance level, then they pull back. In this case, you can see how they couldn't bring it back below the T-line, but you can see what the 50 was doing before. It was acting like a resistance level. However, we see this little J-hook pattern. If it comes up through, we can be buying right here because we know that that's a bobble breakout. It came up and hit the resistance level, pulled back. So if you pulled the 50 off this chart, you essentially have a J-hook pattern. The reason it's more compelling is we can be buying right here, knowing that everybody else is watching to see whether it's going to get through the 50 or not. And when they see it's coming up through the 50, they start buying and adding to our price move. So a bobble breakout is merely fail at a resistance level, does the J-hook pattern. We know we could be buying aggressively right here because wave one and wave three is going to be about the same. Same scenario up here. Kind of pulled back, and there's your bullish engulfing signal, right smack dab off the 200. A positive trade or positive open the next day tells us we can be buying immediately because now we're again wave one, wave two, wave three. Let me go back to that one. This is not your true kicker signal. If Nicole, if this had been a big candle, a big dark candle, a kicker signal is the next day they gap it up and start trading in the opposite direction. They gap up at or above the previous day's open and go in the opposite direction. I think I've got it on here somewhere. So this is what we call the classic pattern. The fry pan bottom is one of your major patterns. The Japanese rice traders call it a fry pan bottom because it looks like a fry pan bottom. And the expectation is when it comes out this other side, it's going to give you a very strong price move. So buying right here, where it's breaking out of that little fry pan bottom, says now you can expect a big price move. Then look at the left-right combo, pulls back right smack dab to the T-line and starts back up. It failed right here at the 200. Now what can we be doing? We can be buying aggressively because we know wave one, wave two, wave three. What is the prerequisite for a J-hook pattern? A strong price move. What is the expectation of a fry pan bottom? A strong price move. Now you can combine those two in what we call the classic pattern because that's how human nature usually works. Wave one, wave two, going into wave three. So again, this is not rocket science. This is just learning what the Japanese rice traders have presented over hundreds of years of how human nature works time after time. So we're looking for those high probability trade confirmation setups. The kicker signal. Does the previous bar negate? Then we get the kicker signal. The previous bar negate. Then we get a positive bullish candle. Does the previous bar, Franklin, let's see, do I need to expand that question? Am I not? Does the previous bar negate? Then we get a positive. I don't understand what that means. I'll show you what a kicker signal. So if that's our fry pan bottom, we can identify by scanning what the fry pan bottom looks like or when it's going to break out. Now you can see that the fry pan bottom, you couldn't trade this one way or the other if you wanted to. But right here, you've got a whole completely different element. Look at your best friend type gap up. Not only a best friend type gap up telling you this rounding bottom is completed, but they gapped it up through a level that everybody else is watching. That's what starts your strong price move with great enthusiasm. I'll find a kicker signal here. Yes, so a kicker signal is a bearish, and it can work on the positive side or a bearish side also. You could be in an uptrend with a candlestick buy signal or a bullish candle, and the next day they gap it down below the previous day's open and go the opposite direction. That's a bearish kicker signal. We have a few of those. So the opposite of a fry pan bottom is what we call the dumpling top. Where does the what does this kind of indicate? That the selling or the sentiment is turning bearish, turning bearish, turning bearish, and then when they gap it down, that's when they start just cratering. That's human nature. Just get me out of this trade, and bam, 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 they start taking it down. It appears the J-hook pattern includes, yeah, it's a 1, 2, 3 pattern setup. We just can see it much more visually, giving us much more clarity. Which, again, you're seeing a lot of trading techniques on these sessions over the last few days. If you find somebody's trading technique that works well, if you overlay candlesticks onto your charts and analyze what they're recommending or what their process is, it's going to make you see everything much more clearly. Now, I do it the other way. I know that candlestick analysis, after 40 some odd years of investing, is probably the highest probability of showing you what's going on in price direction. So I use the signals first, and then I apply everything else to the chart to see where everybody else is buying and selling. So if I see a downtrend, I might throw Fibonacci numbers on to see where there might be a reversal, or Bollinger Bands, anything that you can use to see what is making that price movement reverse at specific levels. So candlestick signals are basically proven results. Again, 400 years of analysis. There's your kicker signal. Bearish candle, bearish candle. Now remember, if I didn't explain this in the beginning, a candle that opens here and closes here is going to create a dark candle. A candle that opens here and closes above where it opens creates a bullish candle. Well, the kicker signal is when they open at or above this candle open and then go the opposite direction. It basically tells you the investor sentiment has been kicked in the opposite direction. So this is on Moderna. Had a kicker signal. And notice what happened all the way up. Notice what happened right here. It gapped down. That was a bad hair day. If you were long and you were waiting to see how they closed it, well, the fact that they closed it back up above the T line gave you that high probability statistical result that as long as they don't close below the T line, you're still in an uptrend. So now this turns into a J-hook pattern. Wave 1, wave 2, wave 3. When wave 3 gets to fruition, now you're a little bit more, I want to say, cognizant of profit taking. Again, look at what was happening right here. You were in the overbought area. Look how far away you are from the T-line. You're seeing a doji. This is starting to tell you that it's time to take profits, because where do you think it's going to go back to? They'll probably come back to test the T-line. If you see a big breakout, where do you buy? You just heard that HPCO just announced something, and this is the advantage of having the scans and a chat room. Our chat room usually has about 150, 170 people in it every day. And somebody might say, hey, look at HPCO. It's gapping up. I say, well, do I want to be buying here? Do I want to be buying here? I don't know. So what's the logical thing to do? You might be buying here. You wouldn't be buying here. Maybe you're taking profits. But there's another buy signal. You might be buying here. So it helps you day trade, swing trade, whatever trading strategy you want to use. The candlestick signals work just as well on a 10-minute chart as a 1-minute chart as a daily chart. Could this work in intraday trading based on? Yes, exactly, Franklin. If this was a soybean trade and I saw they gapped it up and I thought it was an uptrend, I'm buying right in here. Well, I'm taking profits right here because look how far away we are from the 10-minute T-line. I'm not buying or not buying. I'm not, whoop, now they're coming back in again. Now I'm buying here. Yes, our chat room is open right now. I usually come in 2 or 3 times a day. We go, and usually I spend about an hour during the lunchtime when everything slows down. We go through charts. So we're not a, what do I want to say? We're not trying to show people or give people trading ideas. We're teaching people to recognize what those trading ideas are. So we teach people how to scan. Again, using MetaStock as one of your best softwares for scanning these trades. And then you also have people in the chat room that say, hey, look at XYZ, it's moving. And then you can immediately see what type of patterns are setting up. It would work better on a 1-minute, 5-minute. It depends on how fast you want to trade. If you want to be trading 4 or 5 times a day, maybe you use a 1-minute, 5-minute, 10-minute combination. If you want to be trading slower, maybe you're using a 5-minute, 10-minute, 30-minute combination. Can we also this on YouTube? Can we also this, Maria? I guess so. All right. So if I was trading soybeans, cattle, the dollar, I'm trading off of this chart. And you can see how easy it is to recognize when it's time to buy, when it's time to sell. Again, based upon where are you with stochastics. Well, I'm in the oversold area, and now I'm seeing a series of dojis, which is a reversal signal. And this is a double doji setup and positive trading. That tells me up, and there's my doji sandwich. That tells me I should be trading long. And how long do I hold this trade? Well, until I see a sell signal and a close back below the T-line. If you see a big move like this, how do you know to take profits up here versus giving it all back down here? Same scenario. Your 10-minute chart says, I could be buying here, I could be buying here, I could be, what's happening when you're up here? Look how far away you are from the T-line. Where would I have set my stop? Well, if it opened here and started trading positive, we do training sessions that say, all right, where's the logical place to put a stop loss? Probably right there. Worst case scenario, right there. Or if I start seeing that we're too far away from the T-line, why would we be using the 10-minute chart to tell us to start taking profits? Because the daily chart was telling us, look how far away we are from the T-line. What do we know about that? We know that it's probably going to come back and test the T-line. So I can use my 10-minute chart, and then I can even flip down to my 5-minute chart and find when it was time to take profits. So here's what's happening right now. There's your bearish kicker signal. Opened here, closed here. A few days ago, it gapped down and went the opposite direction. We know immediately what that's telling us. There's a very strong selling force that's more than likely heading in further down. If we see a trade like this, and this is where, again, a chat room where everybody's looking for the same signals and patterns, everybody's saying, oh, I see it's moving, it's moving. Well, where would you be buying this one? You flip to your 10-minute chart. You could be buying here, buying here, buying here. What happened up here? There's your evening star signal on your 10-minute chart. I've learned, we just did a day trading training, that if you're in a trade, if it was wheat or live cattle, and you see a move like this on your 10-minute chart, you take profits the first time you see a sell signal. Because what does this indicate? It indicates where you've reached an equilibrium between the bulls and the bears. I've found it's a high probability you take profits here. Now you just wait to see if another pattern is setting up. So if you're buying back here because you can see your fry pan bottom, where do you set your stop? Or if you're day trading, it shouldn't come back down through this level because that's a bearish signal in the overbought area. You come back out of that trade. Again, this is not rocket science. Prices move the same way time after time because of human nature. So here's what we've seen in the Dow just recently. We can watch to see what everybody else is watching. The wedge formation or the pennant formation, whatever you want to call it. As soon as it got back up to this resistance level, look what we had. We had a bearish harami. That means the buying had stopped. So we started taking profits and going short. Where did we think our first support level was going to be? Right here. Well, look what happened yesterday. Not only did they not support at the 50, they didn't even support at the bottom of this wedge formation. Oops, there's a commercial on. I'm trying to see where the, oops, it looks like the market is trading lower. So what does this assume? This pretty much assumes that everybody that was watching this wedge, if it's broken down through the bottom of this wedge, what's that telling us? Investor sentiment has gone very negative. We're probably in a downtrend. And you don't have to use just one indicator. It takes about 10 seconds to look at the Dow, the NASDAQ, and the S&P 500. We can see what was happening right here. This is kind of your bearish flutter kicker signal. If you took out these little flutters, you basically have a strong kicker signal. That's indicating there's a lot of weakness in this market. Once again, where was it time to take profits? Where do most people buy? They buy exuberantly at the top. This is a very strong sell signal. Notice how the next day they opened and closed below the previous day's open. After gapping up in the overbought area that far away from the T line, you started taking profits. Because if you're in an uptrend, simple logic says they shouldn't be gapping down and closing below the previous day's open. If you're trading the 1-minute chart, remember the 1-minute chart I don't trade off of that. If I'm looking at my 5-minute chart and saying, well, is it starting to roll over? Then I might flip down to the 1-minute chart to see if they're still selling. But I wouldn't use the 1-minute chart as my trader because that's going to have practically the bid and ask bobble up and down. Does a shorter time frames lend to whiplash? Yes, that's why you pick out what time frame to use. So you can see how this bobbled up and down. Well, if this was my 10-minute chart, I'd say, all right, nothing severe yet. Let's say this was a lean hogs chart, and nothing severe yet. They're not closing below the T line. whereas my 5-minute chart may have bobbled up and down above and below the T line. So you pick out the chart. If you're trading the dollar, which trades a little bit slower, maybe you're using the 15-minute chart as your bellwether. So the fact that notice what they did right here. You were back in an uptrend and they gapped it down again. They opened it at the previous day's open and closed it lower. Well, just that fact alone tells us they're not in an uptrend. They're gapping it down. We should be now looking for selling, which we did. Started taking profits. And the same scenario here on the S&P 500. Traded up, gapped down, stayed below the T line. What was the next likely target? I think this was yesterday. And it looks like, oops, the Dow was up 100 points here on the open. Now it's only up 7 points. So what we do is, there's your kicker signal on Google. What did that tell us about our uptrend? It wasn't uptrending anymore. And not only did they do a kicker signal to the downside, failing at the 200 to close below the T line. Now you can see how they bounced it up off the 50, but they failed to get up above the T line. I'd look for more downside because of wave 1, wave 2, which we can see very clearly because of the T line. Shopify, after it gapped down, still trading lower. This was yesterday's close. If this doesn't hold up here at the 50 today, what do you think the next likely target's going to be? Down here at the 200. Not because we think it's going to the 200, it's because everybody else in the world is saying, oh, didn't hold the 50, it's probably going to the 200. What time frame do you use? If I'm swing trading, I'm using the daily chart. If I'm day trading, I'm using the 10-minute as my bellwether. If I'm getting ready to buy and the 10-minute looks like it's setting up, I'll flip to the 5-minute to see if it's confirming. What is the green line close to the price? That is the, can we see it on here? That is the 3T line. That's a 3 exponential moving average, which becomes much more effective the further away you move from the T line. So look what happened in Netscape. There was your bearish flutter kicker signal. What's that imply? We're coming down, back down to the, again, how long did you hold this? As long as you didn't see a sell signal and a close below the T line. If you were long, that's where you closed it out. That's where you're going short. I don't know what it's doing so far today. Ring was another one. There's a bearish kicker signal. Remember, that usually your strongest reversal signal, usually going to be followed by a lot more downside. So the difference between a lot of technical indications are that candlestick signals are what is the sentiment of what investors are actually doing. Their actual buy and sell decisions, not their prognosis, not their expectations. It's their actual decisions. And again, this is the most proven of all investor techniques because it's been around for 400 years. There's nothing secret about it. We could never promote like all those promotions you used to get that said, oh, we found a new secret of successful investing. There is no secret. It's out there. All we have to do is learn how to use it correctly. And that's where I guess Jeff will kind of illustrate what those power pattern setups that we can set up for scanning. So that's about all I got. I do use this for trading options. When do you use your scan to get the kicker signal? Every day. Once you set up your scans, all you have to do is refresh it every day, and it will show you which signals are showing up in whatever scan you're looking for. You can scan for the kicker signal. You can scan for the best friend. You can scan for dojis in the oversold area. You can set up the scans. They're already set up pretty much on the MetaStock add-ons. So anyways, here is another truism that before candlesticks came along, I was the worst investor in the world. I'd been a stockbroker for 8 years and got out of the business. And when candlesticks came along, again, the thing that would whack you in the side of the head is this makes sense. So I now pull money out of the markets consistently because of one simple factor, that human nature works the same way time after time. So anyways, I was supposed to put on here that yeah, we have a 2-week free trial at our website, but I forgot to put that slide on.
You know what the link is? I can send it to everybody.
Okay, yeah, I'll send it to you. And I tell people, I don't want to cut it into your time, Jeff, but
You're fine. We're okay.
I tell people that we use what we call the horseradish marketing. And horseradish marketing is how H.J. Heinz, where I grew up here in Pittsburgh, I knew it was a big company, but H.J. Heinz at 12 years old had a very interesting marketing technique. His mother made a very high quality horseradish, but instead of putting it in green bottles, which is the way most horseradish was sold at that time, this was back in the 1900 or so, he put it in a clear bottle so everybody could see the quality. And then when he took it around to grocers, he would let them taste it to taste the quality. And so that's why we call this our horseradish marketing, is a 2-week free trial. There's nothing hidden or nothing difficult about candlestick analysis. The people that see the logic behind it now can apply it because the probabilities of being in a correct trade is extremely high. You provide training classes for beginners? Yes. Yeah, and I always tell people, if you're just learning how to use or invest, you should start with candlestick analysis because it's all common sense. So, all right, that's Jeff. I guess you want to show them?
Yeah, for sure.
All
Thank
right.
you, Salman. Lots of questions. One real quick question I'm going to ask for GD and YouTube. He wants to know if the 2-week trial requires a credit card and when does it start?
No.
So it starts when you sign up, but it doesn't require a credit card.
No, you get 2 weeks, and then my technician, after 2 weeks, will send you an email, said, would you like to continue? If not, we don't have a high pressure marketing program. Our marketing is that if after 2 weeks you don't see the logic in how candlestick signals work, there's nothing at that point that's going to convince you that it should be something you should be doing. Everybody in our website, in the chat room, are people that came, saw how candlesticks work, and joined. We don't say, oh, you need to join, here's blah blah blah. People are going to decide to join because they see the logic of it. So, all right.
Thank you very much, Steve. Franklin, we don't. Steve is going to get me the sign up link, so drop me an email, jeffreygibby@metastock.com, and I'll send it to you once I get it. You can also visit the site at candlestickforum.com. So, thank you very much, Steve.
Thank you.
All right, very cool. Let me go ahead and do this. I do want to talk a little bit about kind of the patterns and kind of how they work and how they show on the chart and how easy it is to scan. That's a question we get all the time. How can you do scanning for things? And so let me just kind of talk really quickly about that. And to do that, I'm going to go ahead and make myself the presenter. So here we go. Here is a list of all the patterns that are available in the MetaStock add-on. You can see it's got the doji at the top, the doji best friend. These are all the multiple day patterns that are part of the exploration and that kind of stuff. So Bob says the chat room is great and profitable. Good. We've actually I go into the chat room when I can, and it is a good experience. So in addition to that, we'll identify all of these single patterns. You can kind of see a list of those as well. Very quickly, I'm just going to show you what those look on a chart. I opened up a chart of Tesla to see kind of how it was doing today. Let me just pull it up here, and you can kind of see all of those signals in action. So none of these repaint. A few days ago, we had a bear kicker that came in. There's been a bit of a fade since there. Here you had your doji at the top. You had a doji, a hanging man, a dark cloud, the T line. All of the here you had a nice left-right bullish combo right on the bottom there. So all of those patterns are actually coded into the software. They're available. You can see them. And of course, they do have expert commentary as well. So if I come in here and I click on the view expert commentary, I can go back. I can look at this exact bear kicker signal. It'll give me an explanation, tell me what it does. It does a really, really good job. And of course, and you can see I'm going fast, but I don't really need to get it into kind of like the nitty gritty of how to work things. If I want to run a scan, it's super easy too. I just come into the Power Console. What I'm going to do is I'm going to come to the Explorer, which is what we call our scanner. I can come in here and let me do CPS. Here are the patterns we scan for. So Doji Dynamite will look for that doji at the top, the doji best friend. You can see the list of them there. They're all broken up into those different categories. So I just select the actual scan that I want to run. I do have a pre-filtered CPS list here. I'm going to skip that one for now. But I can just come in here and say, well, I just want to look at, let's say, the Dow Jones, the NASDAQ 100, and S&P. So very, very quickly, I just identified the universe. I'm going to go ahead and start that. And it's going to go through those basically 500 stocks that I told it to and tell me every one that has, like that doji at the best friend, the doji at the top. All of those doji patterns are going to be identified for me. And that's what I love about scanning is you look right here, it's rejecting 99% of those stocks. It's just going to list the ones. And if I'm looking for like a doji best friend today, something that had a doji and gapped up today, this is going to give me a complete list. And because it's implemented in MetaStock, it is going to be, you're going to be able to, if you're joining us from India, we get a lot of YouTube views from India, Australia, London, wherever it might be. You can apply this with any of the data that we offer. We offer data for 90% of the global market cap. So again, here's the patterns that are identified. This has been one of our most popular add-ons. Here's the single bar patterns, and they show up on the chart. They're identified for you, and then you do get the explanation. And of course, I love scanning, so you just scan for the patterns that you want to find. So there you go. All in all, the CPS is going to include 6 explorations, that expert advisor, the layout, and all of those patterns. There's 36 different patterns that are included there. It's a good add-on. Like we had it reviewed by twice. With the version 1, it was reviewed by Dennis Peterson of Stocks and Commodities magazine, and he gave it a very good review. With version 2, we had it reviewed by Dennis Peterson, and it was also given a very, very good review. I'm very, very proud of all the work we've done with this. It's been a hugely successful product. It's been well rated by expert reviewers with Stocks and Commodities magazine. It's also one of the it's an award-winning add-on for not just MetaStock, but any product that exists with stocks and commodities. So people really do like that. It's one of the scans I love to run. That doji best friend is such a nice pattern to run. So that $4.99 here at the conference today, you can get it for $3.99. We do back that with a money back guarantee. So you can try it out. If you're happy with it and if it helps you with what you're doing, you keep it. Very low risk reward ratio. There's also one other thing that I want to talk to you about, and that is a boot camp we did back on December, I think it was December 8th. I could be slightly wrong on the date, but we did, somebody asked about training earlier. We actually did a 6+ hour long class with Steve where he talks about the patterns, the trend analysis, his favorite candlestick setups, identifying like major market direction, where to put stops, confirming indicators that he likes to use, the stochastics. Those kind of stuff. He does it was a really, really good video. In total, it came with about 10 hours of recorded training. I did a bonus how-to video to how to use with MetaStock. Normally, if you just wanted to get that training, it would be $899. It's available for instant watching. You can watch it instantly off of our website. If you want to do that here at the conference, we'll do it for $499. But if you want to do both, if you want to get access to our award-winning MetaStock, the award-winning candle profit system, and all of that great training, $698. It looks like this is in the wrong place slightly. It needs to go up. Normally it'd be $1398. Here it'd be $698. We'll include CPS 2. We'll include the boot camp, the free month of MetaStock. If you don't have MetaStock, MetaStock's been rated #1 30 years in a row. We'll include the data, We'll include training on how to get up and running it. So give us a call, 800, I'm pointing at my screen, 800-882-3040, metastock.com/sales chat, or you can also do that online at metastock.com/candlestick forum D. Mary had a question about what you would do as, what the advice would be as a new trader. And I'm sure Steve would have had a good answer for this, but my advice to a new trader would be take it slow, start small. I don't ever think you should trade where it keeps you up at night. So that's my advice for you, Mary. I'm sure Steve might have a different one as well. John says, thanks, Professor Steve. The bullish hold is not the same as the breakout, Frenchie, but it is a pattern you can scan for. So real quickly, we're going to say thank you to Stocks and Commodities for sponsoring the event today. They've been sponsors for a number of years. We appreciate it, and thank you. They are great sponsors. The other thing is if you do that training, or you do the add-on, or you do a subscription with MetaStock, as long as you spend $300, they're going to give you 2 years of Stocks and Commodities for free. So that's really, really cool. So in any case, and of course we're MetaStock. Let's go ahead and get on to Marina. Looks like we're running just about 6 minutes late. Marina, welcome to the Traders Conference. It's good to see you. I don't want you to worry too much about that time. But I do want to welcome you here. We've had Marina in a number of times. She has a really good, I think it's a boot camp that she talks about, but it shows you always do a really good job, so we always bring you back. How are you?
Thanks. Hi, I'm doing great. How are you?
I'm doing great. I had to say, I'm very happy with the way that our conference is going. It's been great. Everybody's done a great job. We have a lot of really good questions. Yeah, it's been good. So I'm glad you could join us for it.
Yeah, I appreciate it. Thanks for having me again.
Yeah.
I can't believe it's already like the 4th time I'm here. I feel, and that's almost like a year ago, right?
Yeah.
Time just to fly.
Yeah, no, and it seems like the older you get, or the older I get, the faster it goes. So
I don't know. My 19-year-old son goes to me the other day. He's like, time is going really fast, right, Mama? And I'm like, yeah, I don't remember it going as fast when I was 19, but I think the world is just going faster.
I know we're almost in March already. It's crazy.
Yeah, it's crazy. Well, I'm happy to be here, and thanks so much for having me. And there's so many people. I'm so excited to present for all you guys.
Cool. Did you get it out to share your screen?
Yeah, let me get that organized for some reason. Okay, here we go. You should see my screen, right? Let me know.
I can see it, and I can see you, and I can hear you. I confirm everything is working well. So that's usually when I get out of the way.
No, I just lost everything. Hang on a second. Something I don't know what just happened.
No worries. I can still see everything.
Are you seeing my screen?
Mm-hmm. Yeah, we're seeing the PowerPoint, but the non-expanded view of the screen.
Okay, there we go. Okay, now I got it. Okay, I lost the whole questions thing and whatnot, but now I'm there. All right.
Cool. I think you should also answer Mary's question, because I think good advice is always a good idea. So when you have a chance, what is the most important advice you have as a new trader? I think it's always a good question to answer.
Are you seeing my actual screen? Because I'm only seeing myself.
I'm seeing, hi, I'm Marina, the trader.
Okay, perfect. Then it's okay. Okay, so now I can get to the questions.
So if you want to look at questions, usually just
I got the questions open.
All right, cool. Good.
All right. Well, hi everybody, and thanks so much for being here and for being with us. I mean, this is so great. I'm so happy to be here. So as Jeffrey was saying, we do have a question box. What does that mean? It means I want to hear all of your questions. The reason you guys are even here is because you probably do have some good questions, right? And a lot of times you might think, well, they're not the best questions. They're dumb questions. No question is a dumb question. And the more you ask, the more I'm able to help you guys, and the more other people are realizing, oh, wait, I have the same question. So please be as interactive as possible. All right, guys. So let's jump in This is me. I'm Marina, the trader chick. And today what I want to talk about is understanding day trading, investing, kind of busting myths. What I have found is that a lot of times, especially when it comes to the financial markets and day trading, we have so many misconceptions and myths that they really hold us back from going forward in the right way. So today my goal is to kind of get back to something that we overlook and that could really make all of the difference. I mean, all of the difference, and to bust through these limiting beliefs, right? Does the trader chick allow roosters to trade? Oh, I'm not really understanding that. I'm sure it was a joke, but I'm not understanding that question. So there you go. Okay, but before I get into the presentation, one really important thing for you guys to remember is that we are whole beings. People that are sitting in front of the charts, we are three-dimensional, four-dimensional, and remembering who we are is really important because what we bring to the charts is what we've gone through. Okay, so I am Marina, the trader chick, and interestingly enough, I just moved to Barcelona, Spain. I have now been an expat for over 20 years. Before this, literally 2 weeks ago, we moved to Spain. We've been in the works and trying to get our visas for over 5 months, and finally it's happened. We're here and it's amazing. But before that, I was an expat. I lived in Guatemala, in Antigua, and in Costa Rica. So both of my sons, my youngest was born in Guatemala, my oldest was born in Costa Rica. So I've been an expat for decades. And a lot of times when I bring up the fact that I'm an expat, a lot of people are really interested in how they too can become expats. And I would love to help you, but you guys could just email me directly, thetraderchick@gmail.com, and I'm happy to let you guys know all the steps I've taken to be an expat, because being an expat, I have to admit, has been the greatest thing that's ever happened to me and my family. But here I am Marina, the trader chick. I am now an expat in Barcelona. And before I became a trader, I was actually a fitness instructor. Why do I say that I was a fitness instructor? Why does that matter? Because so many people are under the misconception that you need to have a financial background or an economic background or math background to be successful in trading. Not at all. Not at all. And I was also a travel writer, because travel for my family and I is not a luxury. It's a necessity. And we travel 3 to 4 months out of the year all the time. I'm also trilingual. And the only real reason I bring up that I'm trilingual is mainly because when I was really struggling with my charts and reading the markets, when I took the approach of learning it as a new language, it changed everything for me. And the reason why I was able to do that is, one, I was a Soviet Union refugee. We moved to the United States when I was really young. So Russian was my first language, but because we moved to the US when I was pretty young, I learned English pretty much almost immediately. I became fluent, only because when you're a child, instead of learning a new language, you're kind of just still learning a language. So it's pretty, like, it was seamless for me to learn English. However, I learned Spanish in my late 20s. And when you learn another language in your later years, it's a whole process, right? Like, you have to commit, you have to practice, you have to be disciplined. It's this whole process. And when I realized, when I put that kind of discipline into learning and listening to the markets, I realized that the markets actually have their own language as well. And when I started to recognize that, everything changed for me. Because what happens is, a lot of times people are like, oh, I want to trade. And they have a little bit of money in the bank and they just put it into the market and then expect to be multi-millionaires, literally, right? I know it sounds absolutely ludicrous, but I cannot even tell you the amount of people that put their entire life savings into the market without even understanding what's going on. So, breaking it down into complete simplistic terminology, would you walk in to, I don't know, a lecture or a group of people that do not speak a word of your language? Let's say you are speaking English and they're Egyptian, right? And you walk in and you expect to fully understand everything they're saying and just be part of that conversation. But you can't because you've never learned even how to say hello in Egyptian, right? It's the same thing as putting your money into the market and not even understanding that you are going long, going short, or it's sideways. So I know that it sounds ludicrous about, oh, who would do that? But I would say 95% of the world who wants to trade and become millionaires overnight, they do that without learning the language. So breaking it down into simplistic terms, that is going to change everything for you. And I can guarantee that 100%. And the coolest thing about day trading is that you could do it from anywhere in the world. That is why I can live anywhere in the world, because today having internet is all you really need. And I have really narrowed it down. I use one chart and that's all. I've really, really simplified my trading to the point where it's fun. It's not stressful. Okay. Before the pandemic, I used to do a lot of in-person shows. I don't know if any of you guys have ever met me. I used to do a lot of Money Show, a lot of Traders Expo, and all these other shows. Today, after the pandemic, I realized how much better it is to be able to do it virtually because there's so many more people that could attend and learn, and I really love that as well. So before I continue, I actually created a free workshop for you guys, a worksheet for you guys, 100% free. Go here, makingofadaytrader.com, makingofadaytrader.com. Go here. You can get the entire presentation totally for free. I guarantee that you will be able to listen to it really and focus on it really easily. So please go here right now, makingofadaytrader.com. All right, guys, let's jump in. This is going to totally change everything for you. Okay, once you guys get like the understanding of all of this, you'll be able to trade and work with the financial market so much easier. First and foremost, what is day trading, right? And why is it not investing? So here's the thing, guys. Unlike investing, with day trading, you do not want to diversify. Okay, and if you get anything out of my presentation, it's at least this is probably the most important thing. You don't want to diversify. What does this mean? So let me break it down for you really easily. Imagine your child comes up to you and they're like, hey, mama, papa, I want to learn how to play a musical instrument. And you're like, okay, awesome. Which one? I want to learn how to play the piano, the guitar, the drums, and the flute. And you look at them and you're like, they're all so different. Why don't you learn one first and then move on to the next, right? Because here's the reality, guys. Financial markets, they're like instruments. They are all so different. Crypto doesn't work anything like equities. Futures doesn't work anything like FOREX. And even within equities, and I'm going to talk more about the different markets. But if you could focus on just the one, then you could master it. Start making real money and then move on to the others. A lot of people have this misconception that the more they want to trade and do, the more money they'll make. And that's actually literally the contrary. You will end up losing a lot more money, right? You cannot play all four instruments that are incredibly different from the beginning. You have to first learn each one. It's like Liberace. I don't care if you guys like him, hate him, judge him. The point is we could all completely agree he was a masterful pianist, right? I'm sure if he picked up the guitar or the violin, he'd probably be pretty amazing at it. But he knew what his forte was. He knew what his master was, right? And that was the piano. Guys, I get so many people that come to me and want to work with me, and they're like, oh, I want to learn how to trade equities, this and this and this. And I'm like, let's focus on just the one thing to start with. And once you start to really earn money in that particular instrument, then we can move on. 99.9% of the people stay with just that one for trading because it's making them money and they're happy, right? Because at the end of the day, it's about us being consistently profitable, okay? The other thing about investors is that they actually care about the companies that they are investing in. I care about Apple's iPhone 15, right? I'm in it for the long haul. If I'm day trading Apple, I don't care if Apple is going up or down because I'm only focusing on the technical analysis. Day traders don't care if the market is moving up or down because a day trader does not care about the iPhone 15 that's coming out in 8 months. They are literally looking at what is happening in front of them. That's a huge difference, okay? And I'll talk a little bit more about why that is so important. But first and foremost, let's bust some of these myths that are around this industry. First and foremost, day trading is gambling. Okay, so let me ask you this. If you decide that you want to fly a plane, are you going to jump into a plane the next day with your entire family and somehow take off and then expect to miraculously land beautifully? No, it's a suicide mission and everybody knows that. So when you decide you want to be a pilot, you also know, okay, I need to go to pilot school. I need to do simulation hours. I'm going to have an instructor that works with me before I take my family up into the air. It's a known thing. Yet for some reason, people were like, oh, I have some money in the bank. Let me go and put it into the market and become a millionaire, right? I mean, the stupidity behind that is so evident that people overlook it. And of course, when you do that, when you decide you want to be a pilot and the next day you're in a plane and you crash, of course you're going to say flying a plane is risky because there was no training behind it. The same thing for day trading. When you decide you want to be a day trader or you want to put your hard-earned money into the market, the smart thing to do is you learn a strategy, you train, you understand what you're doing. That takes the gamble and the risk of it out, right? Okay, the next massive misconception is that you need $25,000 to get started. Totally untrue. This came from and still does come from when you want to trade equities and you want to have a margin account. I am going to talk a lot more about margin accounts, but here's the reality, guys. Margin accounts is loan sharking. You do not need a margin account. It is not mandatory. It is not obligatory. Okay, guys, look here. You can start with $500. You can start with $1,000 regardless of the market, as long as you don't do a margin account. Totally untrue. You do not need to have $25,000 anymore. And like I said before, you do not need to have a math background or a financial background at all. That's the beauty of day trading. Anyone can do it as long as you put in the time to learn a strategy, to learn the technical analysis, to understand how to read the charts. That's what it's about. It's not about your financial background or economic background or math. That is a total misconception. And that is too stressful and chaotic. Well, if you're looking at this mess, who would not be stressed out? This is so unsustainable. And whenever people show this and say this is what they're doing, they're not going to last. They're going to burn out within a year, and they're certainly going to burn out all of their money. Why? Because a human is not programmed to look at all these charts. It is completely unsustainable, and it is wrong. Nobody does this, okay? This is purely for show. I have one chart, and I have one screen. That is it. I have completely cut out all of my stress and my chaos. And guess what? It's fun. It's sustainable. I've been doing it for 11 years. All right. What's all this buzzing going on? Let me tell you guys. There is this thing called the shiny object syndrome. Okay. And this is so prevalent in the day trading industry because people are constantly losing money because they're not willing to study. So they think if I'm going to buy the next indicator, the next algorithm, the next bot, the only people making money from that are the ones selling it. The only thing you need is a charting software. That's it. You need to have a powerful charting software. MetaStock charting softwares, they're incredible, okay? They have everything you need. When you get a really good, strong software, which everybody needs, it's a platform, right? They usually come with universal indicators. They usually come with a lot of stuff already there. So you don't have to be part of that shiny object syndrome, throwing your money away. You have to stop doing that. The other thing is the research and the news. Oh my goodness, I have so many equity people who are trading equities or pretend they are. And they wake up at 4 in the morning to listen to all the news about all this melodrama and the telenovelas of this stock and that stock. Then they spend all day trying to figure that out. Usually stocks don't work with the news because the news is always, the people who are talking on the news always have their own agendas. Then afterwards, they're sitting and reviewing. So basically, the whole joy of trading the 1 or 2 hours a day has now turned into this 12-hour ordeal, and usually stems from too much research and news. Stop it. None of it matters. None of it, because technical analysis is all you will ever need, and to the point where you will be only in front of your charts for an hour, hour and a half, and boom, you're on your way doing what you got to do and having fun with it, okay? Because that's what's most important of all. Now, I want to talk about being trigger happy, because I can guarantee every single person in this room or every single person that has gone trading has done this, and I am certainly one of them. What does this mean? For some reason, we have this misconception that when you're day trading, you need to be in and out of trades all the time. When I first began, in a 2-hour session, I would be in like 40 different trades. First of all, it's totally unsustainable with commissions. The commissions alone will eat you alive. It doesn't matter if you're even coming up with a little bit of a profit, the commissions will eat it alive. I want you guys to think of yourselves, or think of a big game hunter. I do not condone hunting. I'm not pro hunting, but it's just a perfect analogy. A big game hunter will go out, and will they be shooting at a prairie dog or a squirrel or a field mouse? No, they're going to sit. They're going to wait until the big game arrives. Pro traders, like real veteran traders, they maybe take 1 to 3 trades per day. That's it, because those trades are strategic, calculated, and it is truly, they understand what is happening in front of them. Trigger happiness only is in the amateurs and people that are just beginning, and it is not going to be, you're never going to make money in that particular way. Okay, I always say the most radical way to trade is conservatively. Being a conservative trader is the most sustainable way. Don't be aggressive. And small profits daily will bring you those big profits yearly, because it is consistent. It is reliable. It becomes a livelihood. And then I coined this term myself, FOMAT. Have you guys heard of FOMO, fear of missing out? So in trading, this is a real thing. Fear of missing a trade. Okay, this is a real thing, guys. What does that mean? It means that you're seeing something and all of a sudden you think that it's a trade, you missed it, so now you're chasing that trade. So now you go from the logical point of view to an emotional point of view. Now you're chasing that trade. The trade obviously turned on you. Once you're in, it went the wrong way. You've removed your stop. Now you're losing money. The next trade you're doing is a revenge trade, and it just goes downhill from there. I'm going to give you a big secret. Okay, write this one down, guys, because this is going to save you so much money. There is always another trade coming. Always another trade coming. If you feared that you missed a trade, who cares? There's going to be another 100 trades that are coming your way. Sit, wait it out, be logical. Don't get emotional. It will completely kill your accounts. All right. Let's talk about what to trade, because this is really important. Like I said, I get a lot of people that come to me and say, I want to learn to trade, and they are throwing out, I want to do futures, options, FOREX, blah, blah, blah. And then they end up losing before they start with me. And that's when we come down and I'm like, focus on one market, one instrument. So let's talk about that, okay? Forex. We all know about Forex, right? Foreign exchange. What does that mean? It's usually pairs, right? The most popular one lately is US versus the Euro, right? But there's many others. And again, even in Forex, you do not want to go to too many pairs. Maybe just do 2 pairs, right? To keep up with it, to be able to understand how it flows, because a Euro versus the US is not going to be the same as the US versus the Canadian, right? You have to understand what is going on in each of these. So the more specific you become, the more money you will start to earn. Equities. Oh, I love this. Whenever I ask people, so what do you trade? Oh, I trade stocks. Just in the United States market alone, there are 5,000 different stocks. So you're telling me you're trading 5,000 different stocks? No, but when I talk to a professional equities trader, they'll usually say, oh, I'm in this sector, meaning could be pharmaceuticals, entertainment, technology. They focus on a sector, or I do big caps, I do small caps. And to be honest with you, I have met so many super successful traders that only focus on one: Amazon, Facebook, Microsoft, Tesla, and they're doing great because they have completely learned that whole flow, the pattern, the understanding behind it. And that's when you make the real money. Okay, guys, really important. When you say equities, I trade stocks, everybody's going to know right away that you really are just not sure what you're doing, right? You want to be as specific as possible. Or futures. Oh, I love this. What do you trade? I trade futures. Oh, okay. So you're trading wheat, soy, the ES, the NASDAQ. Yeah. Okay. None of those are, have the same strategy. None of those have the same pattern. How are you able to do it properly? Oh, I'm not really doing that well because it's not possible. It's getting into 4 different vehicles and expect you to drive them all at the same time. Not going to happen, guys. Choose the one thing. Like for me, I am an ES mini trader. What does that mean? I trade the S&P 500 index on the futures market. That's it. It is such a beautiful, volatile, high volume instrument that I don't need anything else. It's beautiful to watch in and out. Within an hour, it's great. I scalp. That's it. I also know that if I go and learn others, I might master them, but why? I really mastered this one. And it's okay to master the one. Actually makes you look more of a professional. Options. Again, super. You want to do options? Great. Then don't get into Forex. Then don't get into equities. Just focus on options until you really get it down. All right. And crypto. That's another one. What do you trade? I'm doing crypto. What does that mean? Oh, do Bitcoin. Bitcoin is 1 out of 6,000 projects and altcoins. Again, if you're going to do it, focus on the right one. But just a little side note about crypto, the fact that it is completely all over the place, erratic, we understand that. And it's fine. It is what it is, but don't leverage. Don't leverage. What does that mean? A lot of people get into crypto. It's way too tempting to put it in to leverage at 10x or 100x, and then the market can move in less than split seconds and completely empty you out. Don't leverage. Okay, now I want to talk about these margin accounts and brokers. Why? Because a lot of people don't understand what brokers do and margin accounts. Listen to me, what a broker is. When you guys go shopping for jeans, you go into a store and there's a sales clerk. Do you think that sales clerk cares if you're buying the jeans for yourself, if you're buying it for somebody else, if those jeans will never fit you? They don't care. They just want you to buy because chances are they're making a commission from you. Brokers, they do not care about you. They are there to just be there for that transaction. Actually, the least you know, the more they make. And brokers push the margin accounts. Why? Because what is a margin account? They are lending you money. So they're saying, okay, so you can buy all of these equities, let's say, and if you don't have enough, we will give you a margin account so you can borrow it. Oh, and if you lose everything, because chances are you will if you even have a margin account, not only do you have to pay us back, but we're going to charge you an interest. Guys, you do not need a margin account. And you do not need to be pressured by brokers to start trading before you are ready. This is your thing. You are in control. Be in control. All right, let's talk about commissions and live feed. For depending on the different instruments that you're going to be trading, you're going to be paying commissions. So let's say if you want to be trading crypto, are you going to go with an equities broker or platform? No, because that's not their thing. So if they say they're going to do it, they're going to charge you extra commission. So you want to be with the proper broker. If you're in the futures, you want to be with a futures broker. If you are a crypto, you want to be with a crypto exchange. They'll give you the best commissions, and usually with the live feeds as well. Now, if you have delayed feed, forget it. You're not a trader. You need to just stop right now because you need to be with live feed. You need to know exactly what is going on in this split second right in front of you. All right. And like I mentioned before, a platform. You cannot be a Formula One driver in a minivan, right? You're not going to get anywhere. You need to have the proper platform. Okay, you have to have the proper platform that is going to give you all the tools you need. Otherwise, again, you're just fooling yourselves. All right, let's talk a little bit about the lingo, because a lot of times people overlook the importance of the lingo. Everything we do in life, it does not matter what you'll do, has a certain lingo that goes with it, right? If you want to learn how to drive a car, you know, all right, shift it into gear, press on the clutch. These are not words that somebody knows if they've never seen a car before. I know this because when we started to teach my 18-year-old son, who's now, you know, he didn't have a clue what a clutch was, or releasing the brake, or shifting into gear. That's a vocabulary that he learned. Yeah, certainly now it's quick and automatic for him, but it wasn't. And with trading, it's even more important because there is a certain vocabulary that we use. And if you don't know how to use it, you will end up losing, right? So first and foremost, intraday trading. What does that mean? It literally means you're in and out of all of your positions in the same day. Why does that matter? Okay, first of all, if you're overnight, you're not intraday anymore. Now you're swing trading. If you want to stay longer, you're investing. Why does that matter? Because if you are a swing trader, do you care about a 1-minute chart? What about if you're day trading? Do you care about a 1-week chart? If you're looking at the wrong time frame, you're never going to be able to do it properly. So if you know that you're an intraday trader, you're going to look at the time frames of 1 minute, 3 minute, 5 minute. If you're a swing trader, you're going to be looking at the 1 day, the week, right? You're going to be in the proper time frame. So important. And this is obvious, right? Bull market, market is going up. Bear market, market is going down. But we also have the sideways market. Okay, and a lot of people don't realize that this is actually the most important one. Why? Because that is where we end up losing all of our money, because that's the consolidation area. It is the indecision zone. And when you learn how to stay out of the sideways market, first of all, you're going to be making a lot more money. And secondly, you'll be able to find the more profitable trades. Now, I want to talk about profit targets and risk management, because this is so important, guys. Profit target, you have to tell the market, when you're day trading, you need to tell them, the market, where you want to hit your profit target. What happens is a lot of people put in their profit target, then they see the market moving in that direction, they remove it. Ego always, the greed and the ego will always win, and guess what? It turns on you and you get stopped out. Just take out one part of the target and then do a split target if you wanted to continue. Risk management is just as important. It's like saying you're going to put on, you know, a lot of people are like, oh, I put in a mental stop. It's like putting on a mental seatbelt on your child and pretending that you're going to save them during a car crash. You need to tell the market what you want to risk on that particular trade. That eliminates all the gamble, okay? You need to be in control. Again, I'm going to go back to this chart, guys. It's amazing the amount of people that are on their Robinhood apps and thinking that they're traders and then losing money, because that's not real. You need a real chart. All right, indicators. Like I mentioned earlier, good charting platforms, they give you universal indicators. It comes already with it, okay? And usually there's hundreds to choose from. You need to have all of that there. Do not buy and spend extra money on that. And like I mentioned before, there's 3 trending markets: going up, going down, and the sideways is the most important one of all. All right. Understanding the most basic terminology, you're going to be buying. You're going long. Bottom line is you're entering at a lower price point, exiting at a higher price point, taking all the profit in between. Selling or going short, the exact opposite. You are entering at a higher price point, exiting at a lower price point, and taking the profit in between. That's it. Don't get emotional about it. Oh, if they're selling or if it's going short, that means other people are losing money. Who cares? Do you know those other people? You do what you got to do because you are a professional trader. Technical analysis is all that's going to work for you. Okay, let's do a really quick talk about market entry. When you're going in market, you're literally telling the market that you have no idea what you're doing. And basically you're saying, oh, this candlestick looks really strong, I'm going in. No, you need to put in a limit order. You need to tell the market exactly where you want to enter, because when you're entering market entries as well, you also get fined by the market. It's called slippage. Slippage is when you're going in market, let's say you want to enter at the dollar, the market is going to put you in at $1.25, okay? Because it knows that you're an amateur. So limit order, you tell the market exactly where you want to exit, enter, and stop limit is exactly the same thing. You are telling the market where your stop is. This is all I'm willing to risk on it. I am not going to go anymore. You put in that stop. So important, guys. Risk management is key. And I kept on mentioning technical analysis. Technical analysis is literally the language of the market. Okay, it talks to us. The market really talks to us. And when we understand it, we can master all of it. So I want to just do a quick understanding of it. Like when I mentioned in the beginning that when I started to look at the market from a language perspective and learn it as a new language, everything changed for me. That's technical analysis, right? So let's begin with, and the interesting thing is you could use it on any instrument as long as you have a chart, and it's free. It is completely free and you could read it everywhere, okay? And that is the greatest part of all. Once you understand these basic technical analysis, boom, you will take your trading to that next level. Areas, what are they? The market respects areas and it revisits areas. And when we understand those areas and respect them, that's when everything will work well for us. What is a resistance area? Resistance area is the ceiling of the market. It is where the market is hitting that area over and over and over again. And when you can draw it in, again, you don't want to do a mental drawing. You need to draw it in and you see that the market is hitting that area. This way you could stay out of a bad trade. And when it finally breaks through that area, you could get into a good trade. Support area, it is the floor of the market. It is literally where the market is hitting over and over and over again. And you do not want to be entering that place because you can and will lose money. So when you're seeing a support area or a resistance area, stay out until you get confirmation of either a transition or the breakout. Now, how do we spot these areas from happening? Reversal patterns. Guys, reversal patterns are the simplest to notice, and they are, to me, they are the most important. What are they? It is the double top, double bottom, triple bottom, head and shoulders. I love them. You could spot them on any financial market as long as you are watching the price action. And they are literally screaming at you. They're not saying it's going to reverse. It is telling you that the market is totally slowing down and there is a very high potential that it will reverse. And it's telling you to sit out and wait until it does so you have that confirmation. And divergence. Divergence is my holy grail. Like this is what I always listen to divergence, always, because divergence is quite simple to see. Here's my price action. It's going up. I personally use the MACDs as my indicator. I know a lot of people use RSI or something else. It all works the same. And my MACDs are showing me that it's going the opposite direction. What is it telling me? It's telling me that the market is losing its strength. Do I want to put my money into something that is losing strength? No, I stay out. That's the beauty of being conservative and understanding what is happening, because you could hold on to your money for those really powerful confirmed trades. All right, let's put it all together. I remember everything I just talked about, go right here, makingofadaytrader.com. You can get everything right here, everything that I went over. So let's put this all into play. Here is the chart, right? I have a very significant resistance area. I'm not going to touch that area because it's flat, it's uncertain, but boom, the market just broke out. I am now seeing the breakout. And here's the thing, guys, breakout trades, they are the most powerful trades. But if you don't have your areas drawn in and recognizing when there's that consolidation area, you're going to lose all your money before that powerful trade can manifest, right? So that's the beauty of the breakout trade, is recognizing that strength, seeing where that area has been, and seeing when it breaks through. And when you have that breakthrough, boom, breakout trades are probably the most powerful, easily recognized trades out there. But if you don't have these areas drawn in, you're going to miss it. And unfortunately, what's going to happen is you're probably going to end up losing the majority of your money in that consolidation area as well. So you want to be able to recognize them and truly be ready when it's ready. Okay, so remember, guys, here, go to makingofadaytrader.com. Everything I just talked about, and you can find it right here. Let me see here. I have some questions. Making of a day trader, what can we get from the web? It's free, Vivek. So go there right now. Makingofadaytrader.com. John, I cannot get the cheat sheet on your page. I get the message, but the page requested could not be found. Huh. This is boring. Thanks. You could, you know, you have the actual opportunity to just say, I'm not interested, instead of not being a nice person. I tried another email, but you got it. Okay, great. That's all that counts. Okay, so let's continue, guys. Again, go to makingofadaytrader.com and you'll be able to get the full presentation. Here's the thing, guys, okay? We have absolutely everything we need to take action, right? Everything we need to take action, we have it right here. We have these presentations. We have YouTube channels that we could watch. We could listen to podcasts, read books. There's all these things that are available to us. But at the end of the day, how do you know that you're doing it right? How do you know that you are doing it right? Who's there to help you with that, right? Because all of this is great, but the real question is, how do I truly get started? And this is not from beginners. This is from seasoned traders who have been trading and are still losing money. Because I get asked all the time, how do I turn this around? How can I be profitable consistently? Because at the end of the day, what we want is to be consistently profitable and make this our livelihood. I cannot even tell you the amount of people that are just donating their money to the market. Donating. There is no other career or industry that people lose money and still keep on coming back thinking that they're going to be able to do it, unlike casinos, right? Like, that's why casinos are so, I guess, so wealthy, right? But you can control it with trading, and that's the beauty of it. And usually it literally is simply lacking a lot of the basics, right? A lot of what we just went over, a lot of people don't actually realize that there are basics. What I always say is that people are putting in windows before they are putting in the walls, and their windows are constantly crashing down. Okay, so it's really important to just build your foundation, and you will be able to make all that money. It's like, okay, it's like getting into the car. If you guys don't know where the steering wheel is, where the clutch is, where the brake is, where the accelerator is, how are you planning on actually driving the car out of your driveway and getting on the highway, right? So the other thing is, imagine somebody who has never been in a car before, and those people exist, who've never been in a car before, and you're telling them, okay, buckle up, it's gonna save your life. Put on your seatbelt, it's gonna save your life. And that person, they're too timid to say, seatbelts, buckle up. What do they mean? I know that it's about to save my life, but I don't know what it is. If you don't know what you're looking for, how is it going to be able to help you, right? And a lot of times we overlook the basics because the seatbelt is probably the most basic thing to learn. And this was truly my biggest struggle, right? I spent over $20,000 on my different trainings. And I struggled for years because whenever I was in the live chat rooms or on these summits or whatever, and I used to ask, you know, can you please explain what a reversal is? Can you please explain what a divergence is? Can you please show me the support resistance area? The basics, basically. Those are the basics, by the way. If you guys don't understand that, you need to stop going live and just learn these basics. And every time I would bring that up, a lot of times I would be completely ignored, or I would be treated as if I was born with this information. right? It's literally like going back to the music student. Imagine your child decides that they want to learn how to play the flute, and now they're committed to playing the flute, but they don't really know how, right? Because they have to start from the beginning. And they arrive to the music academy, and instead of being put into a class where they teach you how to hold the flute, how to blow into the flute, they're literally thrown into the symphonic pit with professional flutists and expected to keep up. It will never happen, right? You need to go back to understanding how to hold that flute, how to blow into that flute. And because of that, I struggled for years, and I was losing money for years. And I ended up losing constantly. And the last thing was like the last straw for me was I ended up losing almost $4,000 in 5 minutes. And then I just quit. I quit. I was struggling. I quit. I could not manage to do it anymore. I felt defeated. I felt it was just really sad, right? Because I was putting in all this time and all this effort, and I was losing. But here's the thing, guys. Trading, we all are bit by the trading bug, okay? And it does not stop itching. And do you know why? Why that is? It's because deep down inside, we know that we could do this. We know we can do this, right? That means, for instance, everybody who we see are doing it, we see that it's possible, and we know that we can do this. And that's what happened to me. I quit. I totally quit. But then after 3 or 4 months, after I got myself back emotionally and on track, and I was a bit by the trading bug, I decided to come back, and I came back to the basics. I stripped my charts entirely of everything. I stripped my charts, and I came back to the basics. So I started to just look at the bare naked charts. Then I slowly started to put in the basic indicators that helped me. And that's how it all happened for me. Everything changed, and I went back to 1 chart, 2 indicators. And one of my students, about a couple of years back, he goes to me, you know, Marina, your teaching style and philosophy is very similar to Coach John Wooden. And I'm like, who's Coach John Wooden? I didn't even know who this person was. So of course I went and I Googled him. And Coach John Wooden, if you guys haven't heard of him, he was a legendary basketball coach. I actually don't believe anyone has come up to his legendary status to this day. And his entire philosophy of coaching was, when in doubt, get back to the basics. And I mean, this man has led teams to 88 national championships, 10 NCAAs. I mean, this guy, you know, he was legendary, and he worked with superstars, the best of the best basketball players, okay? However, every time they started a new season, and these guys were, you know, the best, he would start from the basics. How to tie your shoe, how to roll up your sock, how to dribble the ball. Why? Because it does not matter all that you think you know. If you're out on that court and your shoe falls off because you didn't tie it, you sprain your ankle or you break your ankle, boom, guess what? You're out for the season. It didn't matter all the other stuff that you knew because you did not put in your foundation. You did not build your basics. And that's the most important thing of all. And today, for only the participants here right now live, I have a very special offer. And my introductory course that I created just for that. Bootcamp for day trading. You could do this on any apparatus, desktop, laptop, tablets, phones, you name it. All of this was for $97. Everything here. Go right here, right now, guys. Bootcampfordaytrading.com. Bootcampfordaytrading.com. All right, let's go through everything that you will get for $97, because the reality is today, what can you possibly get $97 that will bring you that same return on investment? Do you guys like to play golf? Me and my husband love to play golf. And when we first moved to Guatemala, we used to go to this golf course, and it was like $25 per day per person on the course. Before leaving, it was $119 per person in Guatemala. I don't know about you guys, but That's a lot, right? It was $240 just for us to step on the course. Oh, you want to take your friends out or your family out to dinner or lunch? $97 maybe will feed 2 people. Maybe. Okay? Today. So let me break it down for you guys. Go right here, right now. Bootcampfordaytrading.com. Go there right now so you can follow along. What is it that you're going to be getting with Bootcamp for Day Trading? All right. First of all, the simplifying day trading, the whole package, right? Talking about the platform. I struggled with setting up my platform for ages. I have a 30-minute tutorial that we go over together so that we can get past the setup and jump into the most important part of all, and that is how to trade. Understand the trading, because you don't want to be stuck on figuring out how to use the platform, how to set it up. I am going to be there completely to help you. Then we really dive into the market anatomy process, okay? Dissecting the trends, the movements, understanding the upward trend, the sideways trend, the downward trend. If you guys don't understand how to recognize that sideways trend, you're going to end up losing a lot of your money. So we can get over all of that. And we recognize that through reversals and divergences. Reversal patterns, guys, they're so simple to spot. But if you're not working with anybody to help you really understand them, you're going to miss out on understanding them. And also the defense zone, the telltale signs, the divergences. Understanding divergences will save you so much money and help you get into the best trades out there. And recognizing the breakouts, the fake out breakouts, to avoid them as well. Because those fake out breakouts, they can cost you a lot of money. And you'll have unlimited curriculum access. All of this is valued at $1,600, everything here. But I have some special stuff for you. So first of all, my student testimonials, and I have students from all over the world, because that's the coolest thing of all, is that we can do it from anywhere. Michelle, best money I ever spent with the boot camp. Absolutely love it. You are the only mentor that truly checks the work. I am so enjoying your boot camp. So I want to share one really important thing with you guys. Remember when I asked you, how do you know you're doing it right? So here's the thing, guys. Who is there to truly help you with the accountability? You might be doing it and you might not even realize that you might not be seeing it correctly. So in this one-time, it's a one-time price of $97. I am offering one-on-one mentorship. One-on-one mentorship for one entire month, unlimited, with me, because this is what's going to take you to that next level. And I have the best for last. Extra special bonus. I have a live trade chat room that it's me, only me, going through it. Everything that we learn in our coaching sessions, we implement and go into the live market. And that is included right here for 1 month. Okay, guys? All of that $2,600 value, you get it for $97. So go here right now. Bootcampfordaytrading.com. Bootcampfordaytrading.com. This is what you guys will get for that $97. Everything in that course. One entire month, 30 days of one-on-one, unlimited feedback and mentorship coaching with me. So you never have to wonder, am I doing this right? How do I know what is correct? I am there, accountability. We go over your charts, we chat, it's one-on-one. 30 days in the live trade chat room. And the reality is, this is all worth than one price of one trade. My average trades are $300 to $400. $97 is not even a full trade, and you will get 10 times the return on your investment. And then you can have 100 of these dinners. But here's the thing, guys. Because of my mentorship, I can only take 25 students. Okay? Because of that mentorship, I'm only able to work with 25 students, so I can fully commit to you guys. Now, I want you guys to go here right now. This is what the ordering form is. Bootcampfordaytrading.com. Go here and you can see one time. It is one time. It is not recurring. One time, $97. But if you want to do a payment plan, you could do $59. You'll still get full access to absolutely everything. Okay? One price, $97. Guys, this is a no-brainer right here. Bootcampfordaytrading.com. Bootcampfordaytrading.com. Go here right now and that's it. Okay, let me see really quickly. I know there's some questions. What is my time frame? We work with your time frame because it is all about what you want to trade. So if you want to do swing trading, we will work with that time frame. This is a boot camp for you guys, right? That's where that one-on-one really comes together. So we work on finding out the exact time frame that you want to do. You want to do day trading, swing trading. Okay, wasn't successful to secure the cheat sheet. I only okay, Nicole, please, whoever had issues with, so I see that Jeffrey put in for the contact. You could go to thetraderchick.com and go into my contact, and I'll be able to send that to you. Sorry about that. Okay, email apologies, could not request. I did it twice. All right, please go to my contact. That's interesting. Okay, great. Thanks, Nicole. Do I have a Spanish version? No, I teach everything in English, but me and you could chat in Spanish. Absolutely. I used 2 different emails. Page could not be found. Okay, I got to check that out. Let me see what's going on. Must be overwhelming right now. The contact page didn't work either. Okay, thank you guys. I'm going to check. Everything was working before. I'm not sure what's happening. Okay, but again, guys, just go to bootcampfordaytrading.com. The expiration, oops, hang on. Something just happened here. The expiration, when you begin, that's when it'll be 1 month. Okay, so you guys could start the mentorship when you are ready. A lot of people go and take the offer that I'm giving, then go through the course, and then when they're ready, they say, okay, I'm ready now, and that's when we do the 1 month. So you have plenty of time to go over everything. All right, guys, let me know if there's any other question. I'm sorry about that. I got to go and see what's wrong with the sheet. That's interesting. But please go here, bootcampfordaytrading.com. I'm excited to work with you guys. And any other questions, I am totally here for you. And thank you so much for being here and spending this morning or afternoon, depending where you guys are. Thanks so much. Do I need to those? No, Ted, you could just go for the boot camp. You do not have to get anything else. All right, thanks, Jeffrey, so much for having me, and thank you, everybody, for being here.
Appreciate it. That's great. All right, very good. Let's go ahead and kind of do this. We do appreciate Marina for coming in. She always does such a good job. We go ahead and kind of get the presentation over to me. You guys are going to be excited because I have talked to Kelly, and we may be working remote today because of the snowstorm, but we are ready to give away prizes. So let's, before I do that, I do want to say thank you to CMT Association for sponsoring the events that we're doing. They've been sponsors for a couple of years now. One of the things that's interesting, he's going to come in tomorrow and speak in the afternoon. But one of the things that I always find interesting is how much having a CMT designation can help you if you want to work for a bank, or if you do work for a bank, how it can help you increase your assets under management. And it's also just kind of cool to get the extra CMT designation after your name. So if you're interested in kind of looking into something like that, you can go to cmtassociation.org. They do a great job. It's a very well-respected organization. We appreciate all the support and the sponsorship that they've been doing over the years. So, of course, we're MetaStock. This is the side where we're going to give away a prize. So, Kelly, let's go ahead and do that. Are you ready?
Jeff, I am so ready to give away a prize. Let's do it.
This one's going to be good. We just had Steve Bigalow on just right before Marina. I'm sure everybody remembers the course that we did back in December. The 10-hour course. It's recorded, it's available. We did it live, but we recorded it. It's normally like $900. This is the last prize for this course that we're going to give away for the session. So,
and that was an awesome course. It was so well received. People loved this course.
Well, who doesn't? Steve does such a good job with the training.
He does.
So, in any case, what I need from you is, and I don't, let's see, I need a number between 1 and 12,523.
Between 1 and 12,523, you said?
Mm-hmm.
Let's go with 9,306.
9306 it is. Go. Okay. This is Kate C, with an email address at errolls.com. So if that sounds like you, Kate, you just won a prize. This is a really good one. We're going to make it available on metastock.com. I'll send you, you'll get a little bit of a confirmation when it's available, but it'll just be a course that's available for streaming as soon as we set it up, which will be within the next week or so. So thank you for the assist, Kelly.
You bet. Congratulations, Kate.
All right, very cool. Okay, let me go ahead and kind of make a record of that. What happens is if I don't write them down right now, I find myself looking through the YouTube video to figure out who won later on. I'll be like, I know we gave away that prize. Who was it to? So anyway, if we are, of course, talking about MetaStock all day today. We are offering an extended trial. If you want to take advantage of buying a month and getting a second and third month for free, our software, 30 years in a row, it's been rated #1. I talked all week so far about how much I love being able to scan everything in any market, anytime. You can take advantage of that at 800-882-3040. You can do it at metastock.com/comp-promo and metastock.com/sales-chat. Walter wants to know, can you watch these presentations in the future? Yeah, actually we are streaming the whole sessions over to YouTube. And so at the end of the week, we'll actually send you the YouTube link. I'll also paste it into the chat as soon as I'm done introducing our next fabulous guest. So let's go ahead and do that. And let's see. Ruslan, I'm not sure about the Middle East question for the trader chick. I'm just actually, I think probably what I'd recommend to do is contact her. She can tell you what time she accommodates and when her room's open and that kind of stuff. Our next presenter is Ed Downs. Ed has been a friend of MetaStock for decades now. We love Ed. Very, very smart guy. I remember when I started, which was like 26 years ago, we were selling his OmniTrader package. Several years ago, actually, no longer a few years ago, several years ago, he approached us and wanted to put his Fulgent artificial intelligence engine into MetaStock. And I had already know Steve was a great system designer, a prolific systems designer. He does a really good job with it. And so, of course, I said, yeah. So, Ed, welcome into the room. It's good to have you. Thanks for reaching out to me several years ago. And then in YouTube, Scott wants you to know that that's your high school picture right there.
Pretty much.
So we go ahead and make you the presenter. I just did that. It should pop up on your screen.
I got it. Thank you so much. I mean, make sure I don't click the wrong thing here. Okay, there we go. I think we're good. You got my splash screen?
I can see everything. I can hear everything, and I'm gonna get right out of your way. It's your turn. You go.
Okay. Well, thank you so much, Jeff, and once again for having me on your webinars. I love doing this. It's my favorite thing in the whole world. And like you said, we go back. I'm not gonna say how many years, but let's just say around 1992. That's a while back. I'm not gonna calculate it. Long time. And so just a little. I'm gonna give everybody a little bit about me and the relationship with MetaStock that I've enjoyed all these years. I'm an engineer and was in design automation, which is automating chip design. I love automating stuff. It just kind of turns me on. I like it. And so, many moons ago, I was trading the stock market and doing my job, and I thought, maybe I could apply some of these concepts to trading, automating various aspects of it. And so that led me to start my company, Nirvana Systems, and we did various things. I had been a MetaStock user for a long time, and I just called those guys and said, hey, we've got some automation utilities that can automate the DOS version of MetaStock. That goes way back there. And Steve Akalis, the founder, met with me there in Salt Lake City, and it was just a great experience. We sold those packages, as Jeff said. We marketed things together at that time, and it was great. So after that, about 3 or 4 years after we did that, I started looking at other ways to automate trading and really started looking into artificial intelligence. So in 1996, we released our first neural network for AI, and then we went on to create a genetic algorithm, and then a few other AI-based technologies that we developed at the company, and just kept working on that to generate signals and recommendations based on artificial intelligence. And so, as Jeff said, basically, 3 years ago, I approached him. I said, hey, I'm forming this company called Fulgent AI. And the reason I'm doing it is because we're kind of putting our stuff in there to go out to the world and help other users with our AI. So MetaStock is a prime platform that we support. It was the first one that we supported, frankly, the best. And so we did that, and it's really a seamless thing. My guys over here are so good at developing software. I mean, I did the original software, a lot of the coding, what we did, but I don't even try anymore. I say, hey guys, I need this thing running in the background that MetaStock can hook up to give signals, and from our AI, and they've got it all working. So you're going to see that today. And in fact, let's see the title of the webinar is, come on, let's go. Where are you? There you go. Profiting with AI for MetaStock with me. So you're going to see the product working in MetaStock. I want to educate you about that. But really, I always in my webinar try to give people some value apart from our products. And of course, we have lots of products. In fact, I think there's 6 that we've now done for MetaStock, chart pattern recognition and various things. But what I want to do is talk about AI. There's a lot of hype about it right now, especially if you've used ChatGPT. You know what I'm talking about? I mean, amazing stuff is happening out there. But as far as trading goes, it's kind of a mixed story. And so I want to educate you about that and about the technologies out there just a little bit. Not a lot of time on that, but just enough so you kind of are more fluent in what's possible with artificial intelligence in the trading realm. So with that, let's get going. Here's my basic agenda. By the way, the site is fulgent.ai. You can learn more about it there. But we're going to today look at a quick overview of AI technology for trading. What's out there, how does it work, good, bad, the ugly, whatever, all that stuff, because there's a lot of hype. So I want to sort of clear that up. And then literally, how can this thing help you? What can it do to give you better trading results? And it definitely can. So I'm going to show that. And at the end, the module that we've created enables anyone to create their own custom AI system on any indicator that you like. It doesn't matter what it is. It could be a MACD crossover. It can be an RSI below a level. It can be a candle pattern. Anything that you really like to trade from, you can use the AI to enhance that event to find the good ones and the not so good ones. And that's what it does by looking at all this stuff that it looks at. So we're going to cover those 3 things mainly, and then talk about what's there in case you're interested in the module so you understand what it is. By the way, if you go to that website, we do have some reports up there that are about using our technology. There's one on using it to trade options. I mean, it's just running on any freely traded market. So you can run it, you could run on the option charts, but typically you'd run on the underliers and then trade options from the recommendations. So there's a report on that. If you just go to Fulgent AI platforms, MetaStock, you'll find it. And it's just a free download. So that's something you may want to look at. Okay, again, fulgent.ai. Okay. We get all that out of the way. Let's move on to the meat. There you go. Click that. Yep. Okay. So the question is, can AI be used to trade more profitably? And if you just go into YouTube and search for AI for trading, you're going to see all of these things out there. And people say, hey, I predicted the price of Apple yesterday or something, or there's some commercial products as well that are on there. And what you really want to look at is, where is the evidence that what they're doing actually works, that actually does generate profitable outcomes, helps you in some way. And that's the thing that's really hard to find. If you go on YouTube and really say, okay, where's someone that's traded this stuff for a while, they've been using it, here's their record, that is difficult to find. And there's reasons for that. I'm going to go in a minute. So like I say, what you won't see is something like this, like a performance report from AI signals. And those are actual signals from the Fulgent AI program on what stock is that, Cisco. So you typically don't see that. You'll just see, I predicted something. And so, we want a little more than that, right? Okay. So most of the modern AI that's out there is based on neural networks. There are other technologies now, like classifiers and different things that are really powerful. We use both neural networks and genetic algorithms, and I'll talk about that again in a little bit. But if you're looking at how these things are used, they're basically pattern matching. I get trained on a whole bunch of pictures of something, or events of some kind, or with a self-driving car, what does a rock in the road look like? And it just, there's millions and millions of samples, what we call them, and it learns what the characteristics of those samples are by using a neural network. So that's what we're going to focus on that for a minute here. Here is kind of, if you go on the internet and you search neural network, they kind of look like this, right? And a bunch of little bubbles, and they're all connected one to many. And what happens is that on the left side there, where you see that line of numbers, what that is, and this is one way to use AI. This is just where you're trying to identify something from a picture. There's the pixels of this picture are just lined up, like they scan the thing going across like this, and line up all these pixels, and they have a color value, right? So it's like, you know, maybe 4 million, a lot. And they feed it into this input layer. So they'll take some value coming from here, and they'll feed them into the input layer, and then they start going inside here. And what happens is weights are adjusted inside the algorithm until it starts to get an output that is like a 1. 1 means you have perfectly matched what a cat is. And usually it's like 0.7, 0.65. So, you know, but that's what they'll do. And, you know, so you're looking for that. And after a lot of training, especially, you know, looking for things like cancer and stuff like that, you'll get really good results. Or a rock in the road, or, you know, is that a person that I'm about to hit with my Tesla, you know, or as a Tesla driving itself. So it's really good stuff, and works really well. Now, but that's for like the real world. You know, that's things that are physical that you can see, and they're consistent. We talk about trading, not so much so. It's much more complex to me than any picture of anything. You can take a chart and measure a bunch of indicators, you know, and feed them in, or the price data. Typically what people try to do who don't know anything about this is they'll feed the actual price data into a neural network, and, you know, sometimes it'll find something interesting, but look closely at how they're doing it, because anyway, there's a lot of false claims out there. But they'll try to do that, you know, on a chart at some point in time, and then hopefully tell you, you know, what's going to happen. So to do this, we have to use the price data, probably some derivative of that, but mainly it's going to be indicators. That's what you're going to feed in, because you want to, they call it pre-processing the data, you know, in the AI sense. If you just give it prices, that's really hard to figure something out from. I mean, maybe someday, you know, it'll happen, but the market's changing so much, and there's so many different personalities. I was day trading this past week, and I can't believe, you know, one day you're just kind of going like this choppy along, and the next day you're like, whoa, it's just really easy to make money, and then, you know, so it's just very different all the time. So, so you need to give it something it can train on, and so you're going to use indicators. All right, so the problem is there are 100+ indicators in MetaStock. So if we just want to feed a neural network indicators, we've got to do something. We got to pick something. And so let's just pick one of them here, the relative strength index. Now I could go through all of them, but we'd be here for weeks. So let's just pick one and look at the variability of just one indicator. I'm just trying to show you how hard this is to do. So you've got all these RSI periods, right? Typically RSI 14 is used by most people to find overbought, oversold levels. But if you do that, then you've got the interpretations. You know, is it crossing through zero? Is it above or below a level? Is it accelerating? Is it diverging? You know, a moving average of RSI, you know, momentum on RSI, and all these derivatives. It's infinite. I mean, you could just go on forever in terms of the interpretations of one indicator. Okay, just one indicator. So we know there's an infinite number of these things that you can feed into an AI package. And that's what we're trying to do, right? Because typically we will come up with one and we'll try them ourselves as the AI to say, well, when RSI is doing this, when MACD is doing that, and we test it and go, yeah, that's pretty good. But we want this thing to do that. That's its job. So that's what I'm getting to. But even with, yeah, it's infinite. So even with 100, okay, 100 true false indicators. So like above a 200 period moving average, below a 200 period moving average, RSI less than 30, MACD diverging from price, you know, true or false. Even with just 100 of those, if you got every possible combination of 100 things that are true and false, it's 2 septillion. And let me tell you, it takes a long time to figure out, you know, which of those combinations are profitable. It's like it's years or something. I mean, it's just ridiculous how long that would take. But that's only with 100. What if you have 1,000 or 2,000 of them? but you just can't do it. Okay, so the only way that you can actually figure out which things are working well together in a broader sense is with AI. And it's really, the only way that I know to do it. Like I say, we do it on a small scale, physically, manually, but the only way to do it is with AI. And that's what intrigued me about it, and that's why I started working on it. So what we do in Fulgent is something called a rule-based approach. Don't use neural networks, and I'll explain why in a second, but that's basically, we're looking for trading rules. When this is true, and this is true, and this is not true, and this has a certain value, and it may be 10, 15, 20, 50 things, and test them and figure out with a process which ones are profitable. So that's what we're doing. Here is a trading rule that you might do manually. Okay, so just really quickly, just an example of a trading rule. So we know that when Bollinger Bands narrow down really tight and they start to expand again, that's a place where a move is happening. That's a very good system, just a simple thing. Here's a really good one over here. Here's one here, chart moved up from there. It's a great indicator. So that's one element of our rule. Okay, then let's say the 20 period EMA is over the 30 period. And that's this red and this blue line. That's also, you're trending up if that's true. So that's a good rule. So I've got the Bollinger Band expanding, it narrowed, and then it's expanding. The EMA is over the other one. Okay, let's look at another one. Momentum is positive, right? Momentum positive right there. MACD is above its moving average right there. So I get all those things lining up, and I should get a profitable trade right there. So we test that like crazy, and we change the indicators and everything. So what we want to do is generate rules like this with AI. That's what we want to do. And what I have found the best way to do it is with something called a genetic algorithm. And I want to explain what it does very quickly. Essentially, you start with this thing called a population. So it's called a genetic algorithm because it imitates the way that genes mutate and change over time in a population, let's say plants or something. It's a very similar idea of what's happening there. So if this is a chromosome, go with me on that analogy, and these little things in here are genes, okay, what we do is we say, all right, my chromosome is a potential rule. And it's not just like 8 things like this, it's probably 100, 200 things. And we say, okay, let's try if we said that one's on and this one's on and this one's on, how profitable is that? So very quickly, the computer has to take that potential rule and go through 10 years of data every single day and see if those things are true, does the chart go up? And at the end, it goes, no, not so much. Maybe it did like a couple times, but nah, we want more like 70% of the time. So, okay, here's another one. Maybe this one was pretty good. And so what it's doing is it's changing these things, very, very rapidly, in fact, extremely fast, and testing them against the whole market, the chart you have or the charts. And when it finds a good one, which it will, just by random selection, it saves it. It says, well, this one's pretty good. This is like, 60% accurate. It makes so much, when those conditions are true for one of these rows right here, like this, it's, good. And so it'll save that and it'll keep looking and it finds another one that's pretty good and it goes and it finds another one. And so then what it starts doing is crossing over these genes, these RSI 14 less than 30. That's a measurement. It's a gene in this analogy, but it's one of the things that you see that when that's true, combined with other things, it's profitable. So it kind of crosses them over like this to find better rules. And it does this, continuously over and over. You can actually see it doing this if you retrain the AI that we have, which you can do, and you'll see that process. You'll see the rules accumulating and the improvement in performance and all that. So it's kind of fun, but it happens very, very fast. And I just love this thing. It's an amazing piece of technology, but that is what it does. Okay, so we let this run for typically a couple hours, and it'll generate what we call a knowledge base. The knowledge base has this collection of rules that we found that were good. And so what occurs is, as we look at a chart, we are measuring all of those things, like it's 200 or 1,000 different things, RSI 14 less than 30, that sort of idea. and on every single bar, and we see if we have a match in that database. So you can imagine it has to happen in memory very, very fast. And so it finds one. We have one strategy called quick move. So it finds one on that bar, and it tells MetaStock, hey, you got a signal on this bar with this particular GA approach. There's 4 of them. This is one of them, and so it'll say that. So that's essentially what's happening. To you, the user, it's just running in the background. It's there, and you use it. But that gives you a little background into how it works and why it's so dynamic. And we'll talk about training to your own indicators in a little bit, because that's really, really fun to do. All right. So let's look at the product then. Fulgent AI for MetaStock has this knowledge base built in, and all of this runs in the system tray. If you ever looked in the right, the little up arrow that you've got over there, that's where it lives, and MetaStock talks to it. So if you bring up our template, that's what it will do, and it'll get a signal, and it'll also get statistics for every rule, because that's one rule is firing that. There's probably 5,000 to 10,000 rules in here for any of these methods. So that's one rule fired that signal, and it'll tell you how many times it happened in the data and stuff like that. So here's a closer picture of it, and those are those stats, AI-based signal, and really it's very, very simple. I'm going to go and bring it up now and show you what it does, but it's just looking for these rules to fire and tell you where they are, and you have a lot of control over how it does that. So if I got everything hooked up right, hey, there it is. Okay, so here's MetaStock. Let me go ahead and bring up a chart here. Go into the Dow. Okay, good, and open chart. All right, and it's gonna go, now it's talking to Fulgent right now and saying, what do you got? What do you got? I've got Amgen here. And it comes back and says, okay, we got some signals for you. So really, so these are, each of these things, quick move, volatility breakout, they are AI techniques that have a bias. There's a filter in them that says you're really looking for rules around this kind of a situation. So a quick move is we look at the Heikin-Ashi chart and measurements on it to say, and they happen all over the place where that condition is true, but the AI will say, well, right there, you got a really nice one set up for you, because I found a rule that when this other stuff's going on, looking at RSI and MACD and divergence and all these things, that's probably going to be a really good signal. And so the basic default accuracy you see is about 65 to 70% accurate. And you can see there's just a lot of great trades in this chart, and and some that stopped out, so it's not perfect, but really good candidates to trade from. I mean, if you're looking across the whole market for something to potentially trade today, I don't really think as good as this that just does it for you. Let's go through some charts here and just look at them real quick. Let me back out a little bit. Okay, that's a little more, so you can see volatility breakout. I mean, it's just killer on most charts. Sometimes it comes across one that goes, well, not as good as the others, but generally speaking, they're really powerful. So you can see, volatility breakout one here, quite a few of those quick move signals. There's one that got stopped out. Swing trade, volatility breakout, swing, and a quick move right there that went down. So just, the thing you do is just go through about 5, 6 charts and just going through the Dow, walking through it, so you can see those. I mean, it kind of speaks for itself, Now, one thing about this is that you actually have this engine in here that you have access to. Let me show you about that real quick. Okay, so it lives in here, lives in the system tray. Right now it's running, and so I can bring it up. This is the interface. So it's the interface to the thing running in the system tray. Now we have a lot of products that we've provided for MetaStock, and it's been fun. So there's lots of stuff in here. There's patterns, there's Wave Trader, all these things. But right now I'm using the stocks template for the advisor and the chart. So this is FT stocks, and if I double click it, I'm going to see the 4 advisors that are built in here, and you can see the names in these charts. Volatility breakout, quick move, swing trade, and major reversal. It's looking for big reversals in the chart on this one. So you can turn different ones on and off. If you really like one a lot, you don't want to see others happen, you can do that. But really, that's all there is to it. I mean, as far as using it goes. And, it's just real simple. turn them on, let it run, and there you go. There's one thing down here though that I want to talk about. Because the AI, if you look over here on the left, it says the rating. Let me see here. The rating of the current signal right there. Let me pull this out of the way. Actually, I'll just sort of hide it for a second. Let's see. So if I click anywhere, let's see. Let me click on this volatility breakout signal. It says that one has a 65 rating, which is like an accuracy. It's not really accuracy, but it's a similar concept. And that this was found, this rule, not volatility breakout, because there's lots of those in here. Each one is a different rule, probably, because there's like thousands, right? So the rule, we don't know which rule it was, but the rule that fired that happened 466 times in the training data. So we train on US stocks over a period of about, I think it's 8 years. And so 500 times that rule fired, and 65% of them were profitable. And the average profit that those rules made is 1.72%. That's a good rule. Okay, so if I click another one, let's see a swing trade here. This one was 75% accurate, roughly, 200 times in the data for a 6% profit per trade. So you tend to want to trade the ones that have more potential, that have on average shown higher numbers, and you'll see numbers bigger than this. So, and we also, thanks to the folks at MetaStock, helped us figure this out, is how to put these stops on here. So we adjust stops with a like a trade plan, like a set of stops that we have in the strategy in Fulgent, and you need those to have an exit. So it'll tell you where the current exit is. So anywhere along here, it'll say, okay, if you were right there, your exit should be at 166.8 if you're just following what we did. Now you can do your own thing, of course, it's fine. But if you're following what's in the way it was done, then that's what you would do. So it's kind of just self-contained. So you go through a few more here. Oh, no. What I was going to show you next, this is important. I'm on a roll here on Fulgent. So if I go to the interface again, you'll notice down here these numbers. So right now it says show all. Well, because I know this over here, I have this accuracy, I can say just show me the ones that are better than X, the ones that are better than 70, the ones that are better than 75, the ones that are better than 80, and it'll do that. Okay. Let's bring it up. Let's look at the ones, let's see, let's do 70 plus. Okay, so I click that. It's configuring the engine to just look for those. All right. And it may have already done it. I'm not sure what. There we go. Okay, finished. All right, so now I'm going to let's bring this out of the way, and let me refresh the chart. Actually, it's going to make that go behind anyway. And okay, well these are all really pretty good. All right, so it doesn't show that 65 I had over here, but these guys are all above 70. Let's do it again. Let's look at be a little more adventurous here. Let's go 75. And I'll go ahead and go up the scale here. You can see what happens. What you should see is the sort of better signals should emerge as I crank down on this. Okay, so let's see. Let me actually back out a little more. There we go. Okay, and let's refresh the chart after making that change. So, okay, Fulgent, what do you got? Still, these are all still very, very highly accurate. So that should be, yeah, 75%. So let's keep going. Let's do another couple times here. Fulgent, and let's make that an 80. So this is just if you want, generally for the predictions to be historically above a certain level of accuracy, this is how you would do that. And it's up to the user. I like to get more signals to look at rather than have it filter them out. That's just me. But some people really like this feature because they want to see less. So go ahead and do this again. And okay, now you see there's fewer, but boom, 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 boom. And now I'm in a quick move going down over here. So every signal in that chart moved in the direction, every point moved in the direction of the signal after the signal. So that's like 100% accurate right there. Just this sample of signals. And of course I can keep going looking at more charts. Now, however you set that thing is the way it's going to behave when you run the Explorer. Because you can, I'll mention that in a second here, you can run the Explorer to find all of any of these signals or a specific one on the right edge in any data you want. Just, target it, You run the exploration. I'm sure you've done that in MetaStock with the Fulgent AI system turned on, and it will then show you every opportunity that it finds. And so, I mean, my goodness, I don't know that you see anything in a stock system that you just buy somewhere. You're not going to see signals like this. I don't think. So that's why it's so valuable. Is it is really able to look at years of daily data, testing every one of these things to find these rules, and then deliver them to you in a few seconds. When you think about what it's doing in the knowledge base to find these, looking at every bar of data in that chart, it is blinding fast. And I attribute my programmers for that because they're really good. So, you know, it wasn't me, it was them. All right, so there's just a couple of examples. Let's go ahead and go back to, if we have time, I can do some more charts at the end if we line up that way. All right, so here we go. So that is the expert advisor. So I want to talk about some of the other things you can do with Fulgent. There's two other features that we provide with it in the MetaStock repository. The first is a system test. So this is a MetaStock system test we did on the Fulgent AI systems versus the other experts that are just default in MetaStock, like you know, Bollinger Band expert and the CCI expert and the MACD expert. We just ran all those. I think I picked whatever, 6 of them, 7. And this is what happened. And this consistently happens when I run Fulgent against just, you know, the ones that are, and these are good systems too. So nothing wrong with them. But again, it has an advantage because it's able to do this testing over all the data rather than just an indicator. So also I mentioned the fact that the Explorer is able to find these signals, and I would run it live for you, but because it is doing so much work in the knowledge base, it's about 3 seconds per symbol. So we'd be here a while watching it, but that's not very bad. I mean, you turn it on after the close, give it I mean, if you're going to look at the whole market, it'll be done what, an hour, something like that. Who cares? But it's not for a demo. It's not real fast. So 3 seconds per symbol if you load 500 bars. So I just want to show you a picture of it right now. But there's these columns that we added in the exploration, long and short. So those are new long signals and new short signals. We did something a little better than that, because often you'll get a signal that is not quite what I call confirmed. Like it looks like a good place to go long, but the chart is going down really fast, and you don't want to buy against that trend until you see it turn. And so you see the signal, and maybe the next day is when it turns, or even the next day, and then you see it. You go, okay, AI was a little early, but it sees it. And so that's what this in long, in short is for. It'll tell you how many bars ago that signal fired. This says, you can't really read it, but it says 4. So there's a 1 for in long and 4 bars. So 4 bars back is when that fired. And of course, you know, you can double click this and it'll show you the chart. And then over here, remember that statistic I gave you as to how many times it occurred in the training data? We call those hits. How many hits did the rule have, the individual rule that fired this signal? And it's 156 here. If I go down, you'll see 200, 300, 400 in some cases. And a lot of people will optimize to how many times did this happen in the training data. How accurate, you know, 79% accurate, 75% accurate, 79, 79, 76, and you'll see 80s come up. So that's of all the hits in the historical data, you know, how many what was the percent profitable and the average profit per trade. And again, you'll see big numbers. I mean, really nice thing to find is like an 80 plus with a more than 3 or 4% profit per trade. That's a really good rule, depending on how many times it happened. And then of course you got the close here. So it's really simple. You just run it, bring it up, you know, I'd sort on the in long, first long, see if you have any new ones, and then in long, and just start clicking through these and see the ones that look pretty juicy over here and see what they are, and select the ones that meet your requirements, you know, for trading, depending on how you're trading. There's a lot of different ways people trade, but for just candidates that are very, very, very likely to move up or down, it's great. Okay. All right. Now, let's talk about the next section here. Let me check the time real quick. We're doing good. All right. This thing is customizable. You saw me just use it. I turned it on. I ran it, you know, on the charts. It gives all the signals. Explorer gives all the signals. But there's a lot you can do with it. First off, you can do long, shorts, or both. So we have in the interface here. There are controls. You may have seen it when I brought it up, but If I go into one of the experts, let's see, there's FT stocks, which is what it is. See, there's longs and shorts. I have the shorts turned off on these guys because they're longer term signals. I love shorts on quick move. They're great. So that's just my preference, but you can do, they're capable of doing both. So you can do what you want there. All right, so that's one. Let's see. Then we have, oh yeah, okay. Then this is actually probably should be the core part of my presentation today, because to me, if you're doing anything with MetaStock with technical indicators, you've learned how to trade, and it doesn't matter who made it. It could be one of the presenters, here. There's recommendations they're going to have for you based on the techniques that they have developed in their lives. Whatever it is, if you can code it in MetaStock in a simple way, or it doesn't really matter, it can be complicated. You can actually tell it to train the AI against those conditions. So there you go. This is an actual run that I did, training quick move on this condition, RSI 3 less than 30. So here's RSI down here, and I've just color coded, less than 30 is kind of an oversold situation, greater than 70 is an overbought, as we know, and there's a lot of ways to interpret RSI, but this is a pretty good way. And so, what it does is you go into a file. I'm going to show you where it is. It's real simple. See if I go back into MetaStock here. Hold on. Okay, good. All right, and let me do tools, indicator builder, and I want to edit this thing called Fulgent user inputs. This little file is run. It's something that the Fulgent thing uses to do various. There's stuff down here about converting volatility, and there's things that you don't need to work. Just don't worry about that. Don't look down there. What you want to look at is up here. This little area right here. Train longs equals RSI 3 less than 30. That's a condition. Train shorts equals RSI 3, sorry, not 30, 3 greater than 70. So whatever you have, you may have written a function in MetaStock that you can call from here that is a little more complicated, or it could be, MACD yesterday less than 0 and today greater than 0. It doesn't matter what it is. You do that, and then you go into Fulgent and you tell it to retrain the AI on what you just did. And the way you do that is you go into, sorry, too many things to click on. You go into here. Let's see, it's the Explorer. So, close this. So the Explorer, and there's a exploration called Fulgent AI Training. You check that guy right there. I've been using it, so I've been just on the, using the signals in the knowledge base. You check that guy, okay? Now I'm not gonna leave it checked because I'll forget I did it, but you check that guy, and then you run the exploration, and that's it. And it will train however much data you put up here. It will train a brand new knowledge base on that data with your thing required. So it's only looking for places where that is true and training to those points. So you'll get 2,000-3,000 rules around your condition, and it's pretty exciting what you can do with that. So you're making your own AI system basically. So you let it train, you'll see it training, you'll see it actually building up a graph of the rules, like as it makes them, it'll tell you how many it's found so far and how accurate they are. And you can stop it whenever you want, let it run overnight. I mean, typically an hour is enough time really to do it. But so it's very easy to do. You just check that, run the exploration, and in the exploration, it is getting the data from all the charts and then running, doing the AI rule genetic algorithm thing and making these rules. After you do that, then in Fulgent, what you will see is a brand new version of your strategy. And so here's one that I did in the last webinar. And all you do is say, I want to use that one, and that's it. And now when I can go and refresh the chart right now with that selected, and you'll see, I don't know what that training was, a demo, I'm not sure. And it was only on quick move. So I need to, hold on here. Go back here, tools. Yeah, so what I did before I ran the training in here is I just, let's see. Yeah, so I just basically had this one expert selected and had it to train to that. So, and that's a different one, sorry, here. I've trained it twice. You can train as many times as you want. So you can create as many versions of the Fulgent system on your indicator as you want, and then test them, see how they work, you know, from the AI. But to do that test, I just had Quick Move turned on and ran it. So, and I've got the accuracy too high here, so it's not doing several things, but I think you get the idea. You just go into here, turn on the ones you want to train, and then you run that exploration and it trains it. I'll go ahead and go back to just selecting that where we were. Okay, all right, and let's see, I was on 80. Okay, I'm back where I was. Okay, so let me go back here. And so those are actual signals from doing that. And like I said, I think this is one of the biggest values of this. There's a system test I did after I ran that. I guess just a regular RS, the same thing, but without any training, does this. After you train it, it did this. So it's great. Only things I want to tell you about are that it doesn't matter. The question I always get these webinars is, does it work in real time? Does it work on the futures or Forex? It's market data. It's market data. Markets behave consistently. That's why we use technical analysis, because it measures greed and fear. And so, yeah, you can train it to any market. You don't want to train it, you know, run the training, run the exploration that trains it, but it doesn't matter what market. So that's really what it is and how it works. And I hope I've done it justice, because the guys here sure worked hard on it. So in a summary then, and I'll take questions after this. So obviously integrated seamlessly. We've got 4 experts provided with different kinds of situations. Quick Move is looking for very short 3 to 5 bar moves. Major Reversal, long moves. It sees enough force that it says, yeah, you next 30, 40 days, you should get a move here. And then there's a Volatility Breakout, which is looking for breakouts in the chart. That's what it's training to. And then Swing Trades, which looks for a MACD-like situation where a chart appears to be turning around. It will train to those points to find the rules that line up with that find the best signals. And you can do it on your own thing, which I find extremely valuable. Okay. All right, so Jeff, I think I'm ready for questions if you got some for me.
We absolutely do. Jacob has asked this question a couple times. How is this different from curve fitting?
Different what? Sorry.
From curve fitting.
Okay, that's a really good question. So we know it's easy to curve fit using indicators. You just keep changing things until your data matches, you know, gets a good match. What this is doing, it's like what I first showed, you know, Bollinger Band contracting, this is happening. You're looking for opportunities that have been found many times in the data. So it's not curve fitting, it's finding things that have been profitable in the past over many times, hundreds of times in the past data. And that's your opportunity. So, you know, and they're not always correct. But if you're going to trade something, wouldn't you rather have something that found that when these, you know, 20 things line up or 10 things line up, that in the past, the chart has gone up. It doesn't mean it's going to, it's not 100% accurate, but it's a really, you know, a really good candidate. So it's finding these rules to find those candidates, and there's thousands of them. So it's not one thing. I'm not curve fitting to one system. It's opportunities. It's just generating them.
All right. Benjamin wants to know if the red dot, what the red dot on the chart means.
The red dot is the exit.
Okay.
Yeah.
Neil wants to know, will it work on all time frames?
Yeah.
Let's see. Okay, cool. These are easy questions. We're knocking them out. Vivek wants to know what percentage of the AI calls are accurate.
Well, it depends. I mean, so the market's always changing. So, you know, some markets that just go flat and don't move, it may see a situation in that market and fire a signal on it. So, I mean, the only way to really gauge that is to trade with it and move forward in time. What we have found is just consistently in all the webinars I've done and just looking, you can see those signals in the charts. The AI has not been retrained because it was really good. So that's a 2019 training is what you're looking at. And, you know, you would think, well, wouldn't you just keep retraining it? You can, but this is looking at a lot of historical data. So you don't really need to do that. And if you're going to use a different market like futures or something that we didn't train on, sure. But it's just held up beautifully. I mean, all those signals you saw that were just like almost perfect, those were generated 3 years ago. I mean, really, because that's when it was built. So, yeah, I don't know if I answered that, but it's
for sure.
It's accurate.
Yeah, okay. We have a couple questions around this. Does this work on Thinkorswim?
Well, they're their own platform. They have their own stuff. It works with MetaStock.
Okay.
You got to have MetaStock, which is not a Thinkorswim thing.
Yeah, and we can give you an upgrade to MetaStock. I'll talk about that in a minute. So cool. There you go. Jacob says, thank you. Neil says, very interesting presentation, thank you. Penny wants to know, can the trades be generated and then auto-traded?
Auto-traded. You'd have to have something that can send the trades to a broker. So, you know, I don't know if there's an add-on for MetaStock that does that, but I mean, that's what you have to do it. So
not yet. Yeah. Option wants to know, how large is the pool of indicators that the AI searches? And can you see what indicators the strategy is using?
No, that's a good question.
Thank you, Option.
Yeah, that is buried inside there. I could show you, but then I'd have to, you know, I mean, I'm kidding.
Get really deep in the hood, probably, right?
I could bring that up if you'd like me to, Jeffrey. I could show it, but because it's deep in the engine, and you just see hundreds of indicators in there and relationships that have been coded, and but since they can't see it, I don't do that in webinars because you can't get to it.
Mm-hmm.
But
yeah, I think it's okay not to. I think it might take us over time. So.
Yeah. I wanted to show the manual is one thing. It's really documented well. Jeff may comment on this, but we cover everything about using this. Even retraining on your own indicators is way down here. Every step. So I just want to make sure I pointed this out. Go ahead, Jeff.
That's one thing that Kelly and I was talking about, the fact that you can go in and if you've written a piece of MetaStock code, you can put it in and you can have it send it through the Fulgent AI. I think it's the coolest thing ever. So. In fact, let's see. Vivek says, wow, exclamation points. I'm glad you enjoyed the presentation, Vivek. Ruslan says, I have AI, but have not used it to its maximum potential. Do you have additional training on the system? And I'll let you talk, and then I'll talk about some of the YouTube resources that are available as well, but I'll let you answer it first.
Okay. No, probably what you would say, we have done that before, and because it's so turnkey, the control you have is how much accuracy do you want in the history of the rules that you're using, and what if you want to train it, what indicator do you find to be generally predictive, because this will enhance that predictability a lot. So anything you found to be even just a little useful in trading, put it in here, run it, train it, and this section is actually about that I stopped on. You will see just amazing stuff. There's that, you know, that place I told you to do that, and just run the exploration to train it. But so there, I'm kind of implying that there isn't. Here's what it looks like when it's training. This is interesting. You actually see the rules generated. So it's finding rules as it goes along, and this is how, you know, this is profit per trade is what it's set to, but that's how much better they're getting. It gets this made 330 rules in this run. But so if I was to do training, it's almost like you'd want to talk about which indicators are good or predictive, you know, so you could put one in there, because the manual's very detailed. And so, but if you could tell me where you feel weak, like if you had training, what would it be on? That would be really useful to know that.
Yeah, definitely send us that info. The thing I was going to say is, you know, Ed and I have done dozens and dozens of webinars, and we've went through kind of like everything from creating code to testing indicators to writing indicators. So if you go to youtube.com/metastock, there's a little search the channel button you can do. And it's after you like and subscribe, go ahead and search for Ed Downs on the Fulgent channel, and it will give you all kinds of different classes that you can go through that we've done in the past. So Kurti wants to say this is a MetaStock question off topic, this presentation. Does MetaStock work with any trading platform? Yes, you can use, so I'll answer that directly, Kurti. MetaStock doesn't do trading for you. They always say focus on what you're good at, right? What MetaStock is really helpful is helping you identify the right trades, helping you test trading ideas. We're gonna have Scott in just a second come in and talk about the forecasting and how you can use that. We're not a broker though. You don't have to give us your trading account. You don't have to fund a brokerage account. We're a software, and if it's valuable for you, it's a very, very low lease cost that you have to pay. So appreciate that question, and we're definitely going to get into a little bit more detail, but there's the 1,000-foot view. Dave wants to know, can I train the AI using several of my indicator rules simultaneously?
Yeah, you just make your function and them together, like the things that you want to see occur. You'd say this and this and this.
Okay, and then let's see, excellent job, Neil says this, excellent job on explaining the difference between neural networks and genetic algorithms. I appreciate that. Thank you. And then Ruslan says, thank you for the information. So a lot of really good comments, not unexpectedly. So, all right.
Well, I appreciate that very much. Thank you.
I think I'm going to just kind of talk a little bit. Let me take over a little bit. We got to the end of the questions. Let me grab the thing here, and I want to talk a little bit about how the licensing works and how people can get it. So,
all right.
And I appreciate your coming in. Great time, as always. Thank you for all the work you've done too. I appreciate it.
You're welcome. It's fun.
All right, cool. Let me go ahead and just kind of make a few changes right here. We'll go ahead and do this. We will take control, and I'm going to show the screen here. Yes, okay. And then make sure to tell me, Kelly, if you can't see my screen, you should be able to see Fulgent AI and not just a big picture of me. So I should be sharing the screen.
Looks good, Jeff.
All right, cool. All right, so as you kind of saw, Ed does such a good job of actually kind of showing you how, how it's integrated. But I do like the fact that it's got the expert commentary. You have the systems in there. You have the system testing. If you're a little bit of a formula programmer and you want to do AI with your own systems, you can do that. Just the integration is awesome. And of course, I've been talking all week long about how I love to be able to just run my market scans every day. And it does have market scans, of course. So there you go. With this, it's available now as a one-time cost. You can buy it. You'll own it forever. It's not something that you have to pay for on a monthly basis. It's normally a product that we sell for $2,000, $1997. If you lease it, if you purchase it today, we're going to give you a price of $997. That's a one-time cost. We'll give you a 30-day money-back guarantee on it, which means you can try it. If you're not happy with it, you can get a refund. As a trader, I love low-risk opportunities. I wish my trades came like this, but if it's helpful for you, if you like it, if it's something that you want, keep it. MetaStock.com/conf promo. You can chat online with us at MetaStock.com/sales chat. If you have any questions, our sales team can answer them. 800-882-3040 or MetaStock.com/sales chat. So Neil says, I'm not familiar with MetaStock, what it is, how it works, or how to use it. Are we going to provide an overview on it? Yes. Actually, the next presenter is going to talk about one of the patented parts of MetaStock called the forecaster, and he's coming right up. There is also a video that we tried to play earlier called What is MetaStock, but we'll be happy to give you kind of an overview. In fact, I'll talk a little bit about what MetaStock is, just from a high level. We'll jump to this screen real quick, and then I'm going to go back and thank a sponsor. But MetaStock is a software program. We've been making it since 1980-something. For 30 years in a row, it's been rated #1 in its price category by the readers of Stocks and Commodities magazine. What is it? Well, it's got a lot of tools in it, as you'd expect for a software that's 30 years in development, but it helps you test market trading ideas. It can help you scan through any market that you want to kind of eliminate the stocks that you're not interested in and find the ones that you are interested in. It has a forecaster that we're going to talk a lot about in just a second. It can give you real-time alerts, commentary, signal. It's a decision support platform. So appreciate that question because it gives me a good time to give you like an overview of MetaStock. What we're doing here is if you want to try our software that's been rated #1 30 years in a row, if you subscribe for a month, we're going to give you the second and the third month for free. In addition to that, that comes with no commitment. So, I mean, if you're here in the US and you do the end of day subscription, it'll cost you $69. And that'll get you going until May 22nd, right? So it's about $23 per month is what you'll pay. In addition to that, we will give you, in addition to giving you the second and third month for free, we'll give you some training that you can go through at home that talks about how to scan, some of our favorite systems, some of the tips and tricks that are in MetaStock. And in addition to that, we'll actually even sit you down for up to 2-hour appointment, what we call a white glove installation appointment, where somebody will actually help you understand the program and walk you through it. So it's a good opportunity. I love MetaStock. I wouldn't trade without it. If you want to try the software, give us a call at 800-882-3040, or you can sign up here at metastock.com/conf-promo. So there you go. Kelly, are you ready to do a prize drawing? We have some fabulous prizes that we're going to give away right now.
I am ready to give away some prizes. Let's do it, Jeff.
Perfect. Do you remember what the number was?
It was 12,523 at the top, I think, if I remember right.
That is correct. Your memory is just freaky good. So
that's crazy.
All right, so you know what to do then. Just give me a number between 1 and 12,523.
All right, I think we're gonna go low this time, and I think we'll do 872.
That is Fujoy in India that has a Gmail account. So if you're watching Sujoy, that's not Sujoy. If you're watching, you won a prize. What did you win? Well, let's figure that out together. Hold on just a second. Let me kind of come over here. And what I'm going to do for you is we're going to give you a copy of the Trend Radar Indicator from Trading Indicators. It's a $197 value. And it's this works with MetaStock. It'll give you a bird's eye view of the current trends. It allows you to quickly gauge information for many time periods easily. And it's a really, really cool interface that they've done with MetaStock. So we're going to give that to you free of charge. I will say that it does require MetaStock to run. And if you don't have a copy of MetaStock, I'll throw in a trial so you can try it out. So we'll reach out to you with information on how you can get that prize. And you should get that email from me within about a week or so. So
awesome, that's a great prize. Congratulations.
Heck yeah. Well, Curdy wanted to guess. Maybe next time we'll go with Curdy's answer of 58.75. I'm going to write that down. Curdy, you just pick the next winner, and we'll talk about that after Scott. Before we move on to Scott, though, I do want to say thank you again to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a great magazine. I get it every month, and it always is I mean, you know the importance of education because you're on a Wednesday during the middle of the trading day learning about different methods to trade. The reason I like Stocks and Commodities is they will deliver you trading education. You're always getting better or you're getting worse, right? This will help you get better. So if you do a MetaStock subscription today, they're going to give you 5 months for free. If you spend $300 or more, they're actually going to give you 2 years for free. So a big thank you to Stocks and Commodities for sponsoring the event. We do appreciate it. And they've been sponsors forever. So our next guest is Scott Brown. Scott has been, well, he's the owner of MetaStock, and he's been a friend of mine for a number of years. One of the nicest guys you will ever meet, and I mean that sincerely. He's going to talk today about the forecaster, the patented forecaster that we have. And let's go ahead and make sure we can hear you, Scott Brown.
Hey, can you hear me okay?
Yeah. Now,
let's go.
I'm going to make you an organizer so you can see all the great questions that come in. I'll remind you, and then I'm going to make you the presenter.
It really resembles me. I probably have gotten much more handsome through the years.
Yeah, it does, yeah.
Hey, another thing I wanted to say to you, Jeff, first off, a big thank you. I know you and Kelly don't get enough credit for putting this on, and really appreciate it. And I know all the traders out there are absolutely, very happy about, what we're doing there. The other thing I wanted to point out is I was missing my license plate from last year, and at least I know who took it.
You know, one time somebody asked me, like, are those all cars I wrecked? They are not all cars I've wrecked.
You're like, well, we'll see about that.
All right. Well,
Oh,
we can
that is
see the non-expanded view of your PowerPoint, which I'm sure as soon as you
okay.
start,
Okay,
you'll see it.
let me pull everything up, my friend,
Okay.
and we will. I got to move this out of the way. Hide the control panel. And now let's pretend that that's how it was supposed to be.
It looks perfect to me. I didn't see anything. It's on
Okay.
you, Scott. You're
Hey, thanks so
running
much,
it.
Jeff.
Of course.
Hey, I sure appreciate being here, everyone. If you've been a part of MetaStock, you've known Kelly Clement and Jeff Gibby, you know, for over 20 years. Jeff's been here almost 25 years. It's insane that we've all kind of grown up together, had our kids and worked and done everything together. And you know, I've been with MetaStock for, I don't know, let's say 22 years. And I started out as an average sales rep, and then I moved into our global distributor ship, making sure all of our partners, managing those. And that's when I really got to work really close with Kelly and Jeff. We were on the same team. And then kind of was in charge of sales and marketing, and moved on from there, did product management as well, and then became the president of the company. And we were owned by Reuters at the time, and Reuters, and then it became Thomson Reuters, and then kind of the big recession came, and they were trying to divest companies, even though they were doing really well. They didn't want to deal with a retail customer company, and so first time I ever met my boss, I was in New York City. He had just come from Deutsche Bank from Germany, and we had just met for the first time. And in the first 15 minutes, he told me how Thomson Reuters had to get back to its core business. And so I finally asked him on the third time that, you know, are you going to sell us? And he said, yeah. And I said, well, can I buy it? And he said, sure. And so it took us about a year to create and finalize that transaction. And that was almost 10 years ago in June. So we're coming up on our 10th anniversary of being kind of independent again. And over the last 10 years, you've seen a lot of great development on MetaStock. In fact, much more development than the previous 20 years combined. So, you know, great job to the team and everything that they're doing. And really what I'm getting at here is we're going to show you a piece of that. MetaStock's been around since the late 80s. And MetaStock is a very, you know, high tier technical analysis, you know, software that's out there that traders, both institutional and retail traders use around the world. You know, we're in over, I want to say, you know, probably 95 countries that we have clients. And, you know, that's pretty amazing. We provide global data and those things. And what we're going to talk about now is actually the MetaStock forecaster. And the reason why I told you the story before about when I bought the company is there was a programmer out there named Ken Hunt. And Ken Hunt actually created backtesting in MetaStock and was really the first programmer out there to put backtesting inside of a trading software in the world. He's been with the company, I think, now over 35 years. Our average programmer has been here for over 15 years. So you have a lot of depth and experience, you know, that are working on your trading software. Well, right before I bought MetaStock, Ken Hunt was getting bored because he was working for a large company, and I'm sure a lot of you out there can relate to this, where he says, "Hey, look, man, I'm really done working for a company that doesn't want me to innovate. They just kind of wanted him to build a chart." And so he quit Thomson Reuters about 2 or 3 years before I bought the company. Well, Ken and I remained good friends, and we'd go to lunch every 6 months or so and kind of catch up. And so when I knew I was buying MetaStock, what I wanted to do is bring him back on. So I called him up, and I think the best sales job I ever did was convince him to come back to MetaStock. And what he was working on in those previous 3 years was the MetaStock forecaster. So we were able to actually put all of his work that he focused on for 3 years into our software platform. And that's what we're going to talk about today. But before we do that, I cannot wait to share with you our disclaimer. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information and software and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decision based on the use of their software, any trading strategies, or any information provided in connection with the company. Come on, I know you're applauding behind your computer right now. I practice that all day today. Anyway, so enough of that. So we talked about how cool Technical Analysis of Stocks and Commodities magazine is. MetaStock has won it for 30 straight years, voted by the readers. And again, just a shout out to them. Buy $300 worth of product today, data, plugins, software, and you will get 2 years free of this great magazine. And you really, they go out and really interview the experts in our field, and it's a great magazine. So make sure you buy $300 worth of stuff and get 2 years free. I mean, I think that's cheaper than their 2-year subscription. So there you go. So let's talk about MetaStock. MetaStock, what does it do? What it does is it actually analyzes price action after past events to determine the probabilities of future price action. When Ken was creating this, he wanted it to answer the question, where are prices most likely to go in the future after an event occurs? And when we say an event, it can be anything including, basically their indicators or trading systems. Examples would be crossovers, divergences, overbought, oversold, breakouts, or candle patterns. Inside the MetaStock forecaster, we can draw our own patterns. We can copy patterns directly from the chart, rank recognized events, and new included event recognizers. One of the things that I'm asked all the time for the last 22 years of working at MetaStock, and when I present is, hey, someone will raise their hand. Do you guys have a cup and handle pattern? And at the time we didn't have one, and I would be like, no, sorry, we don't have one. And come back to the office and be like, hey guys, I just got requested for the cup and handle pattern. Let's create one. Well, now you can actually just draw your own pattern with your mouse. How cool is that? You can reverse it, invert it. It really is a powerful tool. So the MetaStock forecaster really emphasizes the past, and technical analysis with the forecaster really looks at the future. And it involves complex statistics and probability analysis that are really blended into simple, easy to understand probability clouds. So let's look at this. I mean, here's just an example. Right here, we're looking at Rio Tinto, okay? This is just a chart of it right here. Over here, we can do the map focus to 30 days, 90 days, or 180 days. Well, when any of these yellow upside down triangles or regular triangles appear on the chart, that is actually an event marker. You can click on that and it will then go back in time, and it will compile and project where it thinks the stock is going to move into the future. You can choose different recognized events down here. The probability map is definitely the heart of the forecaster. The brighter the color of this probability map, really kind of the more tendency and the higher the probability that the prices tend to congregate in the price zone. So if we can get it into the yellow, you really are sure of that. And we'll look at examples of this. But here's a map overlaid of Adobe system. And you can see the pink here, the red. And then you actually see what occurred after this event happened. And you can really tell, wow, look how well that did in following it. This was a map projected on the CCI over bot. Well, let's do this. I mean, come on, right? We want to get into the software. Let's not look at a PowerPoint. So let's jump into MetaStock. For all of those that are MetaStock users out there, thank you. Number one, we really appreciate you as customers. We do what we do to try and increase the analytics inside of a software that could help you out inside of your trading. And so those that are not MetaStock users, here's your kind of first shot of what MetaStock will look like when you bring it up, okay? Here's MetaStock 18 that we're looking at. And the first thing we're looking at is the Power Console, okay? Here's the Power Console. This is where the really, heartbeat of MetaStock really is, where you can come in here and say, I'm going to bring up a chart. I want to look at different quotes inside of it. I want to do explorations. I want to look at back testing. I want to look at the forecaster. I want to look at option scope. And there's so much power inside of the software. You really do need to try us out. And I know Jeff is really giving away the farm on this basically event, this conference we're having this week on trying to get people to use it. So take advantage of that. I know we're also doing great deals on upgrades and data and plugins. I know we just had Ed on here. He did such a great job with the Fulgent AI. I got to watch most of that. And man, those are the type of partners that MetaStock has. I mean, just before I dive into that, let's think about that for a minute, that you look at the list of presenters that Jeff got for this week. I think we have 40 of them. And those are pretty, those are big name people that are presenting with MetaStock. A lot of them have add-ons with us. And we've been around for, 30 plus years, almost, 40 plus years. It's a great company, right? You're dealing with a top-notch company, not a top, someone that's going to fly by. So, let's actually take an example here. Let's say someone out there is trading the E-mini, right? So we'll type in the E-mini symbol here. We'll load our default records, and then let's start the forecaster. Now, what occurs here is that you're going to see here the E-mini right here, okay? And we're actually going to kind of go through this really slow on this first example. And then I have some other stocks up here, Microsoft, Amazon, Chevron, Bitcoin, and Disney. And we're going to kind of go through those and look at how, the forecaster works and really try to give you an example after an example, so that when you're at home right now and you're a MetaStock 18 user, you can bring up the forecaster and you can follow along and do your own analysis as well. So the first thing that pops up is, again, here's a chart, about a 5-year chart of the E-mini, okay? Now under here, we can actually go through any of these different recognizers right here, and we can select those, okay? So if you wanted to look at highest profit potential long or short, most accurate current forecast, most pronounced current breakout, most distinct forecast cloud, most recent event, or most events. And what we can do is, let's take a look at these. Now, as I go down and select a new one, all of these recognizers behind us are changing. You see that, okay? And so let's go down all the way to the most events, okay? And we'll take a look at that. And what we're seeing, boy, we had such a run with all the 52 weekly highs. Here's the CCI oversold. Let's take a look at that. Let's look at the commodity channel index oversold. Now, these are the different recognizers that are here. Up on this tab right here, there's a tab that we're looking at right now called the forecast analysis. The tab next to it is called the recognizer library. And these are all the different event markers or trading systems or indicators that are inside of the MetaStock Forecaster version 18. This is another reason to upgrade. If you have an older version of MetaStock, you don't have probably all of our recognizers that are in here. So you can see all of them in here. Now let's come back here. You can do this in real time as well. This is a daily chart. Now down here, we can look at this in a 30, 90, or 180 bars. And you can come back here. Now under here is a statistical report. Now the event occurs 50 times between 2018 and 2023. On average, the event occurs every 24 price bars. The recent frequency of the event appears to be relatively unchanged. Recently, on average, there have been 4.785 events for every 100 price bars, while the long-term average, there have been 4.452. Now, and then it comes down here, it'll say the shortest gap is between events is 2 bars, the longest gap is 75 bars. Statistically speaking, 7 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 0.18% lower with a standard deviation of 0.0408. The statistical margin of error is approximately 14%. So you're getting a lot of information, that are already inside of MetaStock here. It truly is amazing. So the next thing, the next thing that we want to look at here is right here. Let's go ahead and pick one of these event markers. Now, right here is the price, volume, and event markers. That's what we're looking at. These are static images, right? So this event never changes. It will always be there on June 29th, 2020. So for example, let's say I want to click on that. I click on it and it will zoom in. And on June 29th, 2020, this is the cloud that we would have been looking at. Again, so now we come over here to our probability scale. If it's dark, it's a very low probability. The brighter the colors, the higher the probability that becomes. So as you can see here, there's yellow, and that's a very high probability that the price will go through that cloud. The next one is this really dark, red, and then you have pink. So we look at that, let's choose another one, right? Let's come in here and go, okay. Oh, wow, look how well this one looks at. An event marker, May 20th, 2021, and it followed it. Let's look at a 90 bar. Wow. So here's the yellow, and you had 90 bars of a cloud that were based on this event right here. If we wanted to even go further, we could go farther to 180 bars. And as you can see, it really called the trend well. Now, remember, this is based on statistical analysis. So when you have a trend like this for those indicators, and it's kind of dialed in, it'll make it a bit easier, I feel, for that cloud. So let's come in here, and what we'll do is let's look at a 30 bar. So what happens when it's going up and down, right? Well, right here, the yellow on 180 bar there. Oh, there you go. So back here at this event marker, July 15th, 2022, it said in the next 6 months, this is where we kind of feel, you know, the cloud is going to go. Let's see what it thought for 90 bars. Okay. And then we'll go up to 30 bars right here. Okay. So you can kind of get a different feel of how that works. Now, a lot of people will be like, oh, okay, well, I want to know what it's doing right now. And based on this cloud, and we'll come in here for a 90 bar. Let's take a cloud out here. Wow, look at that. That's pretty cool, isn't it? You'll see some bright yellow here, some bright pink, and then it kind of that pink goes to a purple and blue. But wow, look at that. It's coming all the way out here at about 23 to 30 future daily bars. And why and how of a, you know, what trader would this help? You know, really a specific trader that this would help would be an options trader, right? If someone could get an edge of what they think the price might go, they may be able to buy options, right? Pretty cheap out of the money and, you know, kind of see where that goes. So there you go. There's an example of that right here. And let's kind of go back here and we're going to look at different examples now. So the first one we're going to look at, I just chose some popular ones. Here's Microsoft. We're looking at the most accurate current forecast is what we're sorting it by. So if we come up here and we want to look at historical, you know, bars here, we could say, see, look, here's an example right here where it was bright yellow and it went well, but look, it didn't continue to go on like that because historically that was going up and it was bright. So that's just something to think about when you're looking at different, you know, trading and what's going on. If the market changes and that indicator, you know, it was going up, and now it's starting to go sideways or down, what was working there for a minute may not continue to work. Our last one that we see here, we're looking at the money flow index positive divergence from October 14th, 2022. You can see that right here, the pink, it really kind of followed that along. Let's look at a 90. Oh, wow. That's a pretty cool looking cloud there. Now, something else that you're going to look at is when we created this is we wanted to, you know, this cloud never changes, right? This is a static image and it just never will change. But you're getting new data every day, or you're getting new data every 5-minute bars or whatever time frame, you know, you have chose. So right here, what you can do is go into your forecast cloud. And what this will do is this will actually continue to evolve and change with new data that goes inside of it, right? So it's kind of like that AI performing, you know, on a stock here that you're looking at. And you can see, okay, well, in the next 60 trading bars, you know, we feel like, well, there's kind of more pink down here. It might be a little bit more negative than it is positive, or it may just kind of stay where it is, right? So that's something, you know, that you can look at right there. Let's go to our next one here in Amazon. What I chose here were the most events, because one of the reasons why I like to choose the most events when we choose the sorted by processed recognizers is the more events you have, the more data that your forecast cloud has. So anyone that's done statistics knows that, you know, the more data I have, the more probability I have, the greater I feel like I can say that it's going to go in here or there. Does that mean you're always right? No. Does that mean the forecaster is always right? Of course not. There's nothing out there in the trading world that is always right. Okay, let's just get past that right now. You are trying to put odds in your favor and probability, and that's what we feel like we can do, you know, with the software right here. So, you know, we come in here and let's say right here, there's a cloud here, and we come along, we want to see where some of these other clouds are going. Okay, the latest cloud on Amazon with the CCI overbought kind of feels that it's just gonna kind of be out there, and not too much of change, you know, is occurring, you know, with that Amazon stock. You can look at the forecast cloud and kind of see those price bars after event is recognized, bringing in data as well. Okay. Now, let me show you something super duper cool inside of the forecaster. I am about to blow your mind, so just hold on here. I know you're excited. Let's go like this. Okay, have you ever in your life wanted to, you looked at a chart and you said, oh, there's my perfect trade setup, right? And what I want to do with that perfect trade setup is I would love to create a pattern or, you know, something like that. So inside of our software, we can do that. If we come up here and click user defined pattern, and we come in here and we say, okay, let's select these 5 bars. I want 5 bars that are moving up, where the low of the day is at the, you know, bottom and it closes higher than that. It says, do you want to capture the selected price formation as a user defined pattern? So we say yes. What we'll call this is, let's call this, oh, whoops. Let's call this Jeff's super cool indicator. We named it after Jeff Gibby. There you go, Jeff. There's all the stuff that you want. We click save. You can also invert the pattern. You can reverse the pattern. You can say, I want the pattern match sensitivity to be medium. Default cloud, let's go 30 bars. And then let's click save. And we can do this for daily, weekly, monthly, quarterly, yearly, and intraday. So let's click save, and you'll see it right there. So I only want to look for that indicator on the chart. So I disabled all of them. I selected Jeff's super cool indicator, and I'm going to rescan the selected analysis for that one. Okay, so Jeff's super cool indicator on Amazon, we're looking at it here. And if you click on it, it'll say, oh, 85% match, 82% match, 87% match. How cool is that, guys? And we got a lot of data on this chart. So for fun, let's just kind of come back here and we'll start just popping some patterns on there. Ooh, let's go. Look at that pattern. That looks great. We'll select some more. And these ones are on 30-day. So let's select some here that the chart went up. We'll come down here. Man, look at that. Let's change it to a 90. Wow, looks pretty good. And then what we're obviously interested in is where's it going, right? And so with Amazon, with this specific indicator that we created, our last one, it's showing, hey, it might go up a few bucks in the next 67 bars. But how cool is that? You can take your highlighted, you can highlight any bars on that chart, and it will automatically create the pattern for you. Something else that is super cool, since we're doing that, if we go to Recognizer Library and we click Draw New Pattern, we can come in here and say Kelly's super cool indicator. And we can actually draw an indicator or you know, a pattern. You could do a head and shoulders, you know, whatever you want, but this is the one we're going to look at. Let's actually cut it down to 10 bars. And let's go ahead and click save. And let's enable or disable all of them except for Kelly's. Oh, there it is. Those two are going to fight now all day who has a cooler indicator. So let's rescan. Maybe we'll put them in the octagon and they got to battle it out. So here's one right here. Kelly's has looks like a few less indicators and or event markers, and the reason why is on Jeff's there was only 5 bars. This one you have to take 10 bars into account, but you can highlight it and it'll say it's got to be at least 75% match. Okay, so we can come in here and we put the default as 90 bars. We'll just kind of click as the chart goes, kind of see how they look and how it works. So when the market started dropping, it was struggling a little bit, as you can tell right there. But this is a reason why you kind of want to do that on your chart. You want to see if those clouds are always and continually showing you know, well, and really following the price action, making sure that it's there. So now what you want to do when you want to enable all of them again, you just go back to Recognizer Library, click on Enable, and now we have all of the, well, let's go here. So now we have them all enabled. Chevron, I thought this would be a really interesting one to look at because most stocks, right, have gone down over the last 6 months, 8 months type of idea. It hasn't been that great, but I know this will come as a shock to you, but Chevron is seeing new highs all the time. And in fact, what I did is I put this processed recognizer on highest profit potential, and I chose 52 weekly high. So every single time you see a yellow triangle, there was another 52 weekly high that was made. And you can see that happened 61 times. 61 times from January 2021 to today. So don't tell me Chevron's not making money and that gas is right, that this is someone else's problem. And of course, there's all of it comes into one. But this one right here, come on. This is a bit crazy here. And you can see how quickly and steep it goes up. Let's look at a 30 bar right here. And we'll start clicking on some of these event markers. You can come in here and see those. And it shot so high so quick that when it finally came down, those event markers thought it was going to continually go up. So let's look at this last one. It's dialed in right there on a 30 bar. Let's look at 90 bar. Wow, that is a really good looking cloud. Here's a good example of, okay, we have some pink that was, you know, when we did this, the last one, we were looking at, you know what, November probably 15th or 10th or something like that. And then all the way here to January 17th, we thought, hey, here's some price action. But then we thought it was going to drop a little bit back here. And that was, you know, quite a few bars, you know, that were out. And so again, if you're an options trader and you took some risk and went out, you know, a few months, you know, there's opportunities sometimes there that you can take and you can kind of look at and kind of see if that's really the way you want to go. Again, these right here in the price, volume, and event markers, these are static images and they don't change. If you want to get a quick glimpse at, okay, where's it going today? What's going on? You can see right here that it feels that Chevron is going to go down a little bit over the next 90 days. And that's with data that is coming in and things like that. So you know what, let's, for some fun, let's actually bring up an intraday. So let's go and we'll bring up the same type of chart. We'll go CVX.N. Let's go, let's do a 30-minute chart. And we'll take a look at that. So here's a 30-minute chart, and this will go back data-wise all the way to November 22nd. We can come in here and select the different process recognizer. Okay, let's look at most events. Oh, how funny is that? Jeff's super cool indicator is the first thing that pops up. Let's go instead to a moving average, 310 cross down. And you can kind of see, okay, Chevron, you know, over the last, since January, it's dropped a bit. So we can kind of look at these and kind of keep creeping across and look at 30. So this is trading on I think we selected a 30-minute chart. So again, you can do this intraday or interday. So kind of just giving you an example of how these clouds look. Well, that's nice. Called that downward movement really well there. Did it again as well. So what's it saying right now that the forecast cloud? It says it's continuing to go down. Okay. So that's Chevron on a 30-minute chart. How about we look at some Bitcoin? Okay. I know all of us out there went into a little bit of the cryptocurrency, right? And this chart looks all too familiar to all of us out there that went out and got that. And what we're looking at is really a money flow index, overbought, oversold. And when it rises up so quick, when it was flat like that, all of the historical data is based on that flat data. So when it zooms up like that, it can be a lot harder for it to calculate an accurate cloud. So for fun, we'll just kind of click on one of these and kind of go from there. Okay. Here would be one that would be, I would have thought that would have been a harder one. But look at that, how well it trailed it. And then we'll see where it's going right now. Okay, kind of called that upward movement there. Let's look at a 90 bar. So that's kind of, it looks like it's just going to kind of stay where it's been, like it's been doing for the last couple months. Nothing really is changing it based on the money flow index overbought. So that's kind of where that one was. And then our last one that we'll look at here is Disney. And what we're looking at right now is kind of a most distinct forecast cloud. And we can kind of look at these and kind of play with these. It's the stochastics oversold is what we're looking at. And let's kind of see where these go. Boy, that's a good looking cloud right there. It really kind of called it the whole way. There's another 90 or 30 bar. Okay. Wow. So on Disney, the stochastics oversold has really kind of looked pretty good. So where's it going now? Let's look at the latest one. And it's coming down a little bit, maybe shot up, but kind of just says it's just going to kind of remain the same based on that stochastics, you know, oversold. That's inside of that, you know, really it's working on. So there's some cool things here. Let me show you something. There's 67 event scans in the Explorer. So if you're looking for opportunities, we can come in here and go, let me show you how to use that. We can come to our Explorer. And this is a really great feature inside of MetaStock, is our Explorer. And you can actually do multiple explorations, which is really cool. But if you bring it down and you say, hey, I want to scan and look at the money flow index oversold. Let's select, let's come in here and we'll do, how about we do the NASDAQ 100? So we'll kind of make it an easy one. We're going to start that exploration. Okay. Well, there you go. How cool is that? It rejected all of them. So there's nothing right now that has a, you know, an event marker based on that, which is great because you don't want something that just brings in all kinds of stuff, you know, to you and has that. So how about we try another one? We'll do one more and see if we can find one there. Let's do a CCI negative and we'll get rid of the other one. Oh, whoops. Okay, there we go. And we'll do one more exploration. You see how quick that is, rejects all of them. But you get the hint of kind of what we're doing there. You can see that it will automatically bring that up. And if you do get a hit, you can actually then bring that chart up. I should probably have a little bit more data. Let's do that. Let's do a cross up and we'll do one more. Let's go S&P 500. Oh, let's not do two. So we'll come in here and this is really cool. You can see it will show you exactly what you have selected there. So we'll unselect that one, start an exploration. So this is scanning the S&P 500 and you can see really how quickly it does all of that for you. This is why MetaStock is such a powerful tool. I'm just demonstrating another one of those power tools, which is the Explorer. And really that, I mean, how long would it take you to go through 500 charts and try to figure out if the MACD cross up had happened? You know, it would take you forever, and this is going to take you less than a minute, you know, to go through all 500 of those. And that's what makes this super powerful. You could have in here, oh, we have a hit. Hooray! Because you can see right here, percent rejected. It's 99.7%. And now 99.8. We have this right here. And you can just double click on that. It'll bring open a chart. And what you could do is actually just go ahead and right click and bring up the forecaster. And then what we can do is you could come in here and you could look at the MACD cross up, and it would show you right here. Look, there's the event right there. So if you were interested in the MACD cross up and you went through the S&P 500, well, you got NiSource Inc. And now this would display your cloud and how that works. And so it's a very valuable tool with the scanning that's in the Explorer that ties into the forecaster. There's so many different rankings that we went over inside of the forecaster. Again, you can draw your own patterns in the forecaster. You can either draw it with your mouse, or what you could do is highlight some bars, and then that would also do that for you. So there's a double top right there. You can copy a pattern from the chart like we did, and it will show you what the pattern match confidence is. It's been 30 years in a row. My first slide was correct, that we've been rated the best technical analysis software for the last 30 years. So how much does this cost? You know, we've talked about MetaStock, and for the last hour, I know that you're heartbroken that it's over. I know, settle down. This is gonna be up on YouTube, and then you can go ahead and rewatch it time after time. So it costs, if you wanna go real time, that's our Zenith product, okay? And that would include your MetaStock. It's $265 a month, and that would get you the forecaster and the Explorer. If you want just end of day data, for MetaStock software, the Explorer, everything I showed you today, it's only $69 a month. Right now, we're actually going to give you a 3-month trial. You buy 1 month and you get 2 free. So, I mean, come on, that is such a great offer. It includes MetaStock 18, the data for the region of your choice. If you have any issues with your installation, our support team will help you do that. By the way, our support team, this is the best time to bring this up. Last month, when you call into MetaStock or chat in or email, each month, whoever contacts us, we send them an email for our survey. Last month, we got 100% customer satisfaction on our customer support. There's not many companies out there in the world that can definitely say that. And then there's a really great tool, Unleash the Power of MetaStock. And it's $99 normally, and it really tells you how to use MetaStock well. And we're going to give you that free as well. So 3 months, buy 1 month, get 2 free. You can call in at 1-800-882-3040. Again, 1-800-882-3040. You can do this online. If you don't want to call in, you can just go to metastock.com/sales-chat. They're all standing by right now. If you want to go to a landing page, it's metastock.com/SVOT341, and you can get this going. I really, really feel strongly about this. You know, I would not have spent the last 22 years of my career and then bought the company if I didn't feel MetaStock has made difference in lives of people out there. At the end of the day, you're a trader. The reason why you're attending this seminar right now, you're a trader. You're trying to figure out how to become better. Software comes and goes all the time, but when you've been in business for over 35 plus years, you're one of the big boys. We have clients in over, I think we're at over 90 plus countries. We have global data. We have institutional traders. I remember I just talked to Greg Morris. I mean, he was trading billions of dollars with MetaStock, okay? This is the big time software, and we're giving it to you at such a low price. You know, take that. I mean, how many times have you lost money on your trades because you're not using good tools? Come on, be educated, try this out. Let's see what you know, where you can go. And so with that, I really appreciate your time. And I think we just have a few minutes if there's any questions.
There are some questions for you, Scott, and none of them are, why are you so handsome and what products
I'm
do you
hurt.
use?
I'm hurt.
So, anyway, so Prakash says he's interested in subscribing to the DC version. He wants to know what kind of training is available with that.
Yeah. So one of the great things, this slide right here, that last bullet point is unleash the power of MetaStock. And what Kelly Clement does is every time we come out with a new upgrade, he creates an unleash the power of MetaStock. And it's going to have several chapters in it. And it's going to show you exactly how to use the forecaster. It's going to show you how to do back testing. Another great place for you to go is our youtube.com/metastock. And we have, I mean, just thousands of hours and millions of views of training up on our YouTube page. And then if you get into any problems, contact our support team and they'll help you out as well.
I would like to add, if you go to our YouTube channel, you should like and subscribe. It helps a great deal, and we appreciate it.
Yeah, it does. It does.
All right. Scott, thank you. I appreciate that.
Hey, thanks so much, Jeff. You've done a great job. Kelly, you're doing a great job. I really appreciate. I know all the traders appreciate this. Way to crush it.
All right. Thank you very much, Scott. And good to see you.
Go ahead and boot me.
All right. Prepare to be booted. Cool. Let's go ahead and do this. All right. And then I will show you the exact same screen here in just a second. Let me go ahead and make me the presenter. I share my screen. Hey, Tushar, we'll be ready for you in just a second. You're looking good. Your audio's not connected though, but your microphone's muted. Let's give that a go real quick. I show it self-muted.
Okay, all right, should be available now.
Yeah. Okay.
No, I was just going to say thanks for the compliment, but you can't beat Scott in terms of great looks.
No, and product usage, right?
I love the stock. It was great. I was enjoying it.
Yeah, he does a good job. So I do want to reiterate kind of with just the pricing that Scott went through. And Tushar will be right with you. We can hear you.
You want me to mute or?
If you want to, you can talk along with us if you want to. But so there's two versions of MetaStock. There's the real-time version and the end-of-day version, and it's called MetaStock RT and MetaStock DC. And the real difference is just really just like one is real-time and the other is just end-of-day only. So the real-time, actually the other real difference is MetaStock Zenith. It comes with a platform that they spent like $1 billion creating. It has some of the best news in the industry. We're not biased at all here at MetaStock about how awesome our software is, but they spent $1 billion on it, and it is a literal competitor to Bloomberg for $265 a month with MetaStock. So that includes MetaStock Zenith, that includes the data, that includes MetaStock, everything Scott showed you, everything we've been showing you all week with scanning and all that kind of stuff. So that's $265 a month. We have an end of day, what we call the DC version, that is $69 a month. It's $59 if you're not in the US, but if you're in the North America, it's $69. The special that we're doing today is if you pay for a month, you'll get the second and the third month for free. So it's a great way to try the program. There's no commitment after that. With that $69, you're going to get MetaStock. You're going to get either real-time or end-of-day data. And I mean, like if you're doing the DC version, you're going to get $23 a month to try the software that's really been rated number one for 30 years straight. So give it a go. You can give us a call at 800-882-3040. You can call us at metastock.com/sales chat. or you can get a hold of us at metastock.com/promo. There's a couple questions in here. Brian wants to know, can you talk about referring to other open intraday charts from one intraday chart? I'm not sure I understand that question, but if you want to, like if you're writing a formula and you want to refer to a different chart, you can. I'm not really sure that's the exact question you're asking, but if you restate it, I'll do my best to answer it. David says, thank you very much. Vivek says, does MetaStock have a Telegram WhatsApp group of it that we can join us? We are a learning community. We don't, but if you ever have any questions, we do have a forum site. We're always on our YouTube channel, and you can always ask our support team. They're great. So let's go ahead and kind of move on a little bit. Thank you, CMT, for sponsoring the event today. CMT is a hugely oh, cool. I answered your question. I'm glad. Thank you. I'm glad that that was what you were asking. I thought that's what you meant. So anyway, CMT Association has been, and the function that you particularly look for that then, Brian, is look for the security function. It allows you in the language to refer to any other security that you want. So anyway, thank you to CMT Association. If you do work for a bank, or you want to work for a bank, or you have assets under management, or if you just want 3 cool letters to put after your name, CMT, you should look at the CMT Association. They are hugely, very well-respected organization. They've been sponsoring the events of MetaStock for, I think, just about 1.5 years now, but they do a great job. We appreciate them. And you can find out more about that at cmtassociation.org. So there you go. Okay. And then we talked about MetaStock. Do the extended trial. I wouldn't trade without MetaStock. You should give it a go. It has been rated #1 30 years in a row. So our next guest, as you guessed, is Tushar Chande. Tushar, before I want you to talk, I'm going to kind of just talk a little bit about you. As you know, as you guys all know, we've been working at MetaStock. I think the average tenure for an employee is like 13 or 14 years. I've been there for 26 years. And for a good chunk of that time, we do a lot of, obviously, system testing. And one of the power tools in MetaStock is system testing. And so we've run probably hundreds, thousands and thousands of tests on different markets all over the place. And one of the systems that always comes up very, very well, there's a couple of them, but one of them that is coming to mind specifically is called the stochastic RSI. It's a system that Tushar Chande developed with Stanley Kroll. It's built in MetaStock for free, and it's a really, really good system. Tushar is a very good analytics. As you can see, he wrote Beyond Technical Analysis and The New Technical Trader. But when he contacted me and said, hey, I want to write some add-ons and some methodologies for MetaStock, I was like, let's do it. So that's the introduction you're going to get. Tushar, I hope you liked it.
Oh man, that's very generous.
We're going to make you the presenter. Here we go. And I'm just going to make sure we can see your screen before I get out of the way. So we can hear you and we can see you.
You can see my screen?
And I can see your screen, yes. So
okay.
It's your turn. Go.
Okay, thank you. Thanks for a great introduction. I have been enjoying all the presentations this morning, and I hope all of you have been as well. And thank you so much for being here. And if you listen to the Fulgent AI presentation, my presentation is going to be the exact opposite of their presentation, because they had thousands and thousands of indicators and God knows how many rules. I have only 2 rules, and at the most I can make them 4 rules. So in terms of, they have max complexity, I have min complexity or max simplicity. So thank you for setting up this very interesting contrast between sort of their approach, which is also really fascinating, and my approach. So let's talk about how I do things. So we're going to talk about something called the Chande trend meter, which is sort of a multi-tool for measuring trend strength. And if you look at across technical analysis, it's all about measuring trend strength. So here's my routine disclaimer. Please take a look at it. Main thing is that the past performance is not necessarily indicative of future results, and so on. I have one additional disclaimer. That's just that the pictures and scans I will show you today are for explanatory purposes and may not exactly match the templates that are in the toolkit that you can get with the link that's on the screen. And I will focus on 3 items from that toolkit, the trend meter and then 2 exits. And I'll show you how by just using those 2 things, you can pretty much find unlimited number of trading opportunities. And this is a very robust approach, and I'll try to convince you that my approach to simplicity is a very valid alternative to max complexity. All right, here we go. So this is my favorite modern philosopher, Yogi Berra. He's used to be a baseball player and manager. So he's made a number of fabulous quotes, but this is the one I find interesting. He said that you don't have to swing hard to hit a home run. If you got the timing, it'll go. And I think it applies to trading, because if you have a well-timed entry into a super strong trend, hey, that could be your home run for the day. So let's talk about how you could get a well-timed entry into a super strong trend. So let's just dive into the chart. This is the hourly chart of Tesla. In the upper panel, I have the Chande trend meter. The scale is from 0 to 100. I have 2 solid lines, green lines at 80 and 20. And then I have 2 dashed lines at 90 and 10. So that gives you a sense of scale. And you see that if without knowing anything about this indicator, you can see that if you look in the red box, it was below the solid green line, it was below 20, and then it was also below 10 for some portion of the time. So this is an indicator of a strong downtrend. So if you traded this strong downtrend signal, you would have gone short somewhere here. Once you're short the market or you have a position, you don't really care what happens in the upper panel. You're just using a trailing stop to get you out, and you would have exited somewhere in this area. And that's an hourly chart. This is a trend following approach, and a market is weak, so you're short. Now let's look at that part of the chart. That's on the next slide. So here we have, again, CTM is above the upper dash line, so it's greater than 90. So now you have a strong uptrend. This is exactly the same chart, Tesla hourly. Say you used your entry signal as greater than 90, so you'd have entered in this general area. And then once you've entered, all you care about is your exit, and then you just follow the red dots along, and you'd have exited there possibly. So this is how simple the whole process is, and it shows you that the indicator essentially helps you capture or describe what is the dominant trend on the chart. So these are the only 2 tools you need. You have the trend meter, then you have a volatility exit, and the delay channel. So you have 2 rules: in with the trend meter, out with an exit. So diametrical opposite to what we were hearing earlier. All right, so what is the CTM? It's a multi-tool for trend strength. So if you think of this as a multi-tool, you see there's so many different tools, but it's a bit of a challenge to design this because everything has to fold in neatly and make a nice compact tool. So if you can think of each of these tools as a different way of measuring the strength of the trend, you somehow have to make all of these different trend measurement tools fit together. And that's what the CTM does for you. So it combines many different indicators. It's important to understand that it quantifies the absolute trend strength. So we're not measuring the strength of the trend versus the market index like the S&P 500 index. It's just the absolute strength on the chart. So if you were to eyeball the chart and show it to trend traders, is this trending? They'll all say yes. And that's kind of what you want this indicator to do. And you get a single number between 0 and 100. So you already kind of saw that on the chart. So a little bit more detail. There are 0 input variables. This is very important because if you pick any technical indicator, you always have to somehow decide whether you want to use 14 or 20 or whatever magic number you like. So there are 0 input variables. You don't have to think about it. There are 4 time frames: 25, 50, 75, and 100 bars. Now there are 5 classes of technical indicators. So if you think of these multi-tools, there are bands, channels, returns, oscillators, and patterns. And if you think about it for a second, it's really difficult to combine these things into a single object because they have different scales, different smoothing, different internal mathematics. And how do you convert them so that you can add apples to apples and not oranges to orangutans? And there are 28 internal comparisons. So we are looking at a lot of different things. So if you think of the chromosome that was defined in the GMA approach, genetic AI approach, you can think of it as having 28 little rules that go 0, 1, 0, 1 or whatever. and then there's some complex way of combining them into a single object. So let's see how that works, just to get a little clarity. So this is gold spider, and we're going to focus on this very significant upthrust, big trend up. Every single technical indicator must recognize this as an uptrend, otherwise it's no good. So let's see what happens. So this is the same uptrend as the previous chart. This is a trend meter. Again, the scale is 0 to 100. You see that we have the dashed line, the solid lines at 20, at 80 and 20, and then a dashed line at 90. And the CTM rose above 90 and kind of stayed there for the duration of this up move. So that's the signature we're looking for. So let's hook, and then there's a little breakout here. You see again we got little values above. And as with all trading, once we're in, we need to know when do we get out. So the entry conditions are how do we get in? Well, CTM above 90, for example. And then when do we get out? We have this volatility trading stop, which is also built into the package. So let's just focus on the CTM portion of it. So we're just going to focus on this thing in the blue box. And you see that we have the solid line at 80. So at 80, we have a strong uptrend. At 90, we have a very strong uptrend. And at 100, we have a super strong uptrend. And of course, conversely, below 20, we have a strong downtrend and a very strong downtrend and a super strong downtrend. And our entire trading strategy is based on this concept with a scale of 0 to 100, anything above 80 or anything below 20. So if you had a trend following entry, you'd have a trend following buy because above 80, we have a strong uptrend. And if you have a trend following sell, it'll be below 20 because below 20, we have a strong downtrend. So this is as simple as a rules get. Now remember, we can also have a counter trend strategy. So the counter trend sell will be with a strong trend, or the counter trend buy would be with a strong downtrend. So if you have a strong uptrend, you want to sell it, that's a counter trend entry. If the market's very weak, you want to buy it, that could be a counter trend buy signal. And it's very important to understand that we have a very wide neutral zone. So between 20 and 80, we don't do anything with it. So imagine now you can filter out hundreds of objects or instruments because their trend strength is between 80 and 20. So it really simplifies your life. And now you only have really 2 or 3 or 4 trading rules. So one entry condition and one exit condition. That's it. So this is a 2 indicator strategy. So the entry is CTM is greater than 80 or CTM is less than 20. So simple as that on any time frame. The style could be trend following or counter trend. We are buying strength or selling weakness, or conversely buying weakness and selling strength. The risk is say 0 to 4%. That depends on your preference. And the exits are trailing stops, which are built into the package, and they follow the principle of top scola, which stands for take our profit slowly, but cut off losses at once. So this is kind of the trend following philosophy applied to trailing stops. Now, because we use the same rules on everything, this makes this approach extremely robust. There's no ambiguity about why we long, why we short, where do these things come from, because we can apply it to any exchange, any time frame, any instrument, or any market condition. So extremely powerful strategy boiled down to just 2 rules. So don't underestimate the difficulty of getting there, because from the second law of thermodynamics, you have to do work to remove entropy. So what we've done is we've removed a lot of entropy, we've simplified things, and you got to do work to make things simple. So let's go through a few charts just to kind of reinforce the mechanism. Remember, these are exactly the same rules, computed in exactly the same way on every single one of these charts. So there's no optimization at all. This is a 5-minute chart of the E-mini futures. So, short-term traders. In this box, I've shown you that CTM is below 20 and even below 10. So naturally you'd go short in this along this dotted vertical line. Once you're short, you don't care what's happening up here. And you have a trailing stop, the purple dots, and you get out over there. So entry on CTM, exit on a trailing stop on a 5-minute chart. The same market, but 60-minute chart, exactly the same setup. We have CTM below 20 and even below 10, so strong downtrend. If you want to take this trade, you're short when it goes below 20. Once it goes short, we don't care what happens up here. You have a trailing stop and you get out over there. So we're applying exactly the same rules over and over again without any deviation. I want to show this chart because this is a long-term view of the S&P futures, or S&P index, if you will. Again, we have the trend meter on top and the prices below, and we go from about 2019 to the present time. And you can see that, for example, when we had the strong uptrend before the crash in 2020, we were above 90 or above 80 for sure. Then we had the big sell-off due to COVID. We fell below 20 and below 10. Then we had the recovery during this very nice uptrend. You see that we had many values above 90, but we never got below 20. And then we had the sell-off. You can see with many excursions below 20, strong downtrends, and then we had a recovery. So the thing I want you to remember is look at this chart. When you have a very strong uptrend here, like here and here, we never get a CTM value below 20. Conversely, when we have a sustained downtrend, we never get a CTM value above 80. So the fact that we went above 80 here probably means there's some kind of a change of trend in the recent times. So again, same principle applied over and over again. This is the XLE, the Energy Select Spider. And the reason I want to show this particular chart is that this is the period from January to May of last year. So when the equity market was stopping and coming down, the energy market was rallying. So the energy stocks were moving higher because of the Ukraine invasion, etc., etc. And you see that the CTM rose above 90 and kind of stayed there for most of the time. We didn't get a single reading below 20. And just without worrying about the headlines, without worrying about the sky is falling or whatever, just believing the chart and following the indicator, you would have been on the right side of this trend. The flip side that also happened last year was that stocks fell and bonds fell. So this is a look at the Vanguard BND ETF, which is sort of a very wide, broadly diversified portfolio of US bonds. And again, you see that in this red box here and the red box here, CTM was below 20 and below 10, so strong downtrend. So in the futures market, you could have shorted the 30-year bond or the 10-year bond futures. And then we have a trailing stop, so we don't really care what's happening here. And eventually we might have got stopped out over there. We had another leg down, and again, we have a trailing stop, you'd have gotten out over there. Remember again, when we had the strong downtrend, we never got any readings up here above 80. So there's a important reason to recognize that the indicator is making sure that it keeps you on the right side of the major trend and on any time frame. Now here I want to show you the counter trend logic that we referred to. This is Tesla. This is a daily chart, and we have CTM below 10 here. So this was a strong downtrend that I showed you on the hourly chart. But now here I'm using something called the swing system, which is also in the package, and which the Fulgent also seems to have in their system, but I don't know what their rules are. And you see that here we have a long entry along this vertical bar when the CTM was below 20. So we have a strong downtrend, and we are buying in the midst of the strong downtrend. So that's a counter trend entry. And then of course we have a trailing stop because we're not trailing without a trailing stop. So this is an example of a counter trend approach. And you can use CTM to have either trend following or counter trend. This is another example. This is from January of this year. This is the technology spider. We know technology stocks are beaten down, no bottom in sight, etc., etc. And lo and behold, this is January. This is December. January starts here. We got a rally. As soon as the XLK starts rallying, you see we get values that are above 80. We exceeded 90. And the market bounced around, but we never got anything below 20 during the uptrend. And again, this is an hourly chart, so reasonably short time frame. But we are applying the logic in exactly the same way in terms of how the CTM is being computed, how it's being interpreted, and how it's being traded. This Caterpillar is an interesting example because it was an industrial. There was all this talk about recession and whatnot. And lo and behold, what do we have? We have a rally in Caterpillar, partly because of the reopening in China, because they do a lot of things over there. But even if you didn't know any of that, if you just followed the chart, what did you see here? It looks exactly the same as all the other charts I've shown you. We have a 0 to 100 scale, the dashed line at 90, CTM rises above 90. At this point on this time frame, it says, I have an uptrend. You can do what you wish with it. And the entry was somewhere in this area, and then you just use a trailing stop, and you would have been knocked out here. So this is a trend following approach using a relatively short time frame daily data on an object like Caterpillar, which is very counterintuitive that it was rallying in a, with all these dark clouds of recession and whatnot. So again, my point is ignore the headlines, believe the chart, trade the chart. And we're doing it with one tool and one tool only. We have one indicator and one exit. So maybe one rule at the most. This was Turkey. Turkey ETF from TUR from iShares. Fantastic rally. Again, breakout, we got above 90, it retraced, then it broke out again. We went above 90, stayed there for this monster rally. We don't really care what happens here once we go above 90. We have a trailing stop, and we would have gotten out there. Turkey is also an interesting example because, again, due to all the events in Ukraine, they had, all sorts of things happening in Turkey due to their role in NATO and whatnot. And whatever was going on, they had a huge rally in their main stock index, and the TUR, sort of took advantage of that. So even if you didn't know any of that, just using the scanning tools, you would have discovered that yes, there's an ETF with, CTM above 90, and if you traded it with a trailing stop, it would have been a good trade. Again, an example of applying exactly the same rules with no deviations and the same computation. So super simple, super consistent. You don't have to lose any sleep over it, and there's no mystery about why are we doing this. Now I know there's a lot of interest in trading stuff in India, so I have Larsen and Toubro for Mumbai. Exactly the same setup. We have a breakout above 90, stays a little choppy, but you could do a trend following with a trailing stop. So this rule can be applied to. We said it could be applied to any instrument on any exchange. That's an example of applying it to the BSC, I guess. Now, again, I have Larsen and Toubro on an hourly data. So again, a different exchange, different time frame, and we are applying the rule exactly the same way. We're saying we're just going to apply the same rule again and again. Remember, the dashed line on top is above 90, so you would have entered somewhere in this area, and then trend following, trailing exit, you would have gotten out there. So of course, you can write your own rules once you have the indicator and so on and so forth. I'm just showing you a very simple and systematic way to do it using very robust approach, using the same rules on everything. So we don't have to worry about optimization, retraining, none of that nonsense. We're just, going to use the same rules over and over again. This is CTM on Microsoft, and I want to just show you these charts all together because it's very important to understand that it works seamlessly across time. So this is on the upper left, we have Microsoft monthly data with the CTM in the upper panel, then Microsoft weekly data, Microsoft daily data, and Microsoft 4-hour data. And in each case, the CTM is in the upper panel. And you see it looks exactly the same regardless of the time frame. When you have a strong uptrend, your value is above 90. Strong uptrend, value is above 90. Strong uptrend, value above 90. Strong uptrend, value above 90. So in terms of the entry logic, it's very clear that we are going to consistently get values above 90 for strong uptrends and below 10 or say below 20 for strong downtrends. And once you're entered, then you use some sort of exit strategy or trailing stop to get you out. And of course, there's randomness, and I'll show you how it works. But it's important to understand that you can transcend time, exchange, and instrument by using the trend meter as your primary tool to recognize, is that a strong uptrend or is that a strong downtrend? And once you understand that, then the trading strategy follows from that. So sort of a summary, the entry condition is very simple, CTM greater than 80 or CTM less than 20. The style is trend following a counter trend. The risk is 4% or less, 3%, 2%. Exits are trailing stops. And this is all built into the package that you can get. And just a visual reminder, there are all kinds of different ways of measuring trend strength, and I'll show you a few. But we found a way to use a lot of different ideas and pack them together in some interesting way and consistent way into a single indicator. And that's what you want to take advantage of. And it's very robust. I've shown you, you can apply it to any exchange, time frame, instrument, or market condition. And it's interpreted exactly the same way. Let's take a slight detour and think of the design basis. Now that you kind of have a visual, you understand how it works. Now let me tell you why it works, and then you'll have more confidence in using it. So the single most difficult design problem in creating the CTM was how do you combine different indicators and different time periods and different parameter values in such a way that you can give the weights that are consistent, that make sense, that work without being too slow or too fast. So the fundamental problem is we cannot combine oranges with orangutans. So different indicators give different answers. So if you say I want to measure with, I have the same time period, 14 bars, but I want to measure with RSI or ADX or CCI or whatever else, you get different answers. If you have different time frames with the same indicator, you get different answers. So if I have RSI, I put 4 days or 5 days or 3 days or 14 days, you get a different answer. Different parameter values give different answers. So, I can take, Bollinger Bands or any other bands or channels or 20-day channel, 40-day channel, you get completely different answers. So how do you combine all this difference and make sense? So it's a simple indicator, but it hides a ton of complexity, and, you can just use it and not worry about how we got here, so to speak. So let's just go back and explore. This is the same gold chart that I showed you at the beginning. And here what I've plotted is I have CTM in the uppermost panel. In the second panel from the top, I have a 14-day ADX. In the third panel from the top, I have the 14-day RSI, and of course I have prices down below. And we know this is a significant trend up, so the indicator has to catch it. But you see that they don't all catch it the same way. So the CTM was very early down here. RSI went above 70 twice, so you could either have gotten in here or here. And the ADX went about 25, which is conventionally the reference level, down over here. So you see that there's a huge difference in the entry day, whether you got in here, 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 or here, simply because you used a different indicator to measure trend strength. And if you make hundreds of trades, the fact that there's some delay in how these things are triggering will make a big difference to your P&L. And the delays are because of internal smoothing and weighting and so on, and the mechanics of how the calculations are being performed. We continue this thing, but now we use a difference in time period. So I have CTM on the top panel, and I have two values of RSI. The second panel has the 28-day RSI, and the third panel has a 14-day RSI, and of course, this is the prices down below. CTM triggers relatively early, but you see that the 14-day RSI and the 28-day RSI trigger much later. So the 28-day RSI triggers much later than the 14-day RSI. So again, what's the right answer? Repeat the same exercise, but this time with ADX. I have the 28-day ADX and the 14-day ADX, and you see that it triggers later and later as I expand the time frame. And yet I told you I have 4 different time frames, 25, 50, 75, and 100 bars. So you see that it's an interesting problem in terms of what indicators to pick, what parameters to pick, and how to combine them. So now let me give you insight into why it works. And so the next few charts are just going to be really interesting and blow your mind away. So this is Apple. I have calculated CTM on this particular bar, and then I want to relate the value of the CTM to something that happened. So I've calculated the 20-day rate of change. So this is the change over 20 days, and I can divide it by the value 20 days ago to get a percentage change. So this is regular rate of change calculation. If I want, I can take this difference and divide it by the standard deviation of the previous 20 days, from the 20th or the close 20 days ago, and then I would get a dimensionless way to compare things. But for simplicity, I'll just show you the percentage change. So I'm taking the CTM and I'm relating to the percentage change in prices observed on that day. So what does that look like? So this is a very important plot. This is what it looks like. So let me explain what's happening on this chart. The horizontal axis is the Chande trend meter. So from 0 to 100. The vertical axis is the 20-day rate of change in Apple. So did you gain 10% or 5% or lose 10%? And if you take a particular dot here, for example, 1 point, it had maybe 37, 38 as the CTM, and there was a 10% gain. So each value corresponds to gain or loss over the previous 20 days and the matching CTM value. So, and we have about 2,000 data points, so approximately 8 years of data. So if you just look at this chart, it's really interesting because what do you see? You see like a clear trend from lower low to upper right, right? There's a strong trend line. So let's look at the next chart. This is what I want to point out. The important thing here is that when you have low values of CTM below 20, there are no data points up here. That is, there were no instances when we got a low value of CTM and a positive 20-day return for Apple. Conversely here, when we had a high value of CTM above 90, we had no instances where we had negative returns for Apple. And if anything, there's a positive skew. You see, when we got high values of CTM, we had some outlier returns. Similarly, when we had low values of CTM, we had outlier returns. So there's a skew in the performance when you have high values of CTM. And in the middle, when you look at, say, 20, 40, 50, 60, we have roughly equal distribution of data points above and below 0. So if you remember, we have a large buffer zone between 20 and 80, and we mostly want to be involved if it's above 20 or below, sorry, if it's below 20 and above 80. So this is really the heart, the guts of why CTM works. And I kind of pointed that out to you when we were looking at the charts. So straight line and the linear regression fit is 0.60, which is really good. It is moderately high. And if you look at some economic data, they'll have an R-square value of less than 0.1. So this is fantastic. A clear connection between CTM and what's happening to the underlying instrument. Now here what I've done is I've taken all the stocks in the Dow 30. So I got about 60,000 data points and I put all of them on the same chart. And it looks exactly the same like the individual chart. Again, we are on the 20-day rate of change. So the vertical axis is 20-day rate of change. The horizontal axis is the trend meter 0 to 100. And again, we have these two red circles across 60,000 data points. We have virtually no instances when CTM was below 20 and we had strong positive returns. Flip side, we had no instances where CTM was above 90 and we had strong negative returns. And you see there was a skew in the data. That is, for low value CTM, we got some really low negative returns and really high positive returns. So that's perfect. We want that skew because we want to catch these outlier trades with a trend following strategy. And that's talking of the hitting the home run with Yogi Berra's quote on the first slide. Now I've expanded the horizon. I've gone to 120,000 points, and I've used about 120 iShares ETFs. Looks exactly the same. Again, we have a strong linear relationship. It's down a little bit, 0.45, more noise. If you look at in the middle, you see huge scatter in the data. So we don't really want to do anything between 20 and 80. Above 80, again, we have very few instances of strong negative skew. And we have positive skew here. Similarly, particularly with low value of CTM, we have almost no instances of strong positive returns. So why does CTM work? It works because we have, now remember, CTM is backward looking. It's a snapshot. We want a starting point for the trade, but we want a starting point that gives us a really good measure of trend strength. And clearly, CTM is very good at measuring really weak markets or really strong markets. And that's really all we care about. Fundamentally, that's a way to isolate the value of the entry. So you talk of system testing, et cetera, and I've done tens of thousands of hours, as Jeffrey was saying at the beginning. But what you want is a clear separation between what happens when the market's really weak and the market's really strong. And the CTM is clearly able to distinguish between something unique happening in the market in terms of a very strong trend or a very weak trend. And that's really what drives the whole process. Now, I'm back to Apple, but I did a 50-day rate of change. So the vertical axis is 50-day rate of change, horizontal axis is the trend meter, R-square is 0.6, very strong linear relationship. Again, virtually no data points here and no data points there. And then strong positive skew, strong positive negative skew. So what I did was I looked at each decile, so 0 to 10, 10 to 20, 60 to 70, and so forth, and calculated the max, the min, and the average. So you can really see how the CTM is working. And this shows you the orange line is the max value in each interval, the gray line is the midpoint, and the blue line is the minimum value. And what does that tell you? When you have high values of CTM, we had a strong positive skew, that's what we want for trend following. Strong negative skew, that's what we want for trend following. And in the middle, it's kind of either way, 50-50. We're ignoring them because we have a buffer between 20, and 80. So for all of you wondering, does this thing work? Yes, it works. And why does it work? Because it isolates strong trends. Now remember, I'm showing you backward. If you look forward, there'll be many instances where it will not be successful, because that's how markets work. Markets are random, and we deal with that by having an exit strategy. So if you have a false signal, it's going to take you out. Your losses are limited to whatever, or approximately the value of the risk that you set. So we're not taking anything granted about what happens in the future, because we are playing defense by having a trailing stop. But we want to start off on a strong footing, like well begun is half done, and the CTM will help you get off to a strong start. So it's very important that you understand the underlying basis of why CTM works. And of course, you can scan. I'll show you a number of instances of scanning. Again, any exchange, any time frame, any type of instrument, any type of market. This is just a visual. It's like sticking a tremometer. You're putting a, if you think of this jug of water as being an exchange, you're putting a thermometer in there and asking, show me everything above 80, for example. So here in the power console, I have used the TCCT scan by CTM, which is built into the package, and I've picked the NASDAQ 100 because we know it rallied, recently, and that's what the scan looks like yesterday, or over the weekend rather. And then I've just enlarged it here. CGen was at the top, analog devices, Fortinet, Cisco, Pekar, then you see NVIDIA, Microchip. So this semiconductor stocks had strong move, Cadence, strong move. So it's picking up the right things. And Airbnb came in with very strong earnings, and they had, they're saying people are spending money on travel, etc. So you see that in terms of what the indicator and the scan is picking up is consistent with what's happening in the markets and the earnings story in the market. Again, a chart of CTM above 90, CGen, breakout, trailing stop. We don't know what's going to happen, and the market limit down the last few days, but that's trend following. You have reason to buy something, you get in, put a trailing stop, let it rip. Analog devices, again, CTM above 90, we have a breakout, we have a trailing stop. If you like the trade, off you go. This is from last year, 100. This is about approximately the same time last year. We know I showed you the chart of the XLE. The energy market was rallying. Chevron was on top. So you can start with the sector and explore the sector. This is again Chevron on top, and look at that chart. CTM above 90, and then we had an explosive move up just near the start of the war. So again, believe the chart. Just follow what the market is doing. And the XLE told you that the sector was great. Now you can explore within the sector. Again, just to remind you that you can scan, you can use this across the world. I have a scan here from Toronto, Mumbai, and the futures market. So you can scan whatever it is that you like to trade. You can also have weekly data. So some of you may be very long-term position traders. Then certainly weekly data would be the way for you to go. And then the way you do that is you just run. You run now. Here, I want to show you an interesting challenge. There are a number of them with a ranking of 100. So all of these guys are trending great. So you either pick at random, or you look at volume, or you have some other reason to pick one versus the other. But obviously, the CTM itself is not capable of distinguishing things. And if you look at these values, there's really not a meaningful difference between something at 99.07 and something at 100. But it's just convenient to provide a ranking. And you could pick something lower down here because you like the volume, or you know something about the story. I just referred to this a minute ago. This is from last year. We know that the energy sector was strong. I showed you the XLE chart, so we can say, okay, I want to look into this sector and see which is what's trending the best. And of course, if you scan that, you got Chevron. You had Oxy. Oxy, of course, was very popular with the Berkshire Hathaway crowd, and then Archer, Baker Hughes. So EQT had a beautiful move. So just gives you ideas. And again, remember, just because this seems that is way down on the list, but between 98 and 100, there's really not that much difference. But the mathematics gives us whatever it does. So the idea is that you can use some flexibility in the approach, but the same approach being applied over and over again. This is just to remind you that if you think of a temperature analogy, we have some cold trends that are trending down. We're going to stick the thermometer, find something with values less than 20. So I did that on the NASDAQ, and I found eHealth. They had some interesting stories. So you can see that eHealth was trending down. The CTM is below 10, or certainly below 20. At that point, you can be short. You have a trailing stop to get you out. Again, this is around those hints that there may be some hostilities. So gold and crude oil and wheat and metals were all rallying in anticipation of what happened in Ukraine. And so it's an example of gold rallying. Even if you came in late to this move, you have a trailing stop, so you can keep going. This is a scan I did yesterday on DAX, just for the fun of it. Here again, you can see this is the top. If you look at the major ETFs, you'll find that the European or Europe-based ETFs have been doing better because their markets have been doing a little bit better than us because they've had better economic data. So I looked at the Mercedes chart because I'm a fan of the F1 team. Again, exactly the same setup. We have an hourly chart to have a little short-term look. CTM above 90, you're in over here, then you have a trading stop and you keep going. So any exchange, any instrument, any time frame, and we apply the rules again and again in exactly the same way. So this is a really versatile indicator. I just wanted to broad brush this across just to give you a sense for just to reinforce that yes, you can just pretty much apply it to anything. And this is Bitcoin from last year. And you can see that it had some phenomenal uptrends, and of course CTM was pegged at 100. And then in this case, for example, you could use a counter trend entry. You have a little weakness. The counter trend system, the swing system that's built into the package, is what I have plotted here with these entries and exits and the trailing stop. And you see that, for example, here I gave a fantastic entry into the Bitcoin when there was weakness. The values were below 20, so there was weakness at the macro level, and you're buying strength after weakness. This is the same trade. It was weak down here, and then the counter trend entry and a nice follow through, and you made some money. So we can use CTM both as a trend following tool or a counter trend tool. And Bitcoin is here, so very volatile object, not right for everybody. But we can even trade something as volatile as Bitcoin with exactly the same logic and a counter trend system. This is an Australian ETF, crude oil. Last year, they had move up. So again, works exactly the same way. CTM above 90, you can go long and a trailing stop. This is Hong Kong. Again, I don't know what these people do. I think they're an agricultural firm. Again, breakout, trailing stop, and just follow along. So again, just reinforcing that you can use the user logic on anything, anywhere. And this is LSE. This is an ag fund from last year. Again, we know they had a big rally in all the agricultural commodities because of fears of loss of Ukraine crops. And then again, values above 90 and a trailing stop. Maycorn last year, values above 90, trailing stop. Let's say that the counter trend signal was here, but suppose you decided to enter there. Okay, that's fine. You're long there. Now you still have a trailing stop. So remember, you can get in, quote, late into the trade, assuming that the trade is going to continue, but you defend your position with the trailing stops. At that point, it's like any other regular trade. Soybeans, May soybeans last year had a fantastic move. Same thing again, you just follow along, CTM above 90, say you got in there. You could have gotten there, but you missed it. Like here's the entry for the counter trend system entry here. But let's say you missed it or didn't take it, and then you want to take it here. You could enter here, you have a trailing stop, keeps going. Then of course, we talked about how the rates were higher last year. The T-bond futures, downtrend, CTM well below 20. Again, you could put a trailing stop and off you go. Okay, we're sort of coming towards the end, but this time I want to sort of change of pace and give you a totally different application of CTM. Here, what I've done is I want to look at CTM applied at the portfolio level. So here, what I've done is I've calculated CTM across all the major sectors in the S&P, and then I rescaled it so that the strongest sector was 100 and the weakest sector was 0. So it's relative positioning of the CTM, scan, and you see that in January of last year, the energy XLEs was the ETF or the sector with the highest trend strength, and I've shown you the XLE chart. So this is an important tool for you to see what's happening in terms of the major sectors inside the S&P 500. And last year it was very important because even though the S&P itself fell, the energy sector rallied. So you could have played defense or even made some money with it. For example, here what I've done is I've taken a broad portfolio of stocks, I've calculated the daily distribution of CTM, and then I have just calculated the percentage of stocks with CTM greater than 70 and a percentage of stocks with CTM less than 30. So I've just widened the bands a little bit. And what should happen, right? If you have a strong uptrend, we should have more stocks with CTM greater than 70. And if you have a strong downtrend, we should have more stocks with CTM less than 30. So when you have all these, discussions on, various experts saying whether it's going this way or that way, we can ignore all that and do our own computation. So this is what it looks like. So I did the scan yesterday. There's only one CTM greater than, there's only one ETF, one sector with CTM greater than 70 and one with CTM less than 30. And most of them are bunched in with CTM of between 30 and 70. And then of course I could, compute it over time. And this is what that looks like. So this is iShares. I've taken the same iShares I showed you with the 120,000 points. The blue line is CTM less than 30, and the orange line is CTM greater than 70. So we're getting a sense for the portfolio level trends. Where's the market going? So this is the COVID sell. Obviously, it accelerated. We got a huge spike up, and it came back down, and it was near zero. And this is 2022, where the blue line is above the orange line. And then during all the recovery, the orange line was above the blue line. So essentially, we can get a sense of what's happening to the market. So here I've zoomed in on the year 2020, and I've only looked at the ones with CTM less than 30. So if the market is weak, this number should be high. So we know there was a strong sell-off that started, there was weakness in January, and then the COVID news broke, and we had this huge panic sell-off. So you got to 100%, everything was being sold off. And then the Fed intervened, blah, blah, it came back down. And then you see it stayed near zero during the rally. Now, there was a lot of controversy about the rally. Can it continue? There's so much uncertainty about COVID. But again, as I said, believe the chart. And what CTM was telling is there was virtually nothing with CTM less than 30. So that told you that there was a very broad-based rally in the market, and you would have had confidence in the rally. And if you remember the chart, the CTM was above 90, and you had a trading stop, and you would have been in the market. This is the same thing, but the computation this time done with the stocks in the S&P 500, and the picture is essentially the same. We had this huge sell-off, in the COVID sell-off. Then we had the recovery, and then last year we had this flip-flop between the blue and the orange lines because there was a sell-off. And in this thing, what I've done is I've only looked at the CTM less than 30 side. That's the weakness. But I'm comparing the weakness in the S&P 500 stocks, which is the blue line, to the weakness in the my 120 iShares US equity iShares ETFs. And you see that the two lines follow each other very closely. So there's strong correlation, and it's 0.95, so that's good as 1, between what was happening to the internals of the S&P 500 versus what is happening to the US equity iShares ETFs, because after all, they have mostly the same holdings. And again, you can see that last year when we had these waves of selling, these lines would rise up to near 80%, and we had another sell-off. This exceeded 90%, and then the market bottomed in late September, early October, and then we had this sort of quiet recovery in the last half of in the fourth quarter of last year. So this is a different application of CTM, where I'm looking at the portfolio level, and I'm saying it's natural that when we have a lot of selling, most of the stock will have CTM less than 30. When we have a strong uptrend, most of the stock will have CTM above 70. So you can choose to focus on either one. If you just focus on those below 30, remember it'll go down to 0. So when you have a rally, this thing will be below 10. When we have a rally, this will be below 10, or let's say below 20. So it doesn't matter which side you focus on. There'll be some delay in terms of the response, but you essentially get the same information. So I think with that, I'll just wrap up relatively quickly. CTM is the key to unlocking profits. Any exchange time frame, instrument, or market environment. This is why it works. Below 20, we have skew to the downside, virtually nothing happening above, or no positive returns. On the upside, we have skew to the upside and virtually no negative returns. So it can correctly differentiate strong uptrends and strong downtrends. And then, of course, the scale is 0 to 100. Above 80, we are buying. Below 20, we're selling if you're a trend follower. Counter trend, above 80, you're selling. Below 20, you're buying. And I give you examples of Tesla and other things where buying is quite powerful. Super simple trading strategy compared to thousands and thousands of indicators. I have two. One entry, CTM greater than 80, CTM less than 20, and one exit, trailing stop. And the TCCTS2, you can pick either one. Just to reinforce, hourly chart Tesla that I showed you at the beginning, strong downtrend, we enter, use a trailing stop, we are out. Strong uptrend, you enter, use a trailing stop, and you're out. Once you're in the position, you don't really care what's happening, in the upper panel. So if you look at the package, it's a very easy to understand package. It's very simple to use, as I showed you in all the examples, but it's extremely powerful. So it's well worth your money to check it out. Essentially, it asks two questions. Is it trending? Find me the trending markets now, and I showed you so many examples. And then systems give you a very rule-based approach to following the process. So I have, if you're trending, you have trend meter. There's a long-term system, which is a trend following buy with a volatility exit. I show you those red and purple dots. And then there's a volatility system and a swing system, which are counter trend entries. They buy weakness with a delayed channel exit, and I show you some examples of that with Tesla. And if you really want to simplify it, we have the trend meter and the volatility exit, or the trend meter and the delayed channel exit. So this is like the maximally minimal approach to trading. Super simple. So I'll just encourage you to embrace the power of simplicity. Do not underestimate the amount of time and effort and complexity that went into simplifying life. Second law of thermodynamics. The CTM is the best measure of trend strength ever released to the public. I know lots of people have stuff that they have not released. It's the most comprehensive, multi-time period, multi-indicator. It's very simple to use, apples to apples. You can compare something in Toronto to Mumbai to New York. Systems are cut and dry. There's no training required. They're specific. They're robust. The same rules on everything. So really improves your probability of success in the future. You can buy strength or buy weakness. Trend following, counter trend. Trend following exits, and you get very clean signals. You don't have a million up and down arrows, and somehow you're supposed to decide which trade to take. Very, very clean signals. So low frequency entries and exits. All right, that's about it. I think I'm done. If there's any questions, I'm happy to answer them.
Hi, Tushar. We have one question for you,
okay.
And I promise to pass it along. So Tavanda wants to know, I have a question that might be off subject, but I'd like to know, how does the layoffs with the tech company affect the stock market? Please advise.
A layoff with the tech companies?
Correct, yeah.
Okay, this is a trick question. If you think of the market as a whole, the layoffs have no effect, because as a percentage of the total employees in the country, the tech is relatively small, and the large tech companies are even smaller as a percentage of the total number of tech employers. And I think I saw some data point that actually 5,000 jobs were created in tech as a whole, even though the large tech companies were laying people off. But what you have to think about is that for the market as a whole, there's the leading economic indicators are showing potential weakness. High rates means that potentially we should have a slowdown in the economy, and so earnings are supposed to come down, earning estimates are coming down, etc., etc. Contrast that with the strong bullish performance in January through, I guess, Valentine's Day, which generally means that we should have a good year. So my short answer is, just use a trend meter. When there's an uptrend, you'll be above 80 or 90. When there's a downtrend, you'll be below 20. Let the experts say whatever they will, including me, of course.
Yeah, for sure. Watch the charts is what you're saying. Thank you very much, Tushar. I appreciate it.
Thank you so much. Have a great day. Thanks for the opportunity. Have fun.
Of course. Thanks for coming in. And let me kind of just jump out here a little bit.
Okay.
Thank you very much. I'm going to talk a little bit. All right, cool. Let me go ahead and change the presenter to me real quick. Okay, and we'll go ahead and show my screen. And yeah, I appreciate Tushar for coming in and talking to us. His add-on is like the other systems, very, very simple, very easy to understand. Here's a list of the indicators that are included as part of it. You get, as part of the methodologies, you're going to get a long-term system, a swing system, and then that volatility breakout system as well. Three very, very good. So the features of the the long-term system is it's trend following. It has high levels of smoothing. It buys strength. It's designed for patient position traders. And since it's a little bit, since it's longer term, it's going to be using wider stops. In addition to that, you're going to get the swing system. The swing system, what it does is it buys strength after weakness. It swings moves that are going to last several bars. It uses tight stops, and it looks for follow through after the breakout. So, and then you have the breakout system. I like the way that he kind of looks. I mean, a lot of people like to look at different breakouts and stocks that are breaking out. I really thought it was interesting the way that Tushar looks to do that, identifying average true range and using a multiple of average true range to kind of gauge whether it was a worthwhile breakout or not. So with any breakout strategy, you're going to have that higher risk of reversal. It's going to use a tighter trailing stop as well. So those are three systems that are included in MetaStock. They're very, very well-rounded. They include the scan, so you can scan the whole market, find out exactly what stocks. You know, I've been talking about it all week. Scanning is such a powerful tool in MetaStock, and the ability to be able to scan and find entries and ignore kind of the noise and just focus on those things that work is so helpful. So you're going to get the explorations. You'll get also the expert advisor, which is going to give you very detailed commentary to tell you what to do with things. And you're also going to get system tests. And they test very, very well. As you might imagine from somebody that's a really good, prolific system designer like Tushar is, the systems that he has actually are testable in MetaStock with the enhanced system tester. You can test them and they come out very, very profitably. So what we're going to do here as part of the conference is the Tushar Chande Toolkit is a one-time cost, is $499. Here at the event today, we're going to do it for $399 as a special. We're going to include that, of course, with our money-back guarantee. You can try it. If it's something that's helpful for you, you want to keep it. If you don't have access to MetaStock, we'll include a free trial as part of your purchase. That'll include the bootcamp training, the trial to MetaStock, the data that you need. So it really is a risk-free opportunity to try it. So you can do that by giving us a call at 800-882-3040. You can also do that at metastock.com/sales-chat. And you also can visit metastock.com/conf-promo to order online. So thank you very much, Tushar. We really appreciate that. Now, earlier today, I don't know, Kirti, are you still in the audience? Kirti gave us a number of 5875 as a prize winner. So I told Kelly he could take a break. He doesn't need to select an actual prize right now. We'll go ahead and give him a prize for 5875. So the winner of the next prize is 5875. What we're going to actually give away is Wendy Kirkland's Wealth Building newsletter. So with this one, it's a one-year subscription to Wendy's newsletter. The value on it is $468, and it features a list of all of the stocks flagged by Wendy Kirkland that meet her criteria, which are the ones that she wants to follow. So that's a one-year subscription. We're going to go ahead and give it to you, or actually Wendy's going to give it to you. Let's go ahead and figure out who 5875 is for the winner there. Okay, hold on just a second. And 5875. Okay. And that is Jim S. Jim, you have an Outlook email address. You're in New Zealand. Jim S., if that sounds like you just won the subscription for Wendy Kirkland. So let me go ahead and make a note of that here in my spreadsheet so I don't lose it later on. And congratulations on that. Very, very good job. You can thank Kirti for that. All right. Let's go ahead and say thank you to, actually, let's do CMT Association. CMT Association has been a partner of MetaStock for a number of years. They do a great job. I might not be. Okay. All right. No, it looks fine. Okay. I've seen a kind of a weird view of just my camera, but I want to make sure I'm sharing the screen. I want to say thank you to CMT Association. CMT is a very well-respected organization. We're very, very happy to have them as a sponsor of the MetaStock conferences. They've been a sponsor of all of our conferences and summits that we've been doing for about a year and a half now. Tyler's going to come in tomorrow and he's going to talk about how having a CMT designation can help you if you're looking to work in the financial industry or if you already work in the financial industry. But if that's something that sounds like of interest to you, or if you want that prestigious CMT designation on your chart, go to cmtassociation.org and they can help you kind of get started with that. So, and of course, we're MetaStock. You know, if you want to get an extended trial, what we're doing today is if you lease MetaStock, it's been rated #1 30 years straight, best software in its price category. If you pay for a month, we'll give you a second and third month for free. You can do that by giving us a call, 800-882-3040, metastock.com/sales chat if you want to chat with one of our sales guys, or metastock.com/conf promo. So very, very good. And MetaStock, thank you for pointing that out. There's a 30-day money-back guarantee on the Tushar Chande product. So if you try it out, if it's helpful, you'll keep it. No big deal. All right, very good. Our next guest today is Peter Dalal. Peter has been a partner in MetaStock for a long time. I think it's been decades now. It's definitely been decades. I just don't know exactly how many decades. Peter created one of our most successful FX trading add-ons called FX Traders Advantage. And this was a long time ago. Decades, I think 15, maybe 20 years. Lately, he's been working on the Magic Trader Elite, and he's going to show you that today. And he's going to do a great job because he always does. So let's go ahead and bring you on here. Peter, how are you doing?
All right, can you hear me?
I can. Good.
All right, louder, little lighter. Which way?
You sound good to me. As you can tell, we are working. We had a big snowstorm in Utah, so nobody was able to go to work this morning. But in my headphones, you sound really good.
Okay.
And I can see your PowerPoint now too.
Okay, you could see that?
Mm-hmm. It's coming through. I can hear you well. I'll get out of your way and give you the floor.
All right. Some reason I don't see your screen.
Oh, you didn't see? Well, we can hear you, so and we can see it. So, and it is the appropriate screen. So.
Okay, no problem. All right. Good afternoon to everybody. Thank you very much, Kelly and Jeff, to have me on this webinar. Everybody around the world, I say hello to you guys. So what we're going to do today, we're going to talk about subjects first, what we're going to talk, then we're going to talk about disclaimers, and I will spend very less time, even though there are a bunch of them we required by law. So I will try to speed up as much as fast I can, get it out of the way so we could focus on Magic Trader. So these are the topics we're going to talk about it today. 5 simple patterns. That's what I've been using for, God knows, since 2006 and earlier developments phase of Magic Trader. And they happen to be producing good results for me. And I figured out a way how we could trade with that, which I'm going to show it to you. It's very simple. And before we get started, keep it simple. Magic Trader is having a lot of things inside of it, but you do not need to get an expert for everything. Stay with the basic things, which I do every day, or part of that, and try to do the trades in my favor. So those simple 5 things, which we call as patterns, or some people say as ingredients, but topic is the same, and how to take advantage of that, which I'm going to show you today, and keep you in the track is the way to go by having simplified version of Magic Trader application. Now I'm going to talk about a couple of examples we recently did, right, and then later on show you a couple of scanning applications, and Jeff is going to talk the rest, and we're going to be on time, so I'm going to speed up as much as I can. So if you don't have all the disclaimers, Jeff Gibby has an access. You could go on our website, themagictrader.com. Also, it has been posted in Facebook groups and many different ways you could get it, and reach out to Jeff. That is the easiest way to get it. And I'll be quick and to the point for reading disclaimer. So we could get started quick. Trading is risky. You should not trade more than what you could afford to lose. You should not borrow money to trade. This is one of the things very important. There is no safe trading system has been ever designed, and no one can guarantee profits or freedom from loss. Past performance do not guarantee for the future results. Magic Trader is a risk-based weighted basis system, and we show so many symbols, but we are not giving you buy, hold, or sell recommendation. Please hire your own investment advisor to get the advice when you have to get in, get out, or hold it. CFT rule 4.41, all systems are designed with the benefit of hindsight, as they are fall under hypothetical or stimulated results. There's a lack of liquidity in the market, so results could be different from trader to trader. No two traders will have same output, including using Magic Trader. That's why they all fall into hypothetical results, right? And even though it is live trading, you cannot repeat those results every day. Now, options, we do have symbols. I'm going to go over with this slide later on. Options are risky, and you should go with a free education. Option Clearing Corporation does give it to you, and read the supplement as well as their disclosures. And there's a lot of good stuff out there. My company here is registered with CFTC, and we have taken the exemption so I could do my job here. We are not going to give anybody buy, hold, or sell recommendations. You got to talk to your investment advisor, and trading is risky. We have patents, we have trademarks, we have service mark, we have copyrights information. So please respect our rights. Again, the courses or webinars, everything is for education purpose only. And this is our registration number with CFTC, which is NFA ID 352991. Also, many times I take positions, and I'm not guaranteeing that in discussion. If I forget that this is the way it is, I will try to disclose as much as I can. And there is no guarantee I could disclose every single thing goes on. And I try not to discuss those positions which I'm in. Testimonials, we appreciate, but we don't put on a site because of the regulators, right? And please do not tell that you could make money $1 million with Magic Trader, even if it is true, because we just want to keep a low profile. We've been around since 2006 officially with Magic Trader. We survived. So we will survive a few more years probably until I retire, I guess, and Jeff will take it over. So we really don't want to hype and be telling everybody in our alert room, do not hype anything. Magic Trader has a proprietary method using all patented technology, which is a scalp swing, and has proven years after years its own effect. And basically, we teach people how you could use market money to take the risk, right, and then swing it. So Magic Trader has those avenues to follow that scalp swing method. It has been working for many, many years. Now, goal of this webinar is how to trade with Magic Trader. That's what we want to show you, how to use simple trading strategies, which I'm going to discuss one, and I'm going to tell you here and there what else you could do it with the Magic Trader if you have time. And we find the best opportunity in matter of minutes. MetaStock scanner is excellent. That's what I use every day, right? Jeff, you may have to help me. It looks like my Explorer has some issues, but let's try to focus on what we have. So you need to have a confidence. Once you understand how this pie patterns work, you will get the confidence of trading, which I'm going to show you how to do it. So let me discuss the concept, how we come up with this thing. So basically, there are a couple of lines here, which is we call is a health window or is a health indicator. So I had a lot of problems during my lifetime about the health. So I always see the doctors or hospital, whatever it is, right? So I see all the machines there, and my background is engineering. So I said, why I cannot find internal health of every security, whatever Refinitiv gives data for, including we did it with the latest 2020 issues. We all had it. So basically, I wound up patenting these things as well as it is a workable model for a long time. It took longest time to do this thing. Looks simple, there's a lot of complexity, but you don't need to worry about complexity. Few lines here will help you be on the right side of the trade. We're going to discuss all in few minutes. So this vertical line, these two lines, and above this zero line, right? That's more important. And this is a kind of entry spike, right? And matching both is pretty good for trading. And we call this as a catalyst. And this is a pure health and a ribbon, which is designed based on the horizontal time risk. So every time you see different MetaStock app add-on or whatever, it is not the same, but we use the fabulous system they have it, so we don't need to reinvent the wheel. But the ingredients to do that is not the same from product to product. You need to understand. So do this vertical direction line as well as spikes. It is designed totally different. It works differently. So existing MetaStock customer, please pay attention to that. And the trading method is different. Now we're going to talk about the bullish patterns, right? We're going to start with direction line, which is right on the top, right? And it is shown, as I discussed with you, a vertical line. It shows up on a health window. That's your direction line. So regardless what it is, you don't need to worry about where is the trend going. And this is good for every time frame, including 1 minute. So this software can be applicable from 1 minute to any custom time frame, and the direction line will show up on each of those. This line has a green color, that means we're going long. Now I bracketed these couple of lines in a health windows. So the purple line, which is a top, it has a value of 4, right? It is parallel to blue line, right, which has a value of 1, and this is the dotted line. So for bullish direction, what you need to see, the lines are parallel, right? So that's safer to make that decision. Once you see parallel line, you know we are going in the right place. So those lines are shown here, and this purple line has a value of 4, this has a value of 1, and this has a value of 0. That means we're going in a bullish direction. So when you eyeball it, you know it is in a bullish favor. Then this is the green spike, which has a color green and which been shown dotted. So basically that's your bullish entry. That's how it's simply figured out. And later on I'm going to show each of those. You could scan it independently inside. Independent means you want all these items are shown, each columns there. So you could identify each of them in scanner. So once you see the spike, you know we have direction line, we have these two parallel lines, and basically it shows you that we're going to go long. That's what you need to know. And here is a vertical line which is shown here, which is called pure health. So if you're in a hurry, you don't know how to do interpretation, this is the way I do it, right? Sometimes many lines you don't know how to interpret. So if this is green, you go. That's what you need to do. Nothing complicated. Now the green ribbon is a horizontal time risk. Any risk which is related to time, it is shown with this green ribbon. So those are 5 patterns you got to observe on any chart you want to look at that. And then all these things are in place, then you're good to go. That's how it is designed. Now let me show you example of actual chart now. So as we talk, number 1, 2, 3, 4, and 5 are indicated here. The description is on the left. So you could later on look at this presentation and see how simple it is. As long as you know how to count 5 numbers, you're good to go. So 1 is the vertical line, which is a green line, direction is bullish, right? So it says here bullish, so it is bullish, it's a green, so bullish. These 2 lines are parallel, that's number 2 requirement. Number 3 is a spike, which is a green direction or green entry line. So basically direction is green, entry is green, so we're good to go. And pure health is green, we're good to go. And number 5 is green. So as long as you could identify, and you don't need to search much, there is a scanner, few of them. They will tell you if it is matching or not. You just open up the chart, verify, and get into the game. These color, there are a bunch of those. I will talk about yellow bar here. If you see yellow bar, which also you could scan it, and that is a catalyst. That means we are going to the moon kind of story. So obviously it is showing that we went to the moon, then it's a pullback. These 2 lines are not the lines you are used to. They are custom designed proprietary items, right? So those are traded different way than you used to with 50, 100 or whatever you're using. I have not used since almost 2006 those lines which I used to teach, but we figured out a better way, more accurate way, and it is a new kind of idea. But those are the one you could scan it also. And it is being traded. Normally you know, moving average or whatever you cross and then everybody look good. But how about here, getting in here? So we figure out a way to trade better and earlier. That's what we're doing. So basically, I'll be doing scalping and swinging and maybe taking profit somewhere, right? And add it here. And this is not the topic we want to talk about today, but I will give you for curiosity. Some people has it. This forecast future high. So basically, this is embedded into the software as an invention, right? So I'm not trying to tag into artificial intelligence or whatever you want to talk. We were all ahead since 2004, 2005, right, into these matters, and it is forecasting, and there is a way to trade. So I use that to my advantage. Suppose it's a pullback, this gives me an entry. So these are a little bit out of line in a way that I was not going to talk, but it is there. So let's talk about it. So people who are curious can feel, oh, I could get it. Most of the people have a 1 buy and 1 sell arrow. How about in between? I want to get in. Then we got to do all this traditional stuff. I don't have no oscillator, no RSI, nothing. I just do this way because this is differently designed. So I detach myself, most of them, right? That doesn't mean they are bad. They are pretty good. Some of them are pretty good. Like previous speaker was giving some idea. That's a good idea. It saves you time. So you have to appreciate what people have it. But I decided to do this way, and teaching people how to do it. Same way we did bullish direction in short. These are the 5 you need to go short, or you short it, or you buy put options, or different strategy in a bearish direction. So this particular slide is telling you same thing, but in opposite direction. Vertical red line is going direction negative, means short. Then bearish, one difference is zero line is here. This is a -1 and -4. So that's what is the difference between bullish and bearish. Then the red spike. Once you see that, that's your entry spike, and then you go short. Then pure health, same way like that, and health indicator, right? You could use this one, but I prefer to see parallel lines. But this will also, hurry when I'm flipping 400 charts, right? I need to save some time. So I use that, and there is a lot of tricks with that. So I use those. And red ribbon is horizontal time risk related to time risk, and that is going for bearish direction. Now, what I did it like we look at the bullish direction chart sample. I'm going to show you and tell you a little bit how it works on a bearish side. So here is your direction line, which number here. Then number 2 is 2 lines, but it's below 0. So this has a -1 value. This has a -4 value. As long as they are there, you're good to go. And then this is also showed up here, and they are matching. That's the key. That means it has equilibrium. That doesn't mean you cannot trade if it is an offset. You're going to see many times red direction comes earlier. That's even better. Direction is clear. We're just looking for an entry, so that gives you time, and you could scan that. So it is also true. High matching is the best one, but that doesn't mean that you cannot trade with 2 or more in a combination with the catalyst. So this is a catalyst. This color candle is a catalyst, and you could see here software figured out you should buy put option, and it has a plus plus. That means it has a strength. IB means indigo bar, so this is the indigo color, and you could see the bear. So we're going down. So right now here is a D candle came in. That means people taking profit. How you get it back? Right here. There's an E candle, right? And this is the F candle. So what it is true that I invented that it's not just buy and sell. So most of the buying comes from different kind of institution, small, big, right? Or largest institution. So how we know? What are we doing? So you could go to a couple of webinars done before. I think Jeb did it also. You could go back and look at that. You'll get an idea what these colors are. It's very simple. It looks kind of too much, but you just follow kind of money kind of situation. So these are different perceptors where institutions taking place, professional trader taking trades, and they're telling the buy put. So what happened after that? So you got to figure that one out. And it is numbered from -1 all the way to -6. That's the last time you should be shorting. And look, people started short covering. So basically, I started being conservative. When it's a -5, most likely I'm out. I'm not waiting for anybody. Oh, even though I lose from profit, so what? Market is crazy. You see S&P future going crazy, right? One day it is 80 points up, another day is 40 points down. So perfect example today. Look what happened in last few days. And then somebody tells something turn out. So we don't care, but I do pay attention to S&P future because that's where every institution, everybody's looking at. So we want to know their game, but Magic Trader don't care. I do care. The reason why, because I came from institution side, so my nature, right? I got to see back in days, what spoos are doing. Right? That's what we used to talk on the floor. So I try to focus on where I came from. But S&P future is the best way before you take the risk. What is market doing is very much important. So you don't want to go against. You will get reflection here for every single thing happening on a market because this is a dynamically moving. So we believe in giving the actual live what is happening, so I could identify the risk inside those beautiful candles. Now you could do fine ingredients with the different scanners. These are a bunch of them, comes with the software, and you could identify bullish or bearish, and this is all in one and doesn't have the catalyst. So this one we release later on. You could use either of that, doesn't matter. I come from old school, so I like to open up this chart and see what is going on in a chart. That's my nature. So this was one of the best example recently. Why one of the best? Weekly and daily both had fine ingredients. So that's cool stuff. And it does happen many times, but we did it a webinar. So I said, let me put it there. Right? So this way people can understand what's going on. So this was a weekly on 120, right? And this came in a scan. Bunch of others were there. We picked up one of the security as an example. It's not Apple, APLE is another security. So you could see that in a weekly there was a setup for fine ingredients. So that's good to go. But I always try to see what is happening into smaller time frame also, right? So this way I scan it for daily on 110. It was having the same security. So I said, all right, let's open up. And what I do, and I want to give you an idea, you could scan for fine ingredients on a weekly, and then MetaStock has a wonderful tool at the bottom. Let me see if I can get it to you. So you leave the results as it is, and I use this option here, results from the previous one. So that reduced my too much work, right? Because it's a fast moving market. I want to get in, right, for the entry. So I save time this way. And MetaStock has this tool so wonderfully working. It's unbelievable. So I like it and I use often. And it reduced my number of security I need to look at. So this way, weekly and daily is matching. All right, so I'm going there. So you could do with the monthly same way, right? I use every way I can. I start drilling from monthly to weekly, daily. I like it, they're all matching in my magic lines, right? So this way I am not going against the trend. So each of them has to be having like this one. So in this case, this is a weekly chart and they both green and red. So green is above the red, same way here also, both of the time frame. That's a good thing. And they have both 5 ingredients matching. So for instance, here is the direction line. These two lines are parallel, about 0. That's good. I got here spike. That's good. And I got pure health in my favor and ribbon. Good to go. You don't need to become a scientist to figure it all out. And then they had even yellow bar earlier than this. So I could take this entry, right, and get in there. And it was telling me we're going to go higher. Look at this here. On a scale of 1 to 6, it's a 3.3. So risk is middle. And this is one of the best color for many, many good institutions coming in. And we have a track record of all the tracking of institution I used to do manually with all my friends on a Wall Street. Now there are a lot of data available either on a CBOE side or dark pool data or this data. And I'm showing that in my alert room, very transparent way. When they take position, like dark pool bought it, we see the colors. I have nothing to do with dark pools or nothing to do with CBOE, but they buy options, we see it here. So I trust my software, I make decision, but some skeptics we got to still keep checking, right? Just after all these years, and I keep track of all these things. I document things because I come from engineering, so we like to document things, right? But after a while, I say, why you want to waste time? But I do often that in my alert room, I show them. So you could see here on a daily chart, here is the yellow bar, that's the catalyst. And here the entry could be on a bigger side of the institution side, could be that week, or yellow bar, if you trust the software, you could still get in there, right? And you could pick up a day, which is here on 10, right? It was happening. So what is happening from the date itself, daily was feeding the weekly. So the money is coming from the bottom, right? And how I know, right? Let me see if I don't have the option thing here, right? Option has its own expert, but if you get chance, we could see it on a chart. But that's a little bit further looking at other than these 5 patterns. But YB will have different symbols underneath YB3, YB4. So YB3, that means 60 is building daily. And same YB3 is in 60, that makes sense. And suppose it is even in a 15-minute chart, that means, right, why 60-minute is very strong and it's building up. And sometimes we see YB4, that means the 50 minutes money coming from 15 minutes to all this time frame to build the bigger time frame. So this is a little advanced, but I just want to give the idea to the existing clients. Now, let me tell you where we wound up in the Magic Trader. I was having my first software. I was traveling with Kelly, Jeff, Scott, and everybody around the country and in a couple of other countries. And I realized I got to wake up early in the morning, do my trading plan, and then call the broker or text him and whatever, right? Or some of them beepers era, right? And I spent 3 hours. By the time broker, oh, market moved a different way, but S&P was looking this way. What it changed because of this news, and I'm in transit. I said there got to be a better way. I could make decisions without all this traditional technical analysis and spend 2-3 hours every day. You go crazy. So I said to myself, I got to apply what I learned and what deficiency I saw on a Wall Street institution side, prop trading side. I could use that knowledge and pinpoint entries I could find. And this cannot be based on a just price. It has to be based on the risk. And I discover the whole new world of thousands of risk in trading, which hardly people even knew. And it's all right, we're going to file for patent, right? And then we invented total 9 different dimensions. And horizontal time risk is one of them. And price perceptors is one of them. So which are all these different colors you saw. Then I started seeing things. The magic line took me 6 months to design because I did not know how to program it. I never had a formal vertical training in writing the code. Thanks to Jeff and somebody else, they showed me one simple thing because I didn't know anything, right? And I don't like to read kind of manual or formula primer or anything. I said, type it in, and I struggled. And then 6 months later, I jumped from the bed. I said, this is why it's not working. I took out one little item from them. It went through and I couldn't wait. I saw on a euro, holy cow, all the risk takers are on one side. On the other side, everybody else is there. I said, wow, that's cool. That's how I wound up having magic line discovery and everything else created later on. So that's how it was done. My daughter was really very helpful to me. And then we want to be discovering all these different risks. I said, there got to be a way we could put it together. She helped me. A lot of graphics you see, She was a young girl, and she put so much efforts into Magic Trader, including now, right? And that was a blessing. And she has a long history of doing various businesses with me because from childhood, at age of 9, I started training just like my father did it. And this girl grew up, right? She got married. Now she works for the biggest, one of the Wall Street company, and she's happily married. And myself, right? I was a stupid investor. Let me be honest with you. And I give, all right, here's $500,000. Go make me money. And the brokers, most of them didn't do a good job. So I started hanging around with, on a construction side, I had a all connection. We building up purchase all the buildings. And so I got connected with Wall Street. I was lucky, right, to meet one attorney. He introduced me a brokerage company, and that got me into travelers, right? And I played behind the scene a lot of things, right? Business, kind of my 2 cents, giving them what to do, right? And I wound up getting Series 7 663 because they won't pay me otherwise. And I had 10 days to pass that damn test. And then I got yelled at, hey, you overstudied. You should only get 70 on a both test of Series 7. I got yelled at. I said, wow. He said, that's how Wall Street works, to the point. I said, wow, I didn't know that. I was, naive back in days. So I was fortunate to get exposure to many institutions, not one, order flow, right? They're putting billions of dollars. They have a vice broker. So I used to go to traditional office and so you're not allowed. But my neighbor took me there. So I learned so much things. It's like unreal world, which retail traders will never get exposure. Now, probably now they have electronics rooms, so nobody gets that unless you know somebody. So I write everyday market analysis, write a couple of points which helps traders to make logical decision, right? I discovered something called gamma. Not actually, I know gamma for a long time, but I discovered application without option data on delta. So I write sometimes things like that, and more or less my focus is how the games are played with all the big guys, dealers, market makers, because that's where I witness and practice, right? I was one of them. So I try to write those things. If you want, then you could use this code and send it to me, text on a WhatsApp, right? I will put you in a right group. We got several groups and you will get it for free, no string attached. We don't even talk about much about software. Only time I will put it down that it shows this way and that way, but not sales pitch. This is technically to help people to get educated of the market. That's what we do it. Please register on themagictrader.com. There's so much education stuff which you normally don't find because this is actually institutional product. Now we figured out how to do it in a retail side. So sometimes I struggle because I came from one extreme to now going another extreme. So I will just spend 5 minutes for all these slides so you get an idea. Some people have a question. It is applicable to this, that, as long as Jeff Gibby gives you definitive data, you could trade anything you want. And if you know how to create those custom symbols, you could do that too. It is universal, as it is risk-based. So all these things, I'm not going to each of those, but you could see I care about identifying, analyzing, controlling the risk, transfer the risk, reduce the risk assessment, right? Practically, you see the forecasting 1 to 6 is an assessment of the risk and forecasting based on that. So it is there. So risk forecasting feature is a unique feature, which is an institutional feature. We give it to you, thanks to Jeff Gibby and Kelly. They allow me to do a lot of things which I'm not supposed to even get that. So thanks to them. So this is what I wanted. Yes, I do have a lot of time I spend with my family. 6 o'clock later, I'm hardly answering even text message. I'm spending time with my wife on weekend too. But you are a trader, right? You always have your third eye in S&P futures, even though you don't trade it at that second. But Sunday, I will look at 5 minutes, what is happening, how market open up at 6 o'clock, then go to sleep or watch TV. So these are the traditional indicators which I used to use it, Fibonacci, iTunes, whatever, right? I don't use that anymore. That doesn't mean they are bad. I found another way, like Fibonacci, we have magic zone lines, and those are very powerful lines, right? If Jeff Gibby can do it, because I do have some issues, right, of opening the chart here. I don't know why. I'm trying while I'm talking, right? Let me try something here, different way. So I could open up the chart, and uh, while Jeff is talking, I will try to fool around a little bit, right? So, or restart MetaStock. I don't know what happened. It was working before. Let me try, at least if I could use different idea to open the chart. So I could answer some question, and Jeff maybe can talk just after me, because we do have some time, but I don't want to take up his time because he's going to show you magic trader better than I can do it. He's pretty good what he does.
I don't think I could do a better job than you, though, Peter.
Oh, you do. I saw your presentation, right? You gave me surprise. It's so good. You really break it down pretty well. So what I could do if we have a time left, right? I just want to show one thing to them. So this is how the software is designed, right? And don't get intimidated. So look here, very simple. I try to find a way. So look at here, it is offset. So what? We have a symbol here. So by the put option, this is on a weekly chart, right? And I get in there, right, as early as I can, and then worry about later, right? And I see here reversal, I take the profit, and then I will short it again or buy another option or do whatever I feel it is going down. That's bottom line. Magic lines are pointing towards down, right? I just put it IBM pump fluke, right? Whatever the symbol later on after Jeff is done, I will come back and show it to you. Look, over and over again, same thing. Here is telling you right here, institutions, right? This is the tail end, but look at it. It went down from 134 to 130. What is wrong with you? Even though you don't want to see the future, if you do, it's fine, it's better. So you make logical decision. If you don't, it is fine. You look at the symbols, you could scan these things. F1, you could scan it. So institutions are piling up. Oh, there is no direction line, but direction line was there. So you just have to look at the entry, how you apply this thing. Look, how long it was telling you we're going down. So it started here, then consolidated, then another breakdown. So we missed it. So what? You go in here. This is my favorite, side by side, or they are overlapping spike. That's another life. So I have to tell you, you scan for red spike, and if you open the chart, right, and try to take it out, most of them by volume and a price. So you could afford that security if you want to short it. So it's instant. Some people cannot afford 130, but volume scanner use, it comes with the magic trader, and get into the game. Oh, you see red and you watch. Red itself is good because these two parallel lines, and this pure thing is there, and this entries is there, and then E1 is there. So this is my favorite to short it, to be honest with you. That means there is juice there, and institutions are piling up. I don't need to call Citibank or my friend in whatever bank is, right? So basically, they're all taking positions, and we have also documented they taking positions. I used to call them. Hey, what are you doing? Oh, I shorted 50,000 shares. Which one? Oh, I said, let me send you my screenshot. How did you know that? I said, my software says that. These are the teasing I was doing with all these big shots. And one of the institutions, I'm not going to give you the name, that was my third institutional great experience, right? So they made a statement. Your software shows so earlier entries. We are thinking to get rid of some of your analysts. We could give our client benefit of that. That was fascinating. and this is one of the largest investment bank. So Jeff, take it over, please. So,
yeah, a couple questions, if you
yes,
don't mind.
go
We
ahead.
have some, Manuel wants to know, and I thought this was a great question, based on your history, does this work for currencies?
Yeah, it does currency. In fact, I trade Euro, USD, Swiss franc, and it works so good because technically at that time my clients were heavy duty concentration on a forex trading. You remember that? while we were doing forex traders advantage.
No,
So,
for sure. Yeah, that was the whole name of the product.
Yeah, when we traded professional room in Amnovia, we bought all those traders there, got them licenses, right? So I could freely talk, buy here and buy there. And we started with currency. Then we started with futures. Then we started with stock. That's the direction I went.
Cool.
And it works. And every day market analysis, I send something for cryptos. So far, so good.
Yeah.
We don't even charge people. So I don't know.
Yeah, Manuel, literally the first product Peter ever designed with this was called FOREX, a trader's advantage. He does really well with currencies. John wanted to know what percentage of your trades are profitable. And we may not be able to answer that.
I cannot disclose because I'm licensed, right?
Mm-hmm.
I will get in trouble with the regulators.
Yeah, one of the things that's nice about Magic Trader, I'll say this though, is you can try it. It's a subscription. If you want to, you can pay for a month. We'll give you an extended trial for that. I'll talk a little bit more about this, but if it's not helpful for you, you don't have to keep it. So,
and I will tell you honestly, anybody performance is not good for you. All thing matters is how you pulling the trigger and how you manage your risk. And if you don't know all the indicators or all the patterns, don't mean nothing, because you were in a right trade, you end up losing because you don't want to take loss. I do take a loss based on my drawdown, right? Because market make big swings sometimes. It's out of control, right? Somebody says something and market will drop suddenly 100 points on S&P. What do? So you are in position, you got to get out. So nothing I could do about it. I cannot control those risks because if I do, it will eventually come back. But I learned one thing: take your loss and run. Don't be hero.
I wanted to actually, if people, we had Peter in, and he came in about a couple weeks ago. John, I'll cover the pricing information in just a second here. We do have a special where we're going to do an extended trial like we're doing with MetaStock today. Peter, if you don't mind, I'm going to just take a little bit of time.
Take it over. Yeah, take it over. It's all yours.
Cool. So everybody should be able to see my screen. If we had Peter in just a minute ago, or just a few weeks ago, and we talked a lot about Magic Trader, and I showed a Tesla chart. And at that point, if you've been following Tesla at all, you can. It's been having a pretty good run this year. I'm not quite as active as a trader as Peter is, but I just want to show you how this can help with looking at stocks and evaluating stocks in the 5 ingredients. So, and this is the same chart I used, and it's kind of interesting that the direction and the momentum of shift. And if you know anything about Magic Trader, is very, very clear on the chart in terms of why that's happened. So here, just before we had a green spike, you had a yellow bar, you had this bearish to bullish, and then the ingredients that Peter talks about kind of come into play here. You get kind of the health time risk, you get the spikes, you get kind of a color coding that's very, very clear that this thing might start to run. I want to point out that temperature has started to go a little bit differently since that last webinar, and it's so clear on the chart. For example, here you get the entry spike for the bearish and a bullish one again, but you had an indigo bar. You've started to see that shift from the bearish. This is obviously losing momentum. And if you're looking at this from an ingredients perspective, it's really, really clear. I mean, just take a look back here, and it's not perfect. There's nothing that's perfect, but I would encourage you to try this. Take a look back here in terms of kind of how obvious that Tesla was selling off. You have your indigo bar, you've got your horizontal time risk, you've got these health indicators that are vertical. all of the ingredients are kind of lining up, and it helps if you're trading to kind of have a clear picture of what's going on. And I like it the way that Peter has kind of made it very, very simple in terms of reading the charts. If you know what you're looking for and if you know what the ingredients are doing, it makes a very, very clear picture. And I think, in any case. So Peter asked me to show how scanning works. Oh, I forgot to turn on my camera. Let's do that. Peter asked me to talk about how scanning works. And I have talked about how much I love scanning all the time, because one of the things about me and kind of where I'm at in my trading career is I do a full-time job. In fact, this week we're going to stay in the YouTube chat room for about 60 hours. And just, but what I love is that how easy it is to run a scan in MetaStock, and that includes all the magic trader. So we talked a lot about the 5 ingredients today. Right here, here is the 5 ingredient scan. And so right here, this is what we call the power comp. So I've got the scan loaded right here, and I'm just going to scan for the 5 ingredients. I've actually got the scan run just to save a little bit of time so that we could answer any questions that you might have. But I ran this Magic Trader scan against the Dow Industrials, the NASDAQ 100, and the S&P 500. That's the universe of stocks that I picked. Now, I want to say that also, if you're joining us, if you're watching this from India, and you want to do NSE data, you can run the same scan on NSE data. You can run it on London data. You can run it on Australian. So if you're interested in markets that are not US centric, we have the data for you just because we get it from Refinitiv. So anyway, let me show you how that report looks and how you can review that report. So I'm just going to go ahead and right click right here and look at the report. It's going to pop it up over here. And what we're going to see is like you're going to have the complete report. Now, I'm going to kind of make this a little bit smaller because I want to show you how you can cheat and know exactly what these columns mean, because you might not know what DL-BU means, or HE-bull. But right here, what I've got is I've got a list of all of those stocks, all of those 516 stocks, and I've got all of the ingredients listed. This column right here, is basically, if I hover over, this is how you can cheat to see what the columns mean, is the magic direction line. That's your first ingredient. This column right here is the health indicator bullish. And again, you can see that right here if you just highlight over. This right here would give you a green spike, et cetera, et cetera, et cetera. All these ones, pardon me, just a second. All of these ingredients are listed out for you. And so if I want to see one that has quite a few ingredients, I can see like NiSource has a 1 here, a 1 here. The green spike, it doesn't exist yet here, but it does have a Pure Health and a green ribbon. So out of the ingredients, 4 of them are matching up again. Hold on. All right. So with scanning, with MetaStock, it makes it really, really easy to do. I love how well this is designed. Let's talk a little bit about pricing. Thank you, John, for the question on that, and thank you for letting me come to it, because I've got a PowerPoint that's ready to go with it. So let's go back in here, and the Magic Trader Elite is a huge add-on. Peter was very, very thorough in the stuff that he's designed. It's got 58 indicators. It's actually got 47 explorations. It's got 2 expert advisor, 35 templates. And a lot of those templates are kind of like, I just showed you the daily clean template, but a lot of them are daily, weekly, monthly, intraday, different time frames that you can look at, and they're all kind of put together for you. It has a 127-page manual, which I thought they did a really good job writing. I think Peter wrote most of the manual for me, but he can correct me if I'm wrong. But one of the things that how I learned about Magic Trader as the product was done, I read the manual, and I was able to kind of get a really good understanding about what was going on just by reading the manual. It's got highlights. It's also got, I love to talk about the commentary window and how it works to kind of give you good advice. I'm going to jump back into the program and just show you the commentary manual, because Peter did a really good job with the commentary, not the commentary manual, but the commentary. Again, the commentary is a feature in MetaStock. If I open it up, it's going to give it's going to tell you exactly where things are and kind of what works and kind of gives you an English definition. And here it is. So right initially what you're going to get when you open up the commentary is you're going to get kind of some of the data. You're going to get kind of like a scoreboard for how the market is doing. And then you're going to get a summary of what's going on with those 5 ingredients. So if you're kind of learning what the 5 ingredients are, right here it's going to say the magic direction line is bearish, neutral, setback trim spike, and you kind of get the idea. And we can go down through here, and it's just going to tell us, it's going to kind of break down all of those components. Obviously, we don't have time to read through this all. I don't do a great job of reading out loud anyway, but it does a really good job of kind of breaking that down for you. So the normal price of Magic Trader Elite is $199 per month, okay? And it's well worth it at that price. And we do have a special that's going to be kind of, that I'm going to talk about in a second, where we will, like we've been talking about with MetaStock, give you the 2nd and the 3rd month for free. So it gives you a really good amount of time to try it out and make sure it's going to be something that you like and that works for you. We also give you access to some bootcamp training at no additional cost. It's available for you instantly on the download. So I'm going to talk a little bit more about that. There was one other thing that I wanted to talk about, and that's a recording, recording session that Peter and I sat down and did. Actually, Peter did all the work. I just made sure the room was open and the recording was running and that kind of stuff. But we sat down and did like 20 hours worth of training on fundamentals of Magic Trader. You can see what his, it was broken up into 4 different modules. He talks about the 8 dimensions of risk, the Magic Trader charts, the introduction to the 5 ingredients. I'm going to skip around a little bit here. You can read this if you want to. Directional lines, introduction to the various types of lines, the bullish and bearish believers, and magic lines and how those work. He did a really good, extensive job with this training, and it's over 20 hours of training that's available. The retail price on the training is normally $199. Peter wanted to put together a really good special for this event, only for this event. So normally, like if you paid for 190 or the Magic Trader Elite for $199, it'd be $597 over the course of 3 months. If you paid for those recorded trainings, it'd be $999. You do actually, as part of kind of the access, you get access to Peter's education portal, the Magic Trader education portal, and then there's also a boot camp that comes regardless of whether or not you do the advanced training or not. That's a $400 value. So the total value for the package that we're going to offer today is like $19.95. Okay, but the price that we're actually going to do for that is going to be a package deal for you. So this is available. It's only good through 2/29. It's good for 1 week from today. It's going to include all that stuff we talked about. 3 months of the Magic Trader Elite, that value is $597. The recorded trainings, $999. You get the education portal, which is access to the Facebook group. There's a site on that. This is the magictrader.com that has an educational page and access to the Facebook group. Those are included as part of it, no additional cost. You're going to get the boot camp as well. So normally, if you remember, the cost of that was $19.97. If you do it here between now and 2/29, the cost is going to be $7.99 for you. So it's only available to February 29th. $7.99 is the price that you'll pay. Okay. If you don't want to do the educational training, I'd recommend you go with that package. But if you only want to just do the Magic Trader and see how it works, we'll still give you access to that boot camp. As part of that, if you pay for a month, we'll give you the 2nd and 3rd month for free, like we're doing with MetaStock here. Okay, so your 2 options are $7.99 is the complete package price. It'll include Magic Trader Elite. It'll include the recorded training, and it'll be just $7.99. Okay, or if you just want to kind of dip your feet in the water, you can do a 1 month, an extended trial. You'll pay $149, and you'll get 3 months. It's basically $50 a month, which is incredibly cheap. So those are the 2 options. If you're already subscribed to Magic Trader, thank you. We appreciate that. You can actually, we'll do a special on the recorded training for $6.99. So you can take advantage of those. Are basically the offers. If you already have Magic Trader and you want to just get access to all those really good training packages, $6.99. I would recommend, if you're new to Magic Trader, do the full package because it's such a good discount. And all of that training is so thorough. It's really going to give you what you need to get going. So it'd be $7.99. To do that, you can give us a call, 800-882-3040, or you can visit us online at metastock.com/saleschat. Mention today's conference for the promotional prize. So, John, thank you for your question about that. Hopefully that answers the pricing discussions. If you have any questions, get in touch with us. So here's how you can do that. So, or you can give us a call if you're here in the US, and that's how you can do that as well. Peter, I want to say thank you for coming in. I appreciate your time. How did I do today?
Yep. Are you muted?
No, I'm not muted.
All
No,
right.
neither are you.
Are you asking me or anybody has a question?
I think we hit all the questions.
Okay.
I wanted to thank you for coming in and ask you how that
And
was.
I appreciate you giving me an opportunity to speak here, and I appreciate your staff also. You did a great job. Everything is well organized, and thank you to all the traders who took time to come into this event. And anybody has a question, we are here to help you.
Thank you, Peter. We really appreciate your coming in. And I do also want to reiterate that. Thank you, everybody, for attending. We have had, it's been such a great event. Thanks again, Peter. Appreciate it.
Thank you. Thank you.
Okay. All right, I'm going to go ahead and dismiss you. Let's go ahead and do that. Okay. And we're going to move on a little bit. Yes, MetaStock, that is a great point. If you're watching us on YouTube, don't forget to like and subscribe. It helps a great deal. We appreciate it. And if you subscribe, you'll get more videos just like this one. We're not on like 50 hours every week, but we do a lot of really, really good content on YouTube. And if you subscribe, you will get notified by YouTube when we go live. So we do appreciate it. It helps a great deal. Kelly, we are going to give away a prize right now. But before I actually bring you in here, what I'm going to say is thank you to CMT Association. Well, actually, we did CMT just then. Thank you to Stocks and Commodities Magazine for sponsoring the event. We appreciate it. We appreciate all the work you do. Big subscribers, big supporters of the summits and the conferences and that kind of stuff. Norm, I can see you getting ready. We're almost ready for you. Actually, you can help me out if you want. I see Kelly on the camera, and I do see Norm. Okay, Kelly, let's have you help me with the prize.
Okay. And, either way.
Yeah. I just saw the camera open. I didn't know it was you. So let me go ahead. Let's pick out a prize first this time. You know what? I've only given away one of these, but it would be a really good intro to our next speaker. So we're going to give away 1 year access to the Disciplined Trader Mastery Program by Norm Hallett. Are you familiar with Norm Hallett?
I am. He's pretty awesome. Pretty excited to hear him coming up too.
He's really awesome. I just have one question for you, Jeff.
Yes.
You didn't make those license plates, did you?
No, I did not.
Okay, just wondering.
I did have somebody ask me if I crashed all those cars, though.
I didn't know how to couch my question. I thought I did a pretty good job of it.
That was great. Norm, since you're talking, you're going to help. You know, there's no such thing as a free lunch. We're going to make you help here. I need you to help me pick out the winner of your prize.
Beautiful. Just, I'm ready.
The number. Yeah, the number, let's see, we're going to go here. Let me grab the list here. I need a number between 1 and 12,200, and what was the exact number? 12,523. Any number between 1 and 12,523.
I'm going to go with 666.
Okay. 0666.
It's a little bit devilish there, I would say, Norm.
Yeah, you have to be as a trader. You know, that's part of my introduction.
All right. So now I might actually have you describe what this is too. You might have wanted to be quiet for a minute, but so the winner of this prize is Mike S. in Canada. We're careful. I haven't doxed anybody, given their information out over the internet at all this week, but this is Mike S. at Canada. He's going to win your prize. Do you want to tell him what it is?
Yeah, the Disciplined Trader Mastery Program is our flagship product. The first edition was made over 15 years ago, and we've been adding to it ever since. Just very briefly, it's all about your mental and emotional well-being as a trader, which is really the majority of my concentration as a trader and as a helper to traders. But the Disciplined Trader Mastery Program has a number of different assets that will allow you to be more disciplined when you trade. I mean, we all know that the majority of traders lose, and we know that the majority of traders do nothing for their mental and emotional well-being. And I believe the two are well connected. Most have a pretty gosh darn trading plan. When they come to me with trading plans, sometimes I have nothing to winds up that the issue is the mental and emotional well-being. So I'm really happy to be able to give this away to you. So if you have any questions, whatever email that you get from me, or maybe we'll pass it on a little bit later, but email me and let me know. You'll see places to get a hold of me. But it's a self-explanatory thing, and when you get it, you'll be able to log in and take a look. So congratulations.
Yeah, congratulations, Mike S. in Canada. Norm, I just turned this presentation over to you. We can see your screen, and I will get out of the way. It's your turn. You go.
Okay, you can see it. Okay,
we can see it. Yeah,
beautiful.
Absolutely.
Well, welcome everybody. I'm glad to be in this. There we go. I just wanted to today I wanted to talk about prop trading. It's a recent love of mine. I mean, I just couldn't believe it. If you don't know what prop trading is, well, here's a definition. Well, there's the promise, but the prop trading firms will fund you. These are firms that are usually hedge funds and other entities, but they will fund you for a $50,000, $100,000, up to a $300,000 account that I've seen, and you can earn 90% of the profit. I mean, how the heck can that be? They don't make it easy. I mean, trading's not easy. But if you're a good, successful trader and you don't have a big stash, I mean, if you're trading with 10,000, 20,000, this is something that you may want to consider. There are rules. I'm going to go through some of them today. I'm not going to ask you to buy anything, which I hope you're thankful for. I'm here really just to lay out what prop trading is all about. I call the presentation How to Pass Prop Trading Testing and Get Funded. Now, I have gotten funded. I'm going to show you what I've been able to do myself over a short few months. And I just, you know, you look at this and you say, is this really true? And it is. And I'm going to show you how all of that works. The promise that I have for you today is I'm going to lay out the pros and cons of prop trading. And by the end of this presentation, you're going to have a clearer idea of whether prop trading is for you. Simple enough. All right. I'm just going to, you can put your questions, any questions that you have. I'll take a break here now and then in the question area, and I'll make sure that happens for you. Okay. Prop trading overview. Prop trading firms will fund you again for 50, 100, 100,000, 300,000, but there are pros and cons, and I've listed a few of them here for you. The pro, of course, is it's their money and your profit. They will pay you 90% of the profit. It used to be 80%, but about 6 months ago, most of these firms have gone to 90%. And I'm going to talk about two firms that I've decided to interact with. I've actually done a presentation with one on the mental and emotional aspects because it's important. If you're not mentally and emotionally sound, this won't work for you. You need to be a disciplined trader. But if you are, or you believe that you can be, then let's continue. The pros, again, their money, your profit. There are millions being paid out. In fact, Apex, one of the companies that I've been doing most of my trading with through them, have passed their requirements, and they're celebrating having given out $10 million over the last few years to their traders, and they have a special. And again, if you want, just communicate with me any way you can find me on the web. I'll give you my email address at the very end, and so that you can write me directly, and I can give you all any information or answer any questions that aren't answered here. But Apex is one of the two firms that I've been concentrating on. And I had certain criteria. I wanted them to be around for a while. These two firms that I deal with, Apex and Top Step, have been around for several years, 4, 5, 6 years. They've been paying out consistently, which is important. And you'll be able to tell by their operation that they know what they're doing, and they're for you if you can do this. Of course, they're there to make money. They're there to help you trade with bigger bucks if you don't have the money, but they're also there to make money. And that's, as far as we're concerned as traders, it's okay for them to make money, but we don't want them to make too much on our expense. So I listed a few of these under the cons. Okay, there are fees during the evaluation. When you start, they will start you with a SIM account, and you'll trade that SIM account, and you'll have to make X amount of dollars before you lose Y amount of dollars. And I'm going to show you some of the X's and Y's in a second. But as you're evaluating, as you're testing to be funded, to be a funded trader, you will be paying monthly fees. Now, if you can pass this in a month, I actually passed the $50,000 funding in 10 trading days. If you can do it in 10 or 20 trading days, you'll pay one fee. If it takes you 3 or 4 months to get your bearing, if you're a newer trader, you're going to pay this fee a number of times. And for instance, for a $50,000 account that I just mentioned, the smallest account that they will fund you for, it's $160 a month. So that can add up if you're not going to be serious about this. So there are monthly fees. There are also reset fees. As you trade, you may find yourself in the hole a little bit. If you're allowed to, say, have a drawdown of $2,500, which is the number for a $50,000 account, and you blow out the account, or maybe you're down $2,000 and you don't want to have to come all the way back to make the $3,000 that you have to make. Those are the parameters, incidentally, for a $50,000 account. You've got to make $3,000 before you lose $2,500. Okay, and if you decide to reset your account, if you blow out the account, or you decide that you're in the hole too much and you want to kind of start over, with Apex, that's an $80 charge. With Top Step, it's a $99 charge. So all of these things can add up. Those are not cons, but they are costs of doing business. And you have to remember that they know that 90% of traders who try this, who test, are going to, they may get close, but they likely will not pass. And a large percentage of those who actually get funded don't stay funded for a very long time, because maybe they got a little lucky in the testing, maybe they got, and they've got to retest in order to be refunded if they blow out their trading account that they're getting paid 90% for. So you have to be a consistent trader in order to make all of this work. Okay, let's get into it a little bit from the standpoint. Well, I wanted to kind of give you a reason really why you really want to hang on to a few of the things that I'm saying. Here are some of the things that I've earned in the last few months. I started working with Top Step and passing their prop testing. And with Top Step, incidentally, you have to, when I mentioned about 3,000 winning and before you lose 2,500, you have to do that twice with Top Step in order to pass. You have to pass it once and then pass it again. It's their way of saying, hey, I'm not, once you may have been lucky, but let's see you do it a second time. If you do, they'll fund you. With Apex, you have to do the same thing only once. So a lot of traders go over to Apex. That's where, when I started this journey of mine, because it was started by a number of traders on my list who had a passion for, they weren't able to figure it out, and they asked me if I knew anything about prop trading and how to pass the evaluation, and I said, well, let me take a look. And so I decided to get into it. Okay, there is a huge difference between Apex and Top Step, and I'm going to just take a little bit of time in a couple of minutes. I'm going to tell you why they only allow you, they only make you pass it one time with Apex as opposed to 2 times with Top Step. They judge the drawdowns a little bit different, and I'm going to explain what that is. But I wanted to show you that they give you these certificates when you pass the 50,000. I just last week passed the 150,000. I'm working on the 250,000. You got to deal with these a little bit differently. I'm finding out it's actually, believe it or not, I find easier to pass the larger numbers. They give you a little bit more leeway. I'm finding it. I'm over halfway to what I need in the 250. By next week or the week after, I'll have earned that certificate. I just want to emphasize that it's real and it's true, but I want to further emphasize that if you're not disciplined, it won't work. Okay, let me show you how, a little bit about me just as background. My career, in the beginning of my career, when it started in the 1970s, actually, let's call it 1980. I was in the option business and actually wind up running a very large option firm. I started as a broker and became a regional vice president for really one of the largest option firms in the country at the time in the 80s. And then I started my own, sorry, let me redo that. I worked for Payne Weber for a while after the option firm. Option firm was ITG. The Payne Weber was that was at the time where you were being bought out by large companies if you had a bit of a reputation. So I took the offer with Payne Weber, but I never really liked it there. There was more of a selling organization than anything else. So I was only there a couple of years. I was a commodity specialist for them. I also, I decided, let me do it on my own. So in the 90s, early 90s, I started the Hallett Group, where I was actually a commodity trading advisor managing 250,000 or more for qualified clients. So I was managing millions, and I was making 20% of what I earned. I did it through my own introducing broker, so I made a little bit on the commissions that I traded, but the idea was that I was making 20%, not 90%, which is really what hooked me into this. The Disciplined Trader Mastery Program has been my love for the last almost 20 years now, because I've recognized that traders out there have talent. A lot of them have fabulous talent. But even those with fabulous talent, the vast majority are losing, and it was because of the mental and emotional. I happen to be married to my wife, Tisha, for over 40 years now, and I happen to have married probably one of the greatest mental trainers that the world has ever seen. She's graced the cover of a lot of psychology magazines and so on. But she is really the heart and soul of the material that we offer when I'm dealing with the Disciplined Trader. And the Disciplined Trader Mastery Program that you just won, the individual from Canada, I think you're going to bear the fruits of what we've put together over the years. So a little bit about me. I mean, I want you to win, and a lot of times, when you're up against the wall, and when I say up against the wall, I mean when you're trading a small amount of money and every trade has a critical meaning, you're not going to make it. This whole thing with prop trading really gives the small trader a chance to to work with a reasonable amount of money. Not only that, but it also helps retired individuals. I do a whole class on this as far as retired individuals concerned. Why risk your own money when you can risk theirs? Okay, the book on the left here, the How to Construct, Design, and Effective Trading Plan. That I think is still available. In the beginning of my career, I was known as the guy who wrote trading plans. And anyway, that's all I'll say, because I really think that if you have a solid and SIMPLE, simple trading plan without all the lines, I'm going to show you my chart a little while. You'll see the lack of lines on my chart. And I think most traders really overdo some of the action on their charts. Okay, let's get into prop trading. What you're looking at here is the offering of Apex Trader funding. Okay, this is, and if you're thinking about doing this, make sure you email me. I have a 50% discount coupon for anybody that wants this. So instead of $167 a month right here to test for the $50,000 account, it's going to be closer to $85 or 80, whatever that is, $83. So you're going to, and your resets are not going to be $80. It's going to be $40. So I can do that for you, just a given to you, whether you ever get anything from me or not. Just ask me email me and ask me for the discount coupon, and I'll get that for you. So here we have the different categories. They actually offer a 300, but the math doesn't really work. You're better off getting the 250. So this is the one I passed in 10 days. This one took me a month to pass, so almost 20 days to pass. And sometimes I don't trade more than a day, and then I got to do so. I'm running a business, and most of us out there are running businesses or have other things to do. When I say I passed the 50,000 in 10 trading days, there were probably 2 or 3 trading days where I traded the whole day. And that's it. When I say the whole day, I mean from about 10 to 2 or 3. Okay, so it's something that you can do in between the things that you do. The only thing I'm going to say right here about this, and you can go to Apex's site and look at this, but I wanted to. This is the sweet spot, I believe. The $150,000 account. Look back again at the 50. This is where most traders start. They think, well, I'll start small. It'll be easier. No, it's not. They'll allow you to trade as many 10 contracts, 100 micro contracts. I mean, who's going to trade that? 100 micro contracts. Incidentally, while you test and while you get funded, Apex trades for the feed. Now, as far as platforms are concerned, Apex requires you to use NinjaTrader. I was not using NinjaTrader. I learned it as I was trading. It's an easy program to learn. You know, I was using TradeStation for ever since I can remember, you know, for 30, 40 years. And in any event, look at here. We have 10 contracts that you're allowed to trade. Your profit goal is 3,000. Your trailing threshold is, and that I'll tell you why they name it trailing threshold, is $2,500. You can't breach that. And your NinjaTrader license is free, etc. Okay, you can trade as long as you want. You can lose $2,000 in one day, and you can still be in it. With Top Step, which I'm not showing you, they only allow $1,000 a day in drawdown. So this is a very free-flowing organization that allows you to trade the way you want to trade without a lot of the restrictions. But there is one basic thing that I keep on stressing, that they do that others don't do, that make it tougher for you, that require you to be a disciplined trader. Before I leave this slide, let me just say that if you look here at the 150, you've got to make 9,000 before you lose $5,000. Just the fact that you have a little leeway here, $5,000, it gives you enough room to have a day or two that didn't work out in a row and still jump back very quickly and do well. Here you start putting yourself up against that veritable wall that I talked about. You can do this. It's a little cheaper, but if I can give you 50%, I'd rather pay $150 here a month. And if you're new to this 2 or 3 months of paying it. It's worth it if you can get funded, right? So this is the 250 is the one I'm trading. I like this because it's 6,500. So you can look at their permutations here and decide what you want to do. But I've done, I have my degree in mathematics from the University of Cincinnati, and I have ascertained that the 150 is the sweet spot. So consider that as you go, okay? And if you want to start with the 50, that's fine. But I'm going to make a different point in a second to you. But let me give you a couple of tips. If you're already doing it and not having success, I want to make sure that that you get a hold of these tips. Some of this may be able to really help you out. Tip 1 is the closed, and this is really that difference that I talked about. With Top Step and with most other firms, if you're testing for a $50,000 account, as I've shown you, and you have a $2,500 trailing threshold, if you have an open trade equity, let's say you start on day 1 with $50,000 in your simulated account, you put on a great trade. You've got an open trade equity of $1,000, so your open equity is $51,000. You want more, okay? But you close, so you let the trade go, and it comes all the way down. You put in probably the most cursed movement in all of trading, the break-even stop, and you put in the break-even stop, and you get hit. You still, now at the end of the day, this is the only trade that you made. Your trailing threshold remains $2,500, and you have a balance still of $50,000. You had 51 for a while. You let it go. You broke even. You try it the next day, and your trailing threshold remains $2,500. So they judge the open trade equity as such. Open trade equity. Apex is different. This is why you only have to pass once. Okay. Same thing, $50,000, same $2,500 trailing threshold. The open trade equity is the same on this phantom trade. You're up $1,000. You want more, but you don't get it. You put in the break-even stop. You close your trade at break-even, but this time your trailing threshold is now $1,500. Apex wants you to take what God gives you, so to speak, as my mother used to say. It judges you on open trade equity, not on the P&L. It judges you on open trade equity. So if you do this, if you have $500 in a profit and you give it back and break even, you do that 5 times, the account is blown out, okay, because you'll be through your $2,500. I hope you understand what I'm saying here, because this is a huge difference. It's an acceptable difference because it means that you need to be trained to be a trader the right way, okay? But it also means, it meant something for me that's different because I'm generally not a scalper. I generally am a person that looks for a little bit more from a trade and has some processes to trail a stop several, whether it's using a couple of, on a long trade, having your stop in a couple of, on the low of a couple of bars back, or the 1 bar back, or crossing a moving average, or average true range. There are a number of ways to defend as a market is moving. But so I've never been, and I've been pretty good at that. I've never been a scalper, but this has made me a scalper. Why? And it's actually shown me the beauty of scalping. So here I am, a guy that's been trading for 4 decades. I've learned the beauty of scalping. Not only scalping, I advise you, if you're going to do this, to look at trading a combination of scalping and day trading. I can't call it swing trading because you can't hold these. You have to be out of every position at the end of the day. Okay, you can't hold anything overnight. Another condition. Now I'm not going through all the rules, but I'm giving you the main ones that I think you need to be aware of. So I hope you understand the difference between judging your open trade equity from a P&L standpoint, as Top Step does, and from a standpoint where they count your open trade equity against you if you don't take it. Now, in this particular example, if you had a 1,500 and the next day you made $1,000 and took it at the top, you're back to only your $2,500 threshold. So it can go back and forth, but you want to make sure that you understand this dynamic. Okay, the remedy is to start with multiple contracts and scale out. That's the tip that I have for you. And if you're only trading one contract, you want to make that contract a scalp because of what you're looking at here. I mean, sometimes the risk is too big when you have in your scheme when you take on a couple, 2, 3 contracts. Sometimes you love the signal, but you can only take on the risk is too much. If that's the case, trade it as a scalp. And I'm going to show you. I'll be able to show you one of the scalping techniques that I use before this hour is over. So I wanted to show you this slide. This is actually a snapshot from a few weeks ago. I guess it's about 2.5 weeks ago. I had already passed this. This is actually a funded account. This was the first few $100s that I made a few weeks ago. But so I had passed this already. This was the $150,000 account that I passed last week. But I was in the middle of it. Had a big day in that account that day. And here is the 200. I was trading them all at the same time. Okay, a little bit here, a little bit there. And the $250,000 account. I only need another $5,000 on that right now, so I've gained into $6,788.10. How's that for this? But I wanted to show you that I trade multiple accounts because another thing that you want to do with this, you don't want to take shots at anything. If you want to do this prop trading, you really want to consider multiple accounts. Now, to be fair, I did start with the $50,000 account. I was trading it, and I said, boy, this, if you follow a system, this is doable. If you do it with the scalps and grab that open trade equity, but you let another end of it fly, you can do this, and you can do it quickly. As I said, I did it in 10 days here, in about 18 or 19 days with the 150 trading days. But I wanted to show you that if you're serious about this, you want multiple accounts, because there is a chance that something happens and that I could blow out. Let's say they're all funded. They're all going to be funded by this time next month. So let's say I'm trading, and all of a sudden something happens, a report comes out, and I made a mistake, or the disciplined trader doesn't make mistakes, but okay. But in case I do, I blow out one account. I still have earnings from my other accounts. So you've got to look at this as a business. You have to look at this as a professional trader, and you don't want to have one account, blow it out, and then have to retest and waste a week or 2 weeks to have to retest and get back on board. So while I'm retesting for the account that I slipped on, I'm trading the other two. So just want to give you that tip too, because it's something that was suggested to me early in this, and I thought, come on, they just want my money. They want more of these. They want more fees, they want more, and the more I thought about it, as I saw that how doable it was. If they use my particular trading plan, we call it loaded gun. If you use the loaded gun trading plan, you can actually pass multiple accounts. In fact, I now have another $150,000 account. So I'll be trading with a 250, two 150s, and a 50. And I'll be trading, and as I learn and as I do, I'll be passing all of that on. I've been passing it on to those that are with me. With the disciplined trader, with the simple trading plan loaded gun, which I want to offer you. I can't offer it to you today, but if you're interested in knowing more about it, again, just email me. Any email that you get from me, I'm going to give you a free white paper that I wrote on all of this at the very end of this. So it's free. I want you to have my white paper, and when you get that white paper, you'll see, you can just reply to that, and it'll come to me and say, hey, tell me more about loaded gun, and I'll tell you a little bit more about it. But I'm helping traders to pass this, and because I include a 90-day one-on-one unlimited sessions with me. Okay, the simple trading plan is just that simple, but you're going to have to get it down, and I want to make sure you get it down. Okay, so that was tip 2. Remember, tip 1 was understanding how the trailing threshold works. Tip 2 is think about multiple accounts. Okay, that may be your second step, but I want to put that in your mind. Apex Funding, I wanted to show you this just as they sent me this recently. They're talking about 2.0 now. 100% of the first 25,000 is going to be mine when I run these accounts. In fact, each of these accounts that I'm trading, that 50, the 150, the 250, the first 25,000 is I'm making 100%, 90%. I mean, it's not a huge difference, but it's interesting that they put that original incentive, that additional incentive in. Again, they've paid over 10 million, so that's why you know, you can count on them. They've been around a long time, as I mentioned. Again, I did the homework for you on which firms to be using. They have what they call 7-day evaluations. They don't want you to pass in any less than 7 days. Okay, I did it in 10, but you don't want to do it in 3 because that could mean that you're lucky. Okay, they don't want lucky traders. They want consistent traders. Okay, only 10 days for the first. In other words, when you pay out, a lot of companies have you trade for a month before they'll pay you out. I mean, if you do make a profit in the month, they'll pay it out, but they wait a month. They not only do they pay out after 10 days, but they'll also you can also request to pay out twice a month. Okay. I won't explain these except for this one right here. Once you, well, full ration micros means that, remember I told you they allow 10 accounts or 10 positions in a $50,000 account. You can have as many as 10 futures contract. And again, this is only the futures market. You have 10 futures contract. They'll allow, when they say full ration micros, they count 10 micros as one of those accounts. So I showed it to you before. That's why I didn't want to explain it, but I did anyway. One-time PA option. So when you're funded, this is a PA account is one that's funded. Okay. There is no there is a monthly fee of, it depends on the size of account. On the $50,000 account, I have to pay $80 a month. It helps with the data that they're giving you. Don't pay for data or any of that stuff, but you do have to pay them $80 a month. Or I had the choice of paying them $140 one time and never have to pay again. Okay, it sounds kind of crazy. I'm a pretty confident trader, so I gave them the 140 because I don't plan on blowing the account out maybe sometime down the road, but not in the first few months, right? So I gave, instead of paying $80 a month, they give you the chance to pay 140. Why do they do that? Because of what I told you before. Because still, the majority of people that pass it for the first time somehow lose that privilege and blow out the funded account, and they get to keep 140 instead of 80. So they're in it for the money, and they're in it to give you an opportunity. Okay, don't forget that. But it's got both sides. This is an opportunity if you are a disciplined trader and you have the right trading plan. Okay, here is probably the most important feature, and I call it tip 3: having a frequent, reliable trigger. Okay, the faster you qualify, the less fees you'll pay. Okay, so you want to be able to get trades off. Okay, so you want a frequent, I'm talking now about the frequent part of frequent and reliable. Hey, if you can do it, if the signal comes up to take a trade more of the time, then you'll get there quickly if you have a good trigger and it's a good trading plan. A good trading plan will likely have more winners than losers, so a high frequency of trade makes sense. Kind of a different way of saying that. And still, it's more important, even though frequency is important, it's more important to have a trading plan that wins over time rather than forcing frequency. So you need to have a reliable, a frequent trigger, but it also has to be reliable. Okay, you need to test it. Okay, you need to find your A+ trigger. And when I say A+ trigger, it's a trigger that performs somewhere over 2/3, 66.266%, or let's call it 70%. You need to have a trigger that's at least going to give you a profit on the scalp side of your trading plan 2/3 of the time. Okay. So you need to identify what your A+ trigger is. What is that? How do you do that? You got to go back and take a look at past charts and see which one of your triggers. I'm going to show you one today, and you need a frequent, reliable trigger. Okay, this is the real key to passing, and I've got several of them. I'm going to show you one today, but finding this A+ trigger is very, very key. One that gets you off to a good start. When you get off to a good start, it means you can take that scalp. Okay, you need to have the patience to wait for the A+ trigger. Many times an A+ trigger will, yes, it can be frequent. And again, you got to find an A+ trigger that's frequent, okay? But you have to have the patience to wait for it. You can't bail out and go for that A or A- or B+ trigger. Oh, this one's worked before. This was, I remember this, but no. You need a tested, reliable, frequent trigger. Sticking to the A+ setups means that you're going to have fewer trades, more profit, and less transactional costs. Okay. In the case of prop trading, you know there are transactional costs. They're going to be subtracted from your profit, but it's no more than you would normally pay. But still, they can add up. Okay. And but look, if you're dealing with a trigger that works and you're sensitive to taking the jump in a A+ trigger, where you're going to see the movement occur after the trigger frequently, 2/3 of the time, you're going to take a lot of scalps. Okay, and that's really where the key is. And when you start to and when you leave your other position on, if you take on 2 positions, you want one as a scalp, one as a day trade. And if the day trade goes, then you're going to have that one too. But you want to get the reliable, frequent trigger that you know will capture the scalp part of what you're doing. Okay. Now you always start with 2 contracts. Here's the 4th and final tip: always start with at least 2 contracts, treating one as a scalp and one as a swing trade. Now, if you there are a number, especially early in the day when the range is not big, sometimes you can take 3, 4, 5 contracts. If you're taking 3, consider 2 as a scalp and 1 as I call it a swing, but let's call it a day trade. If you have 5 contracts, 3 as a scalp and 2 as a swing. Now, I give you these examples because I want to emphasize the weight toward the scalping. And I'm not talking about a 1 or 2 tick scalp. I'm talking about a scalp that can give you, 4 or 5 nice points in the S&P and so on. I'm going to show you a couple of charts, and you'll see how it works. Okay, if you only trade 1 contract, you want it to be a scalp. Now, when I say scalp, again, I don't mean 2 or 3 increments. I mean 8 or 10 increments or more. Okay, that's different for every commodity and every futures contract, but I just want to give those to you. Okay, let's get to the frequent, reliable. I'm going to check that you're still here with me because I've got about 20 minutes of charts here that I want to show you. Let me just expand this. I'm looking here at any questions that may come up. I don't see any. Are you with me here? Shall we continue on? Just give me so that I know you're with me.
Hey, Norm, we actually do have some questions in here.
Oh, are you seeing questions? Let's see.
Yeah. There's if you're not familiar with GoToWebinar, it's in a questions tab, and I can read them to you if you'd like.
Yeah, go ahead. What questions do you have there? It's probably easier for me.
Okay, sure. Sean B wants to know, is this all simulation money?
What does he want to know?
Are you using simulation money?
Well, I'm not sure what you're saying, but except for the fact that while you're testing, you're doing sim trading, and when you pass, you're using real money.
Okay. MM wants to know, do they support swing trading?
Is that a platform?
No, in terms of a style of trading, is it primarily day trading, or can you hold for weeks and weeks if you're just swing trading?
No, they support all kinds of trading as long as you're out by the end of the day.
Okay.
They don't allow you to
know if you have to trade every day.
Yeah.
You do have to trade every day?
Yeah, I'm flat. You're flat at the end of every day. Now I'm working on something right now that, for instance, today you saw the crude go down. I had one of this particular trigger that I'm looking at right here. I saw it on the short side of the crude oil on the daily chart. So I knew that we'd have a favoritism toward the short trades. That influenced the trades that I took today. It was down over $2 in the crude oil. So sometimes I use the trigger on a longer term chart to influence what I do on the shorter term chart. But that's all I'll say about that.
Do you, so if you don't see a signal during a day, do you still have to trade?
No, you don't have to trade. I've taken a week off, and you know, when you have a frequent trigger, you'll have plenty of trades. But no, if you don't have a trigger, you don't have to trade.
Okay, cool. Brian wants to know what the trading hours are if they're dealing with futures markets.
I'm sorry, one more time.
What are the trading hours if they're dealing with futures markets?
With Apex, it's the market open at 5 Eastern time at 6 o'clock at night. You can start trading with either one of Apex or Top Step. Top Step makes you stop trading at 4 p.m. Eastern time. Apex allows you to trade till 5.
Okay. Let's see. Lots of questions, lots of answers to yes. People are with you. So
Okay.
Phoebe wants to know if there's a way to get in touch with you.
Yes. Would you put my Hallett at thedisciplinedtrader.com? Would you put that in the? I'm not able to put it in the chat, but I think people will be able to.
I'm typing it out right now.
Okay, Hallett, NHALLETT at thedisciplinedtrader.com. What you're looking at here, everybody. Thank you, Jeff. I appreciate it.
Here to help.
Never had a better assistant. What you're looking at here is what I call, this is the original loaded gun trigger. And I call it loaded gun. My wife hates the fact that I call it loaded gun, but to me it looked like a revolver pointing north. This is the trigger area where you put your finger, and here's the barrel of the gun, okay? And I'll only discuss a long trade, reverse this for a short trade. But what I'm looking at here is a 2-candle combination. The first candle is what I call the hesitation candle. Market didn't know what it was wanted to do here. It's a doji or a spinner. Some small body reflects the fact that traders, there's no direction here in this 5-minute period. And what I'm describing to you works on any time frame. Okay. I usually trade the 5. Sometimes I'll go to the 2. If I'm looking more at frequent triggers, I'll go to the 10 if I've got a lot of things to do. Sometimes I'll go to the 30. This way, because in most of the trading plans that I build, I need to see the next candle close. So I got time between candles to do other things. So here is indecision followed by a decisive candle. This candle is saying this could be the start of a move in the northerly direction. Now, if that goes through a specific moving average, and they vary, and I can't really go into what they are right now. Let's call it the 8 or the 9 exponential moving average. But if it goes through a specific moving average, okay, if it goes through a specific moving average, if it crosses and closes above there, this is a trigger to get in. So what I do is, I mentioned, I'll do it in the minimum 2 positions. So I see the hesitation trigger. Sometimes there's a series of hesitation triggers, which is even better. It helps me with my position sizing. And then as the market moves higher in this candle and closes with this significant move through the important moving average, I'm taking 2 positions here at the market. I wait for the close, and as soon as the next candle starts, I'm hitting my mouse, buying 2 at the market. The next thing that I do is I put my stop under the market. Okay. Now, of course, before that, I've measured what this risk is, and if there's there's certain conditions that you have to have. If it's beyond my condition, I don't take the trade. But assume that it is. For this example, I take 2 positions here. I buy 2 contracts at the market. I put my stop underneath. I usually just put a tick underneath whichever one is the lowest. I say usually I always do a tick underneath. Some of the guys who I work with do 5 ticks, 3 ticks. They're of the theory that they're just getting you and then coming back up. But I go 1 tick, okay? But whatever it is, you got to do it consistently. The next thing that I do, so I buy 2, I put the stop in, and then I measure this body. I measure the body, and then from the close, I'll extend that same measurement up here, and I will put a limit sell in for my scalp. This is how I measure the scalp. For those who are a little bit more aggressive, maybe you want to take 70 or 80% of the length of this body and put it in as the scalp take, the scalp limit sell. Okay. So what you're doing is you're seeing the market close here. It closes through the important moving average. You then put buy in the market, 2 positions. Put your stop down here. You measure the body, you extend it up here, you put your limit sell in here. As the market moves higher, in the case of this phantom example, and I take my scalp position, I move the stop on the remaining position to break even. Okay, it does a number of things. I don't have enough time to explain all of the things that it does, except for to say, if you think about what I told you about open trade equity, what you're doing here is you're capturing open trade equity on one half of what you're doing without any cost to a drawdown, because you're taking it on a limit. And the second thing that you're doing is you're limiting any drawdown on the second position. Okay, so this particular, this is one of the loaded gun triggers that we use, but you may have your own. I've got a couple that are almost as good as this one. Some people think it's just as good. I love this trigger. I wanted to give it to you. Let's take a look at what the trigger looks like in an S&P chart. This was from a few days ago. Yeah, not from, looks like last week. But you look at, here's the loaded gun trigger. Here's the moving average. Okay, let's call it the 8 exponential moving average, 8 candle. So here you have a series of small bodies followed by, well, here, look at here. Here we have a trigger here. I didn't even mark it. They happen all the time, it seems. You have, and the hesitation has to be on one side of the moving average, and the breakthrough has to be through the other side. So here you have, if you would have put your candle in it, you would have gotten the scalp right here and then broken it on the second position. Here's another signal. Buy here too. Put your scalp, put your stop in here. You would have had your scalp in right in here. You would have gotten in here. So another couple of scalps. Look at this position. I guess I'm sure I marked that off. Yeah, look, here's another one that may not. I like to see a little bit more difference between the hesitation. I can't go through everything about the simple trading plan loaded gun, but I wanted to give you a taste of what a reliable frequent trigger can do. Look at this trigger. Short risk. I mean, not only is it a reliable trigger here, but look what's happening. We're testing a couple of interim lows. It's not a tremendous test, but I'm going to consider this a double, a triple test here. You've got a couple. You've got a. I'm even going to call this a hanging man. Okay, it is a hanging man. Some people want to see it completely clear and the body clear. But look at this. You've got a lot of reasons to go long, and then you get a nice signal with the short. This is a maximum. I talk a lot to my people about position sizing. It's a lost art, and it's probably the most important, one of the most important, if not the most important aspect to controlling your risk. Okay, especially now with micros and mini contracts. But look at this. Look at this. You would have taken your scalp here, and then look at this. You know, but you don't want to be a complete scalper because you would have let this go. Look at this. But you need the scalp to pass this test. You need to be a bit of a scalper. Here's another one that's possible. It may be too much. Now, this is not a, right here, this is not a signal. Why? Because it didn't cross the moving average. This one did, and you got your scalp and a little bit more. Here's another scalp, right? Here's another beauty. Now, I'm not cherry picking here. Okay, I mean, here's a losing one. I want to show you they lose too. That's why you need to measure your risk. Okay, here's another one that got your scalp. Here's another one that won. Okay, so this is just I'm going to show you today's S&P or something. Here's the euro dollar. Again, I trade a lot of currencies because I really like. I passed the 25 fairly easily with currencies because nice bite-sized pieces on full contracts. You know, $125 a percent. Very nice, and look at some of these signals. But the same. Here's another. If in case you missed this one, you know, you didn't wake up at 6 in the morning, whatever this is. You got another one right here. Well, this is not quite a signal. This is a signal here, really. I show you right here what to do. This is not a signal because this particular doji is not on the other side. But I give you some rules about that in the system. But I mean, here's another one here. Here's actually another one that did not work out, right? I don't pay attention to the wicks, incidentally. Here's one that you would have gone short and lost. But then if you have the consistency and the BALLS to do this, you know, and this measures the risk. The fact that you just lost doesn't mean anything. Take the next trade, because look what happens. Beautiful scalp, you know, another beautiful trade here. Okay, here's a losing trade. Always watch your risk. Okay, here's a nice winner that took its time. There's another rules that we have about how long to stay in a trade before you exit. So we have a bunch of rules. Again, I was the guy that wrote the book on the trading plan, several books. That's the latest one. So I wanted to just kind of give you an idea of how it works. I also want to give you this, and then I want to give you this, and then I want to just spend 5 minutes on today's chart. I want you to have my white paper. Okay, thedisciplinedtrader.com/prop win. Okay, that's all you have to do. Go to thedisciplinedtrader.com/prop win and grab my book. I want you to have it. It's not a book. It's a white paper. I think it's 4 or 5 pages long, but it summarizes a lot of the things that were in my original experience. When I wrote this, I was just in the middle of passing the 50K, and I thought to myself, I got to write what I'm learning here, because you know, my wife says after 40 years you're still learning as a trader. You're still learning. Yeah, because the markets are dynamic. Sometimes trading plans that worked for me made tens and hundreds of thousands of years ago are not the same trading plans I use today. Not with all the flexibility that we have today. So please pick up my book, my white paper. It's free, thedisciplinedtrader.com/prop win. And here's that. I did put this in here because I wanted to make sure that that if you have a question, if you want to be there for my next presentation on loaded gun, the trading plan that I'm showing you, just write me and I'll send you an invitation. And Hallett, and this is not a $10,000, $5,000 or even a $3,000 program, the discipline trade or the loaded gun. It's something that I've priced for you that's affordable for. I want you to win, and if you can be disciplined, this is a doable thing. Okay, let me spend if you would Jeff could type the disciplinedtrader.com/prop win in the.
I already did.
Oh, you are the man. I'm gonna look at some charts here. Let me find some charts here. No, that's me, and it's probably something else. Oh, here it is. Let me just reduce this, and let me get out of this. You're seeing me. All right, let's. Interesting. Well, you can see me while I'm doing it. I can explode these charts. Let's take a look at the euro dollar. Okay. Now here's today's 5 minute. I was trading off these charts. Look at how simple my chart is. It's got a couple of moving averages. This white one, I believe this is the 8-bar exponential moving average I was using today. This is what I call a guardrail. I won't describe what it is, but it keeps us out of false breakouts for the trigger. And here I use the RSI. For my momentum. But look what's happening here. See if we see any. Here's the first signal I see, of which you would have had your scalp. Here's the second one here, which you would have had your scalp. This is a losing trade here. Here's one where you would have had your scalp, just gotten your scalp. Here is another. So there's not a whole lot. You know, this is not a beautiful. Again, you see the different charts that I have. Sorry that I'm not erasing myself here. Actually, I think I actually can. Let me get rid of my picture.
Neil has a good question. If you can hear me, Norm.
Okay, sure.
He wants to know what time periods you're looking at. Are you looking at a 5 minute?
I'm looking at the 5 minute here, yeah. But it works on anything. Let me show you the. Here's the crude oil that I was trading on. Remember, I told you I was looking at the crude oil chart at the day. Here's the day chart in the crude oil, and if you look here, you'll see that right here, this is a loaded gun signal on the south side, and this had me trading on the short side. I was only taking short signals, and it really worked out for me today. But look at it. Here's a daily chart. Here's an interesting. This is a modified version of the. Here's a signal right here, and it looks ominous, but it really worked out. Let's see if I see any here on that. I don't see many on the on this particular chart.
Neil wants to know what moving averages you're using.
Well, I use different ones, so I don't want to uncontrol you there. But like I said, this one was the 8. But the system uses different charts at different times and different methodologies. So. Again, it's simple, but it's not something that I can just splurt out and say use it. Here's the S&P today. And this is at 7 o'clock when I woke up today. Here's this right before. Here's another signal. Here's a beautiful signal right at the beginning of the day. Look at this. The yellow line or the goldenrod line is that. Look at that. And here's another. Here's a signal that came in that you could have gotten. See, this is not a signal because the this is not on a clear side of the golden line, but this is. So you got your scalp here. Here's another signal here. Okay, here's a losing signal if you took it here, but you probably wouldn't have, and I wouldn't, can't tell you why not. I can't explain it here because it's a rule. But here is a signal that you would have taken. Look at that. And you would have, it would have been a mess in the beginning, but really worked out for you. Here's a gigantic signal that you could have taken. We have what we call nuances in our system, where the market can back up and lower your risk as long as it doesn't back up past the moving average. But look at that, just some beautiful trades here. But look at the 2 minute. Here's the same S&P chart with the 2 minute. Here's a signal here. Okay, here's a signal here. Here's a signal here. This is a losing signal, although you would have been out in this area. I don't like to spend more than a couple of bars on the wrong side, so I would have been out here on this long trade. See this signal right here? Would have been out on this trade in here. But look at this signal right here. Look at this signal right here. And you're looking at testing a double bottom, and would have had, actually you would have gotten your scalp, and you would have gotten bounced out with this, where a lot of traders were crying. You took your scalp. Again, the importance of a scalp. Let me see if we have any time here. I guess we don't. So I wanted to just let everybody know that that I am here for you. If you want to contact me, make sure that you write me at nhallett Disciplined Trader. But certainly get on my list by making sure that you download my book on my white paper on Their Money, Your Profit. Look, I'll end with this. This is a doable thing. It's not for everybody, because if you're not willing to take your mental and emotional capabilities seriously, and you have them, you have capabilities. If you're not willing to take them seriously and admit where you need help and clean those things up, I can help you with that too. We do that along with the loaded gun. So I just want to make sure that you know that, yes, they will give you the money, and yes, you will make 90% of the profit, and it is real, but you have to be serious about it. Thank you, Jeff, for let me do my thing.
Thanks for the introduction to prop trading. Appreciate it. All right. Thank you very much, Norman.
Oh, you're welcome.
All right, let's go ahead and do that. Let's kind of switch over a little bit, make me the presenter. I show my screen. Sometimes you get like a huge image of yourself. I'm kind of switching between things. I do feel like Kelly will let me know if there's any issues coming up. Before we kind of get on to Jonathan, who I see is getting queued up and ready to go. Hi, John. I do want to say thank you to CMT Association for sponsoring all of the day's events and the week's events, and they're a great partner. CMTassociation.org for help with that and for help around that. We're of course MetaStock. Let's give away a prize. John, you are going to be you're going to help us give away a prize. Are you ready?
Yes, I am.
See you.
Absolutely.
Since you turned on your camera, we're gonna have you help. All right, so let's.
All right.
Oh, you know, this is going to be a fabulous prize. You're going to help me give away probably what could objectively be called the best prize of the day. I bet you're curious now. I am going to give away a 3-month subscription to MetaStock. And in addition to that, I'm going to give away a 3-month subscription to the Zenith data feed. Zenith is our professional data feed. It's like it's equivalent to like Bloomberg. In addition to that, I'm going to give away 3 months of learnmetastock.com, which will help you learn it. I'm also going to let you sit down with one of our support guys and do a training. So we're going to give away a pretty nice prize. I think it's the best prize of the day, John. I'm not biased at all. I just think it is the best prize of the day. What I need from you, though, John,
yes,
is I need a number, and that number can be anywhere between 1 and 12,000. Let me scroll to the bottom.
1 and 12,000 are my options.
1 and 12,523.
Wow. Any number between there.
Any of those.
I'm gonna go with 13. Keep it nice and simple.
Oh, okay. 13. Lucky number 13. And this
a lot of choices there.
The winner of that prize is VatC has a Gmail address. We try not to kind of dox people, so VatC is the person that's going to win that prize. Congratulations, Vats. You can thank. Oh, it's been a long day. In any case, we're also, if you want to get that extended trial for your very own, 800-882-3040, metastock.com/sales chat, metastock.com/conf promo. I want you guys to all recommend, or it's been a long day. I want you to all guys, John, I'm just going to give up here. Jonathan Rose is here for his first presentation to the MetaStock group. He's going to do a great job. I'm very excited to kind of see what he has to talk about. And before I butcher the English language anymore, let's go ahead and make you the presenter. All right, so it should ask you if you want to share your screen, and I'll let you know when we can see it.
Just give me a sec here. How are we doing?
I don't see the screen share. Oh, okay, there it is. There it is. And I see.
It seems like two screens. One sec.
Yeah, I'm seeing a couple screens.
Yeah,
now I'm seeing just one.
We're getting closer.
Oh, perfect. Don't touch anything.
Fantastic. Right. And is my head above there?
It is. Well, it depends on kind of like, because if people are watching GoToWebinar, they can put your head to the side or they can put it on the top, but I can see you. So.
Fantastic. All right.
All right. Cool. It's all you. I'm going to get out of the way. Take us home.
Thanks, buddy. Okay. 5-star trades. So, hello, everybody. My name is Jonathan Rose. And over the next 50 minutes, I'm going to share some of the biggest mistakes traders make and how you can easily avoid them. Most of these mistakes are simple things that people overlook, but that can cost you big time if you're not careful. So sit back, relax, and let me teach you how to trade options like a pro. Now, let me just start off by telling you a little bit more about myself and my experience in the industry. So all I've done throughout my entire career is trade. I started trading in '97. I was very fortunate. My first 5 years in the business, I made $1.5 million or more. I was in a very fortunate situation. After that, I joined a proprietary firm. I was the 6th employee. We grew that firm to over 200 employees before selling to a major hedge fund. And then I spent time as an options market maker before starting Masters in Trading back in 2015. And that's me, back at the Chicago Mercantile Exchange. I've seen what works in trading, and I've certainly seen what does not. What I will show you is the same trade approach I learned when I joined a prop trading firm back in 2003. That firm grew to over 100 traders. That firm became so profitable, eventually it was bought out by a multi-billion-dollar hedge fund. In fact, it was my responsibility to teach the top traders in the firm. And at one point, I had taught these strategies and position management tactics to over 100 traders who are working underneath me. And that's 100 professional traders I taught this exact same trade to. That's how powerful this approach to the market is. Since 2015, I've been teaching this style of trade through webinars just like this. And as I'm about to show you, this single method has already helped students quit their jobs. For others, it's helped them draw in extra income. For example, I'm going to show you one of my students who posted gains of $40,939 in a single month. Another student who recently, bought his dream house after pulling in $200K in 1 month. And yet another student who quit his high-paying job at Meta to trade full-time after he learned this trade. I'm going to show you a trader that shared that working with me has been nothing short of life-changing. And yet another, one thing for sure, I couldn't be happier to be part of your program and part of your trading style. To summarize, I want to show you a logical approach to trading that I really believe will help you. And I want to show you proof from real traders just like you having real results. Dan here, my account went from 44K to over 180K. Trading silver, trading options on silver. This is the potential benefit of learning to trade from a seasoned veteran professional trader. And maybe you could become my next testimonial. But before I get into it, I just want to check in, see if everybody is here, ready, excited, and paying attention. Jeff, I could see the questions, and you're also on YouTube too?
That's correct, sir. Yes.
Cool. Awesome. Just want to make sure I
if
can follow along.
If you're not logged into YouTube, if we have questions, I'll pass them along.
Sweet, 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 sweet. So who is this for? Nicole, great question. So I'm a huge believer. Stocks, options, futures, it's all the same stuff, right? When it comes down to it, if you're bullish on gold, there's thousands of ways that you can express your opinion to be bullish on gold. Maybe you buy a stock, maybe you do an ETF, maybe you do an options trade, maybe you do a futures trade, right? There's thousands of different trades that you can do. Stocks, options, futures, they're just a derivative of one another. What's a derivative? A type of financial contract whose value is dependent on an underlying asset. So does this work for S&P futures? Sure. It's valuing the equities, it's valuing different asset classes. So here's the question you may be asking yourself. It's a question I hear a lot. If this trading method you're about to show me is so great, then why not just keep it all for yourself? And it's a valid question. After all, if I've been making so much money as a career trader, why give away my secret sauce to the masses? What I'm about to teach you is not really a secret. It's something that prop firms, hedge funds, institutions, and professional traders have been using for a long time. And it's something a person like me would teach you the first thing when you joined a trading firm. The same methodology I've been using since I was on the floor of the Chicago Board Options Exchange. But the reason you probably haven't heard or used some of these strategies is because it's not aligned with the message of the internet awash with promises to help you get rich quickly. Traders need to cut through the noise and understand that risk mitigation starts with knowledge. At Masters in Trading, we believe anybody can become a successful trader with the right instruction and support. We set our traders up to protect their capital, minimize risk, and achieve profitability in any market condition. For years, I've been teaching the same topics in my Masters in Trading class. And while my students learn the basics and seem to understand them well enough, when money was on the line, everything they learned was forgotten. They had too many trades on. They didn't have a clear reason on why they should stay in the trade. After seeing this pattern repeated over and over, I realized that what these traders needed was a reliable set of go-to strategies that could be used in any situation. I wanted to create a new program so traders could start with a clean slate and focus on the basics. Just like I was taught in the very beginning, keep things very simple. That's when I came up with the idea for 5-star trades. My goal with this course is to teach traders how to identify reliable trading opportunities, and then provide traders with the tools to manage risk so they can maximize their profits without being exposed to too much danger. It's important for traders to remember that while making money is important, protecting your capital needs to come first. Slow and steady wins the race. Bradley says it best, the MIT trader does not focus on the profit potential. Instead, he is more concerned over risk management. I don't have a lot of time, so let me jump in 5-star trades. It's a comprehensive course that helps traders profit in any market condition. You'll learn how to locate winning trades in any asset class, and then how to turn those into free trades with the potential to win big. I'll show you lots of testimonials throughout, and I'll answer any questions you may have. Here's an example of how we trade and how we manage a trade. Matt, I love this trade. I actually closed this, whatever, open outright call position. So buying outright calls, buy 85 strike calls for 225. Roll into a $5 call spread. So if you buy for 225 and you sell for 225, you have zero risk. You're done with your risk. So what Matt did was he bought the 85 calls for 225. He waited as the market moved in his direction. He sold the 90s for the exact same price. His risk was down to zero. And now he could just worry about the upside of the trade. He ended up taking it off for an 80% profit. Rinse and repeat. So I've been working on 5-star trades for 8 years now, refining it as times change and markets fluctuate. But this course, it's a culmination of the last 8 years. And the results speak for themselves. Many of my students are experienced professionals who are using these strategies every day with great success. Matt, I hit my personal goal here of 50K. You really are changing the lives of those who immerse themselves in your content. And here Luis talks about buying his dream home in Cape Town. So here are the 3 secrets to 5-star trades. Secret 1, turn into a sniper. Traders should patiently wait around for the best trade setups and then pounce when ready. Don't move until you see your trade. The market, it's a ruthless beast. It lures you in with the promises of easy money, only to deliver crushing losses if you don't know what you're doing. So instead of fighting with the market, fighting with the beast, the first secret is wait around for clearly defined trade opportunities. That's the edge of a retail trader. You don't have to trade. Professionals, they have to trade. They have to find trades. You don't have to. Wait, patiently wait, like a sniper in the woods, waiting for the optimal target, the optimal trade. Once those trades present, get in. That's when you pull the trigger with confidence, knowing that proven methods have brought success over time. When you learn to put this approach into practice, the change could happen quick, and you'll learn to be on the lookout for a few highly reliable trades. So let's get into one of the 5-star trades. And the 5-star trades is a way of just saying these are reliable trades that we're going to use whenever they present. This is an example of just implied volatility between 2 different asset classes. July 14th, on this chart, going back to 2022, is when you see a big disconnect between those 2 lines, right? They're a purple and green line. They're homeboys hanging out together all the time, except once in a while, they break apart. When they break apart, it just so happens to be key times in the underlying markets. What this is, it's the relationship between the volatility of silver and copper. And what this is, it's a stock that's heavily influenced off the price of copper. July 14th, you can see, patiently wait around for something to happen. Wait for something cool, wait for something different. July 14th, you see that. October 24th, you see that disconnect again. Those are the kind of opportunities that we're going to wait for. Trading with discipline, trading with patience is indeed the first key rule. Just like a sniper in the woods, stalking his prey. Secret number 2 is you need to become an absolute trade management wizard. Okay, it baffles me how many people are trading without understanding the risks associated with their positions? Let's not trade and risk money until we understand all the risks associated. So especially with options, learn the 3 ways to manage an options position. There are 3 ways you can manage an options position. 1, get out. Just cover your options position, get out. Easy. Second, you could roll into a spread. Earlier, Matt, we showed you an example of how you can use trade management to roll yourself into a spread. It's a great trade management technique. The final thing that you can do is you can gamma scalp. Now, scalping gamma, this is where a lot of people are very unfamiliar. But scalping gamma is a really, really great way to manage your options position. Are you guys familiar with scalping gamma at all, or gamma scalping, however you say it? Option traders out there, or even that don't? A lot of people get very, very confused once you start saying, you know, delta people get, but once you start saying gamma, when you're trading options, learning how to scalp gamma is by far one of the most powerful edges that you could have. The reason why traders scalp gamma, I'm guessing we know this. Over time, your option loses premium, right? Over time, if you have 30 days to go until expiration, it's going to lose time until it goes to 0. That time is called theta. The opposite of theta is gamma. Traders scalp gamma to make back all that lost theta. It's a lot simpler than people make it. After we learn how to manage our options position, then we want to go for that free trade. Again, the free trade is whatever your risk is, worry about your risk first. Worry about making money second. Grab the free trade. Trade management technique, I strongly recommend before you get skeptical. It's not some marketing trick. It's actually an advanced trade management technique for managing risk and potentially maximizing gains. When the opportunity presents, it's a no-brainer to grab a free trade. That's why we call it the free trade, because it's done correctly. You could trade safely without having to worry about losing all your money in one bad move. Think of your worst case scenario, then protect it. Now you're okay to make good trading decisions. Lee here, done sitting on a free trade. Stacy, I got a free trade right now. Steven, locked in a free trade. CJ, calls are going nuts. The first thing that you do is you cover your risk. You never want to be up a ton of money in your trade, then you end up losing money in that same trade because you never locked in a free trade. You never covered the risk of your trade. The goal of the free trade is to make back theta. Theta is what that time that comes out of options. This information is a game changer for option traders because it positions them to make more money and minimize risk. A lot of traders are always looking for the holy grail, but what if it's right in front of them? Stacy, again, from my perspective, if you have a free trade, meaning you have zero capital at risk, you have 38 days. Some people are covering their options position. If you have no risk and you have 38 days, hold on to your optionality. It's free. Okay, these are all just little things that every option trader, every trader should really know. It's common sense once learned. 68 days left, I get a free trade. We want to learn back to make back your theta in your options position. Become a more efficient and profitable trader by learning to preserve that, it's called that optionality. Another free trade, triple D. Ooh, sorry for the bad language. Somebody getting advice. Hey, I bought 100 for 3 cents. What should I do? Well, first, lock in a free trade. Sell 33 of them for 9 cents. You cover all your risk. Now you have 66 from 3 cents with no risk. That's what I would do. Free trades, free trades, free trades. First thing, trade like a sniper. Patience. Wait around for reliable trade setups. You don't have to go searching. Respectfully, if you find a pattern on a chart, you can find that chart, that same pattern on one of 5,000 other charts. Trade like a sniper. Wait around for something that's really special that you're looking for. Secret two, don't trade unless you understand everything that you can do, whether you're trading futures, options, stock. Understand that you're losing theta over time and you can make back your gamma. You can trade gamma to make back that theta. Finally, I take a little sip of water. Finally, you really want a steady routine of trades. And what I mean by a steady routine of trades is earlier when we saw that disconnect between those two volatilities, that's one trade. That's a trade that you can just always wait around for. You don't have to do, but if those volatilities ever break down, great. That's one of your trades. One of our trades is called the crack spread. Is anybody familiar with the crack spread? I can't see the questions on YouTube, but is anybody on GoToWebinar familiar with the crack spread? So a little secret. For the last 12 months, I've been teaching my students about the crack spread, and they've been doing really well. What is the crack spread? The crack spread represents the refinery profit margins between the refined products and crude oil. So it's the difference between heating oil, gasoline, and crude oil. And what the crack spread shows is it shows the real-time profit margin of refiners. If you had a tool to watch the real-time profit margin of Apple, what would you pay for that? Or the real-time profit margin of any stock? Probably quite a bit. That's what the crack spread does. The crack spread is the consummate 5-star trade because when it presents, my opinion, it is extremely a high probability trade. Because when you're able to follow the profit margin of an individual sector, trading can become really fun. Imagine being able to follow the profit margin of any stock. So here's 6 different trades we did in just one refinery stock in 2022. The first one, Mike here, makes 200% on Phillips, is a refinery stock. So I'm going to do this example using PSX, which is a refinery stock. Here's a correlation tool. PSX is also very, very highly correlated to lots of other stocks. So we can use many other stocks in this same example. We're just going to use PSX. And then at the end of this, I'm going to ask Jeff to share this correlation tool with you guys as well. So hopefully that works out well. Keith, I took profits, January 24th. March 8th, I went big in PSX and silver and platinum. Tom here, I bought some PSX as well. That's going to be this move right here, March 8th. The start of a very, very big move. Again, we're doing this trade because the crack spread is leading the way. May, I put on some longer term 60 days trade. It's now a free position. Calls are up 400%. May 4th is right about here. 6/17, June 17th is going to be right up here. Once the crack spread turns, PSX will get slaughtered. And what I meant by slaughtered is this. 9/27, September 27th is right here. Trade idea, consider buying the 80. Again, it's a vertical spread for those who aren't familiar with these trades. Buying 85s, selling 92s, but nevertheless, this was an absolute home run of a trade, all because the crack spread allows you to follow the profit margin of the entire sector. 10-6, 10-6. 10-6. This should say taking profits way too early on PSX, but it says taking profits. I didn't think that the darn thing was going to run 20 more points. And now the next slide will come 11-2. Again, for anybody still in PSX, strongly consider getting out, locking in profits. The crack spread is rolling over. So this is an example of one refinery stock, a major one, but the crack spread allows you to trade oil. It allows you to cover the entire energy sector, and it's really freaking powerful. Patiently wait for 5-star trade setups. The majority of people, over 95% of the people that I end up working with, jump at the trades way too quickly. Slow down, trade less, consider holding things longer. Think like a sniper, patiently stalking for the best trade setup and swiftly executing when the time comes. Falling back on discipline is key. Let go of distractions and then understand all your risks associated with them. And then trust yourself. And get ready for potentially some big wins down the line when those profitable opportunities appear. So let me tell you how 5-star trades works. Here's what clients are saying. Harry, top flight content, JR. Ed here, this is awesome. Great class, I give you my 5 stars. So the 5-star trade program, by the end, you'll have mastered 5 dependable trade setups like the crack spread. A near perfect performer in 2022. These are trades that you could use forever. You'll also learn how to manage your options position for maximum profits. You'll learn how to utilize free tools from the Chicago Mercantile Exchange that helps quickly see statistical measures like scary words like convexity and skew. So here's how it works. Just finished this program in January 2023. It's broken up into 4 modules. So the first module, it goes over skew, convexity, variance, all statistical measures that'll really help your trading, teach you how to risk small, go for big games, and then how to use this CVOL, which is from the Chicago Mercantile Exchange, to find trades. Skew is an information source that'll help you make decisions with more confidence. Sometimes like having a crystal ball that can see into the future. And by using it, you can be one step ahead of everyone, because if you're not using it now, you will. You're going to need to. Here's examples of using skew and using volatility. What we're waiting for is things to get wacky, things to get different, to get extended. When you do that, then you want to jump in and get in trades. Too many people are trading in the muck. You're investing money in a trade that you don't necessarily really care about. Here's some more examples of copper volatility. Waiting for the outliers, patiently waiting. So module 1, how to anticipate volatility bounces. Knowing how to use skew gives you specialized knowledge at your fingertips so you won't miss out on opportunities or be blindsided by the unexpected. Trade less often. This will give you more control over each position and help make sure losses are kept to a minimum. The next module in 5-star trades is going to be manage your options for maximum profits. This is where we're really going to get into trade management, scalping gamma, gamma opposite of theta, and then go through a bunch of examples about how to manage a free trade, how to grab a free trade, and then how to manage your trade. The benefits, you'll learn how to manage your options position for maximum profits, learn to scalp gamma to recover lost profits from that theta decay, gain peace of mind and confidence in your abilities, and avoid costly mistakes. You'll also improve your odds of success by before risking any money. Enter a free trade to reduce risk, focuses on upside potential, and then maintain your position, that optionality, without additional risk, worry, or concern. The third module is going to be all about the crack spread. It's going to be all about different crack spreads that you can follow, the formula that you'll need to follow for the crack spreads, and then different refineries that we trade based on the crack spread. Easily one of our best performing trades of 2022. Every time the crack spread moves, it's the profit margin of the refiners. The profit margins just seem to follow. And the crack spread is a must-have trade for anyone looking for long-term, just 5-star trade success. Here's more just love about the crack spread. Crack spread making a pretty vicious move, and doesn't take too long for a refinery stock to follow. The fourth module is going to be something that we call Hedge Fund Secrets. Hedge Fund Secrets is a program, a separate program that we're going to combine into 5-star trades. Alone, this program sold for $497. This program teaches you how to buy closed-end funds trading at a massive discount. It's a really unique trade and a phenomenal trade for retail investors, because closed-end funds are too small for institutions to really play around. So there's significant edge and right now yield for closed-end funds. So module 4 is a phenomenal trade that I'm excited to share with you guys, because it is definitely a 5-star trade when you can buy these things at a significant discount. Here's a little bit more information. So I built a highly successful boutique hedge fund using one simple technique. It's called closed-end fund arbitrage. I did that in 2015, 2016. According to Forbes, 2/3 of investors have no idea what closed-end funds are. Nonetheless, how to use the arbitrage trade I teach in this course. So that means if you know about it, you have a giant edge. So if you ever want to invest like a huge hedge fund and perhaps outperform the market, you're going to love this system. With this valuable knowledge, you'll be able to confidently enter into any market environment and profit from your trading strategies. So the entire offer, how the entire program works, is it's 3 hours of pre-recorded. It's all broken up into these different modules. Module 1, how to anticipate volatility bounces. Module 2, how to manage your options position, the 3 ways to manage your options position. Module 3 is all about the crack spread. You'll love it, the different kinds of crack spread and how to follow the entire energy sector using the crack spread. And then finally, the final module is going to be Hedge Fund Secrets, which is all about one of the last known arbitrages left in the market. You can join today. It's not going to be anywhere close to those big numbers here. For just one payment of $197, you can go to mastersinTrading.com/MetaStock, and you can join right now. I can show you. The module broken out Hedge Fund Secrets alone had a value of $9.97 and was selling on the website for $4.97. And this was all just redone or newly created for 2023. God says, you're a genius. I'm not a genius. I've just been doing this for a long time. Mike says about the 5-star trades course while discussing the sections on skew and convexity, this gives you confidence for those large trades where you set it and stay out of its way. And then Craig here, I wish I would have found you years ago. I don't worry about trades anymore. I just follow the process. The FOMO is pretty much gone. So there you have it. We are all about education and putting you in the best position to succeed. These videos you can download, you can do whatever you want with them. They are yours to learn. And there's lots of examples and exercises that you can go through in the material. So I'm gonna stop and open it up for questions. And I'm also have the correlation tool that I wanna share, Jeff, with you. And then I'm also gonna go over an example about just trade management once we get through any questions you have. So let's do that.
First question is from BB. She wants to know, how long is the membership for 197 good for?
So for this is just a straight course. So it's a course that you have access. It's yours. You can download it. So you're going to go to the website. You'll get a login, and that's where the course will present. But you can download the information. It's not a membership. It's a one-time payment, and it's yours.
Is there an expiration on the price? Does the pricing? How long is the pricing good for?
This is going to be released on the website for $397. Since this was my first time with MetaStock, I wanted to release it with you guys. I didn't really think about that. Probably through Sunday.
That sounds like a reasonable answer. Let's see. Once they pay the 197, BB wants to know if she'll have lifetime. I'm not sure. BB wants to know if they will have lifetime access after the 197.
You will. This is yours. So this is just straight course education. And so I thought, especially because I haven't been on this platform, that a great way to introduce myself is going through kind of what's worked. And the biggest takeaway, well, I hope the biggest takeaway is going to be the position management sections that aren't necessarily, the sexy stuff that people want, but really getting comfortable with understanding that you can manage your options position with stock. It's a completely different way of looking at the market and a huge breakthrough for a lot of people. And especially for those who aren't trading options just yet, you will, right? The further you go into your trading journey, you're going to end up trading options. And I think it's important to know, earlier we talked about that options aren't any different from stock. It's kind of like the same thing. It is. It's the same. It is. It's the same thing. And I'm just going to go over an example that I want to pull up right here. BB, are you trading options now? David, thanks, buddy. I appreciate that.
That's a really good feedback.
Oh, thanks, buddy. Yeah. So yes. Learning this, Jonathan. So how this works, guys, is coming on the first time, I wanted to just offer just straight education and get you familiar with our different ways of doing things. We have a community that if you go to mastersthandtrading.com, and this is where we share trades every week. So you guys can go there and learn about that as well. We're doing a $47 trial on that. So, but this is going to come back, and this will really help you. And we want folks to take the education before going through the membership, because there's a lot of just basics that you end up risking money without understanding how to manage an options position. Gets very expensive very quickly, right?
YouTube, we have the question, a question from Kurt. Kurt wants to know if the lessons are videos, or if they're written down, or is it a combination of the two?
Great question. There is a combination of the two. It's a combination of the two, and we're also going to do a live class next Wednesday. I didn't write that in, but we're going to do a live class next Wednesday. So everybody who moves forward in that live class, it's going to be with me. We're going to go through each of the modules, make sure that you're comfortable. This is the kind of material that you will go over. It's structured so you go over it a bunch of times. I would expect that, but learning how to manage your options position is something that will help you forever. Hey, Brian, good question. How large of an account do you need? Trading is trading. You can buy an option out of the money option for 30 cents, for 50 cents, right? That's $50 of risk. So in my mind, to trade futures, you probably need a minimum of 3,000 or 5,000. To trade options, you can trade with a small account. It's more difficult, right? But in these 5-star trades, or if let's use the crack spread, for example. Let's say the refinery's profit margin is rallying a ton, like just every day it's going higher and higher and higher. So naturally, we know all the refinery stocks are going to rally. All the profit margins are rallying. If you own a business and your profit margins are rallying, do you think your company's going to be worth more? Probably, right? That's the cool thing about the crack spread. You can literally follow it, and using a correlation tool, everything that we trade or that I trade, it's all relative value. It's all silver versus gold. In everything that we do in life, when you bought your last car, or when you leased your last car, you shopped compared to other vehicles in the same price point or whatever. It's all relative value, comparing one thing against another. So what I teach is how to compare different asset classes against other comparable asset classes, because we might discover that oil is inexpensive and we're really bullish oil. We really think oil is going higher. Well, how do you express that opinion? How do you express that opinion in the most efficient way for your account? Because not every trade is for every trader. And that's also the benefit and the luxury to being open to trading stocks, options, futures. The crack spread is made up of heating oil, gasoline, WTI, crude oil. You could also trade all of those now using ETFs that have excellent tradable options. So you can follow the futures to give you really good edge or color in ETFs, stocks, and options. For those of you who are really talented technicians, if that's something you consider yourself, this doesn't affect anything. This just gives you more edge, because once you see things line up, maybe the refinery margins rallying, you can go and look for a bunch of refiners that you think have a bullish, structure to them. I don't use technical analysis. I want to use things that are real. I don't speculate. I don't guess. I want to use the information that the market gives us. That's why learning about skew. When you learn about skew, you see, why are calls more expensive than puts? Why are puts more expensive than calls? The market is skewed to the downside. Why is the market skewed to the downside? Why are puts more expensive than calls? Well, the two most popular trades in the entire market for option traders is a covered call where you buy stock and you sell upside calls, right? So you're selling calls, the street's selling calls. And you buy puts to protect yourself. So the street buys puts, sell calls. That puts an artificial, it's not artificial, it's very real. That puts a downside skew in the market. And you can see that, but you have to learn how to interpret that. And if you're risking your hard-earned money, in my opinion, those are things that you need to learn. And we could teach you these lessons through 5-star trades. It's mastersinTrading.com/MetaStock. If you're not happy, you have let's do a 30-day return. So 30-day, no questions asked return. We'd love you to try it out. Thank you very much, Jeff, for having me and inviting me, and open it up for any other questions. And
sure,
then,
we have another one in YouTube for you.
Oh, nice.
Kurt wants to know, for the live class, do you have a time and what time zone?
Excellent question. 1 p.m. Eastern this Wednesday. What's the date of this Wednesday?
Oh, geez. It'll be the 21st. We'll be in March by then.
March 1st.
Yeah.
We're going to celebrate Hump Day together, March 1st, 1 p.m.
I can't believe we're already in March, too.
We're almost March. Well, February's little. February's a little guy.
Okay. Let's see. We had another question that was like, how long is the educational process from BB?
So here's 5-star trades. Here's exactly what it looks like. Module 1, it's broken up into 53 minutes. I broke it up into digestible videos because I like digestible videos. I don't like straight 53-minute videos. Then we go into collecting free trades. These are the different topics. Energy trades, closed-end fund arbitrage. And then we did one class already, and this is going to be our second live class. And right now, this isn't on the website, but after Sunday, it will go on the website for $397. So we want to offer a special for MetaStock, mastersinTrading.com/MetaStock to join for $197.
Ron has a really good question in GoToWebinar. I've never traded an option before. Is learning to trade options part of the training?
So, excellent question. Excellent question. I'm a big believer. There's so much free information on the internet. So I don't teach what is a call and what is a put. I just don't. You can Google that. And so learning the foundation, whether it's through reading a book and just getting comfortable. I'm also there on mastersinTrading.com/blog. There's a lot of really good write-ups about paper trading and the importance of paper trading for me, for you, for anybody trying a new system, trying to trade different markets. So prove to yourself that you can make this work, that you can find trades and be confident with trades and want to stay in those trades once you're in them. You don't get in them and think like, oh, why the heck am I still in this trade? If you feel like that, get out. Okay, it's probably doing a little bit more work before getting into each trade, but it's a competitive world out there, and all these little things give you a little bit more edge. And so, yeah, Ron, so basically I would Google how to buy a call, how to buy a put. I would learn that. And then this is going to be how to apply that information in the market.
We have a lot of questions about the correlation tool and whether or not I'm willing to give it out. So maybe you could talk a little bit more about that.
Yes. Sorry, that was more of an impromptu thing.
I think we talked a little bit about doing some coding in MetaStock, and I think that's kind of what you're referring to, maybe.
No, this is just a basic. Anybody can go and just use correlation.mesh. So you can just sign up. It's just a free tool that we use.
Oh, okay. So you just go to mastersinTrading.com/correlation. Let me get that typed into YouTube.
Yeah. And then this is what it looks like. Simple, super straightforward. So FCX, it'll just give you right away, and running out of time, but it's a really great exercise to find 3 of them or 5 of them and look at their relationship going back different time frames. You know, I'm very bullish POS right now, but also look at POS and then use them. And for correlations, I want to see above 0.75, 0.77, something like that. But it's super simple to use, super quick. But yeah, Jeff, it's just very basic and to the point.
Okay, cool. I'm happy to give that to people I already have. I was like, oh, what is this he's talking about? Kurt wants to know if the live classes are recorded and available later.
Everything is recorded. You can download. You know, information's a commodity. I want you to learn. I want you to go through the material. I think education mitigates risk. BB, which broker? I don't use complicated option strategies. Personally, I think that complicated option strategies are marketing. I look to buy calls and buy puts. When volatility is cheap, I want to buy, and when it's expensive, I want to sell. I don't do 6 option contracts in one trade. I don't. That doesn't make sense to me. So any platform for options you can use.
All right, let's see. I think we've caught all the questions. Okay, Benjamin asked, does this apply to feeder stock plastic manufacturer?
I'm not sure. I'm not very familiar with it.
Yeah, I wasn't either. Okay. All right.
At first, I thought it was feeder like an ags question, but I wouldn't have known that one either.
Okay. Well, good. I had no idea. When you said the crack spread trade, I thought you were going to talk about a drug deal of some sort. I've never heard of that term before.
It's crazy. It's awesome. Isn't that weird though? Imagine being able to follow the profit margin of Apple. How much fun would that be?
Sounds cool. Yeah. Ron says thank you, Jonathan. So I want to say thank you too. Great job. I hope you enjoyed your first presentation at MetaStock. Won't be your last. I'll have you back. All right. Good.
Thank you so much.
Thanks again,
guys.
John. Good to see. Great job.
Bye-bye. Thank you.
Cool. Let's go ahead and do this, and we'll hit this. I'll go ahead and show my screen, and we'll do this, and let's see. There's a little bit of a slideshow. As you guys have probably know if you've been here for a minute, we had a bit of, this might remind you of the studio that I was using during the epidemic that we just had. We had about 12 inches of snow last night, and so nobody could get to work this morning. So we're working from home. There's a couple things I want to talk about just before we kind of wrap up. One, we are going on our very first, talking about our first road trip after the pandemic. So if you're interested in going to see us on the road, we have a few cities. We're very curious to see how it goes. We're going to be at Baldwin Park. We're going to be in Costa Mesa, Milpitas, Phoenix. I'm going to be in both Chicago and Dearborn. And we'll also have trips in Manhattan, Arlington, Toronto, and Montreal. So it's not a huge trip. We do have about a dozen or so dates right there. If you're in any of those areas and you want to find out about, and you can come join us, we would love to have you there. Let me just take this. Oops. let me go ahead and take this. Let me go ahead and put it in the chat room. And I'm going to let Kelly worry about getting that URL into the thing as well. Let's go ahead and talk a little bit about tomorrow as well while we're here. We have another, I'm so happy with how well this event has been going. I hope, Nicole's like, wow, this is my first taste in this fight. BB says, great conference. Thank you. I missed the AI and a few, and I'll catch them up on YouTube. And we do. I mean, one of the things is like not a lot of people considering to watch 40 hours straight of presentations. And so we do record them, we make them available. I'd encourage you to go to watch the ones that you can't. And you know, there's other, I think it's cool that it's all available for free. BB, I'm glad you're enjoying the conference, for sure. Tomorrow, we're gonna have another great lineup. We've got Zahir, we've got John Osborne, we've got John Seville with the Acorn Wealth Corporation. John Thomas, the mad hedge fund trader, is going to be in there. We got Bubba Horowitz, Daniel Sinig of TradingIndicators.com. Tyler Wood is going to talk to you about how good it is to be a CMP and technical analysis. I really enjoy his presentations. He does a really good job. And then we'll finish up tomorrow with Mark Leibovitz. I hope you can make it tomorrow too, as well. I did have, and excuse me, my I did have more slides somewhere over here. Let me go ahead and just kind of pick up here. And there is a few things that I wanted to talk about. We did end up missing a speaker today, and I wanted to take advantage of that. Unfortunately, Jeff Killian was very, very sick. He couldn't make it, and we will definitely have him at another event. But I wanted to, one of the things that we don't ever talk about, and I'm going to spend 10 to 20 minutes. I know it's been a long day. I don't want to keep you forever. But one of the things that we don't talk about much is Zenith and the Zenith product and the stuff that's really available in there. So I wanted to just spend a few minutes highlighting Zenith with the extra time that we have, just to show you kind of some things in it that I really, really like. One of the things I think is a great shame is a lot of our, even our real-time customers have access to Zenith and they don't use it. And I just want to show you around in the product. It is one of the best news services around it. So here's a little bit of a by the numbers for Zenith. It's powered by Refinitiv. It's got globally listed available companies, 70,000 of them. In terms of research, there's like 40 million items of research that's available. And they have more than 2,600 full-time journalists in 200 different news bureaus. Literally, when you subscribe to Zenith, you're getting access to a Bloomberg quality feed. They spent $1 billion getting it ready. They cover agriculture, commodities, emerging market, equities, metals, energy. So we're certainly not going to spend a whole bunch of time doing a demo. I've literally spent weeks showing people around Zenith and trainings that I've done internationally where I've kind of gone in. And this isn't going to be one of those lessons, but what I want to do is just kind of show you a few things and kind of get you acquainted with the program because it's truly fantastic. So let me go ahead and click on the home page here. And when you initially install Zenith, what it's going to do is it's going to ask you where you're from and what you're interested in. When I installed, I said I'm from the US. I'm interested in US markets and mostly stocks and options. And so this is kind of a home page of what you're going to get. And again, I'm not going to kind of drill too much into too many things. I just want to show you all, kind of just give you a teaser for what's available. This is the front page. This is the very first page. And so you're going to notice that I have since I said I was interested in US equity links, it's going to give me equity quick links. And here I can click on time and sales. I can go to a company overview, which will tell me almost anything about a company overview. I wasn't going to drill into it, but now I am actually. If I click on this company overview page, I can literally go in here it's going to open up to Reuters. That's fine. We can show you with Reuters. It's going to give you an overview of the company. You can see valuations, fundamentals. You can see who's trading it. You can go in and see detailed news on it. You can get prices. You can get estimates. You can go look at financials. You can look at officers. You can see things in detail. There's just tons and tons of stuff. You can really find out about a company. I like these star mine models. You can see if the price momentum is bullish. This is a really good one. You get analyst revisions. You can see what the recommendations are right now, whether right now you've got 7 holds, 6 buys, 2 strong buys, and 2 sells. All that stuff's just available just on the overview page. And of course, you can go to any overview page that you want. And you can see that kind of information, that kind of detailed stuff about any type of company. So that's one thing. Let me go back to the home page. Okay, it's hiding. And that's why I kind of had this minimized. Oh, I closed it out. No problem. Let's open it up again. Home. We'll go ahead. I needed to go back, but I closed the page. It's not a big deal. So that was just the company overview. You've got a nice economic monitor. I'm not going to drill into that. I'll just talk about it real quickly. Economic monitor, obviously, you know, if the Fed's going to raise rates, it's going to affect the market. If there's earnings coming out, or if there's non-farm payrolls or stuff like that, that's going to move the market. You can click in economic monitor. You can see what events are coming. You can organize them by country. For example, I do US. I do show me all the stuff that's very has a major market impact, and it's going to list that out for you. It's really cool. They have some really good options tools for pricing options. You've got index and movers and sectors analysis. Oh, that's very cool. Okay. One of the things I am going to drill into, and you notice we've got these categories here. Here you've got the front page. I've got US companies, I've got technology. You can change these. I have Europe and Russia loaded, and you've got breaking views. And if I want to focus on something else, you just click on the gear here, and it's going to, you can set it to whatever you want. But in these, it's going to give you kind of what Reuters considers the top news of the day. So Biden and Putin display their alliances with Ukraine war background. You're going to click on front page. All of these news stories are going to basically be things that you can drill into. So I'm going to go ahead and click on the front page. There's one report on here that I want you to show, but this is what Reuters would consider the front page of the newspaper. So it's got all the most important stories available. You'll notice there's newscasts that you can watch up here. I could get lost in this, and I really don't want to because I know it's been a long day for you. But one of the things I did want to show you, here you've got the latest news, here you've got all the more important stories. And again, you can click into anything. It's going to give you the full story. These analysis and insights are really good. Here's something about Bed Bath & Beyond's novel deal to dodge bankruptcy. I'm kind of interested. I'm probably going to come back and read that. You've got some special reports. One of the things I would recommend you kind of drill into is some of their newsletters. So here's the day ahead. There's all kinds of newsletters that are available, dozens and dozens of them if you're interested in like oil, if you're something overseas. There's tons of newsletters that are actually available. But this is just kind of giving an idea for the day ahead. This was posted for tomorrow. So just posted as the brand new one. And it was posted 6 minutes ago. Actually, it's 4 p.m. It was posted 2 hours ago. It's 4 p.m. here. We're in Utah. But it can tell you things that are coming up. It's going to tell you key economic events to watch out for. It's going to tell you Moderna is doing something, Domino's Pizza, any important news that it sees for the day. Here's a bit of a market manager. Obviously, we're not going to read this, but this is a very good report. You can actually get this emailed to you. If you just go into the newsletters and have it emailed to you, it's something that can be delivered to you by email. It's very cool. So the other thing I kind of wanted to show you is just, I mean, obviously, like it's important to know what's going on and that kind of stuff. The other thing that you can set up is you can set up workspaces that actually kind of track the news. And I'll just kind of give you an idea of what that looks like. So right here in equities, I've got, this is actually a built-in template. If you go to the templates, you can load it up. But here it's going to have a list of the S&P 500 that's been pre-built, the Dow Industrials, and you'll notice we've got all of the quotes, and we can kind of see what they're happening. Now right here, I've got like all of the news. Right here, they added this recently, but it just kind of gives you a bullish, bearish type of a sentiment. That's this pie monitor right here. And again, you can drill into these. I really don't have time to do Zenith justice. There's so much in here that you can look at, whether it's heat maps of how the economy is doing by country, with a global map of the world, to news, to information. It literally is the same quality of data that you're going to get as if you were a hedge fund or a mutual fund. It is Reuters data. It's a literal. It's Reuters News and Refinitive's data. It's a literal competitor to Bloomberg, and there you go. Then with it, we do have some stipulations in terms of how we can market it. We only sell it to non-professional traders, and it's very, very affordable for what it is. So just to kind of talk a little bit about pricing, if you want to do an FX only package of the news and the fundamentals, it'll cost you about $110 per month. That'll include your real-time FX data. That still gives you global delayed data for all the other stock markets and all the news, the analysis, the reports. In addition, if you want to do a regional package, you can do the regional package. It'll cost you $165 a month. Our regions in a Refinitiv space are Americas, which is North and South America. Europe, Middle East, and Africa is another region, in Asia Pacific. All of those would include real-time FX and the ability to pay exchange fees, like New York Stock Exchange charges a fee if you want real-time data from them. Pay exchange fees to go real-time. So the big difference between this package and this package is kind of what you're paying. So if you're interested in news and fundamentals, and this is a really good place to get it. And you can do that with MetaStock. MetaStock would be $100 more. We've talked a lot about MetaStock. But if you just want to do Zenith to play around with the news, if you're a fundamentals guy, you want to look at kind of the broader picture, you can actually just do the Zenith as well. So we'll do that on an extended trial. If you pay for a month of Zenith, we'll give a second and third month for free. You can do that at metastock.com/conf promo. You can give us a call at 800-882-3040. And you can also visit us online at metastock.com/sales-chat. So it's really, really good. Susan, it's good to see you. Thanks for coming in. Let's see. Let's go ahead and kind of let's say a few things. CMT, thank you for sponsoring the event today. We appreciate it. CMT, if you, Tyler's gonna come in tomorrow. I just went through the schedule. He's gonna talk about the CMT Association. If you are looking to work in the financial industry, or if you do work in the financial industry, he's going to talk about how helpful a CMT designation can be for your career. It's also a cool designation to have after your name. So if you're interested in finding out more about that, go to cmtassociation.org. And of course, we want to say thank you to Stocks and Commodities. Well, anyway, we'll just go from here. Stocks and Commodities magazine has been supporting our conferences since we started them. I remember the time we did the first one, and it was like, I called up Stocks and Commodities and said, we're going to do this huge event. It's going to be amazing, and we're doing them again 11 years later, and they've gotten bigger and better. And I'm actually really happy with today. But thank you, Stocks and Commodities, for the sponsorships of the events. We really appreciate them and their work. If you do an extended trial of MetaStock, which has been rated #1 30 years in a row, they're going to give you 5 months of the Stocks and Commodities magazine for free. So again, we've been talking about MetaStock all day. There's a reason it's been rated #1 30 years in a row. I'd encourage you to do our extended trial, either the DC, which is our daily charts version, or the real-time version. The pricing starts at $59 a month. And if you buy a month, we'll give you that second and third month for free. So it's a really, really good opportunity to try it out. In addition to that, just remember you have unlimited access to our support. You're going to have access to Unleash Power MetaStock, which is a training video. We're even going to have you work one-on-one with one of our support members doing what we call a white glove installation. They'll ask you your questions. They do such a good job of kind of helping you make sure, because MetaStock's a huge tool. We've been working on it since the 80s. They do a really good job of making sure you understand how to use that tool and have the best foot forward. Because the better you understand how to use a tool, the better it's going to work for you, right? Anyway, take advantage of it. There's a reason it's been rated 30 years in a row. 800-882-3040. MetaStock.com/conf promo, MetaStock.com/sales channel. I want to say thank you before I point to you, I want to say thank you though to all of the great guests that we've had today and yesterday and the day before that and tomorrow and the next day. So I'm really happy with the way the conference is coming together. I'm very, very, I appreciate all of the support that we've had with this event. The speakers have really done a great job and spent some really good time with us and gave us some really good info. So I want to say thank you to that. Thank you all for coming. It's been good to see you. I hope you've learned a little bit or a lot, one of those two, or at least something, right? It's good to see. I hope you can make it again tomorrow and Friday for some other good sessions. But most of all, I hope you're enjoying the event. If you're in the future watching the YouTube recordings, make sure to lay a like and a subscribe. It does help out a great deal. I'll see you tomorrow. Thanks for coming, everybody.